खड़े हैं,
just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell. Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day. And in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
At NDTV Profits, every
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open with me, Neeraj Shah, and my colleagues Alex Matthew and Hiral Daria. And it promises to be an interesting day of trade simply because of the pattern that we're seeing, that at higher prices or at stability, there is paper on offer. And today is some serious paper on offer. While the globe is steady and Dow is at record highs, etc., so the global cues being okay.
Yeah.
LIC with nearly $3.2 billion of paper on offer. And then there is Meesho as well as Paytm, both of which circa 200 million, give or take a few. So that's seriously large amount of supply that is out today. Let's see how much of it gets absorbed very, very easily.
Yeah, no, definitely very interesting. And LIC in particular, right? Because you've been waiting for some time for the government to offer a little bit. They have that relaxation. They can offer the paper whenever they want.
Yeah.
So that overhang technically is not there. But it's interesting that this it's coming at this moment.
It's not happening at a bad time, at a weak time for the market, which is actually a positive.
And this was ought to happen just ahead of the NSE IPO as well, right? So something that the markets knew will happen sometime or the other, but the pricing will be important. 382 per share. So that's what we need to watch out for.
Yeah, all right. Let's jump straight into what's happening around the globe, and then we'll get into what happened at close yesterday, because some of you might have been scratching your heads thinking, hey, what happened? That last minute 200-point up move in the Nifty 50. Why did that take place? What happened to those individual stocks? Yesterday, of course, was a new settlement that took place, and we'll talk about that in some detail. Let's talk about the global though. Claims and counterclaims on peace talks persist, so nothing new per se. Trump claiming on Monday that talks were underway with Iran, and he warned that it was a last chance for Tehran to sign a deal. He was speaking to reporters in the Oval Office when he said that. On the other end, you had Iran that denied any negotiations were being held or even planned. You had Iran Foreign Ministry spokesperson Ismail Baghai, who said that no negotiations were taking place. All Iranian negotiators were currently in the country apart from Araghchi, the foreign minister, and he is on a religious pilgrimage in Iraq and won't be available for any talks till the end of the week. Trump later claimed that Iran leadership was being duplicitous. He also called for either a deal or total surrender, and quite strongly worded post on Truth Social where he said that they were begging for a deal and then now are being duplicitous and saying that essentially they don't want to talk. So that is on the geopolitical front. What happened on oil prices is that they continue to remain largely under control, hovering around that $84 per barrel mark after that big slide at the start of the week. You have Wall Street that gained smartly across the board. There you go, 84.5 or thereabouts on the Brent. But Wall Street gaining across the board. Neeraj already pointed out to you the Dow ending at record highs, over 1% gains for all of those. 8 sectors on the S&P 500 rose while 3 fell. The US bond yields have also fallen further on crude slide. So that's certainly something that is positive, relatively speaking, for the US markets. Asia Pacific equities have started mixed, understandably so, with most markets trading in the red. In fact, it's kind of worse, and the only market that was trading in the green was, if I remember correctly, the Australian index. When I checked it last, the Nikkei 225 down about 0.5%, Shanghai also opening in the red. By the way, a significant talking point over the last 24 hours has been
the intervention of both Japan and the US to stem the tide with regard to the yen and to support the yen. Japan is estimated to have spent nearly $100 billion on forex intervention over a 48-hour period last week, and yesterday Japan and US confirmed that they jointly intervened last week to halt the slide in the yen. This is the first intervention, and why it's a big deal, since 2011, when there was that tsunami and earthquake and there was a need to stabilize the currency. The USD JPY, or the yen, that pair is now at 157.6 or thereabouts, down from a peak of over 163. So that's one. But guys, ultimately the conversation is about the fact that the bond yields in Japan are lower than they should be, and so as a result of which, it's like throwing water at a forest fire. It's not really going to fix the problem unless those yields go up.
Yeah. And well, let's see. I think it's a bit of an unknown, that piece of the puzzle. So let's see how it unravels, if you will.
Absolutely. And we need to now unravel the piece with regards to the divergence that we saw in terms of closing between the Nifty and Sensex as well, right? And this is, viewers, on the back of the new auction mechanism that has come in. And you've seen Nifty, which has kicked off this CAS era with a pretty decisive breakout in yesterday's session. If you see in terms of Nifty, ended at around 24,774, which is up almost 1.6%, breaking decisively above the 24,600 mark, which has been the resistance zone that the index had actually capped since May. So a very important level that we've seen only because of this new auction mechanism. Now, if you talk about Nifty August futures, they settled at 24,664, up almost 0.9%. What is interesting is that your Nifty futures actually ended at a discount to your spot, and this has just happened in those last 15 to 20 minutes of trade. From being at a premium, move ended at a discount in terms of your August futures. Now, the sharp higher move came to just happened in those last 15 to 20 minutes of trade. From being at a premium, move ended at a discount in terms of your August futures. Now, the sharp higher move came during the first session, the new closing session framework, and likewise in terms of Bank Nifty as well, we actually ended with gains of 1.7%, breaking decisively above the 20-day SMA. If you talk about the advanced decline ratio as well, we've remained positive, which is actually reflecting broad-based participation in the rally that we're seeing in terms of the markets. Nifty IT, Bank, FMCG, Metals, all of these have emerged as the top performing sectors. And if you talk about broader markets as well, they've actually mirrored the positive sentiment that we saw in terms of the benchmarks yesterday. Mid cap 100, a 1.2% gain, while you look at the small cap 100 as well, advanced almost 1.3%. So very interesting move. But the question is, what happens in terms of the charts which have gone haywire in the last 15 to 20 minutes, that sudden spike, Neeraj, that has come in as well. And I think that is going to really decode today.
Yeah, or maybe, I don't know, Hiral, but I mean, at least the few people that I spoke to, either they didn't have a clue about it as to why per se individually, or they didn't seem to sweat too much over it. They are teething issues. I think they'll get resolved over a period of time at least.
No, absolutely teething issues, but even NSE has come out with a clarification. We have Shrimi, who's got us a source-based story as well from the regulators, saying that this is bound to happen. There is no disconnect between what has happened versus what was expected. It's just that people will have to understand how this process is going to work, how the market closure is going to happen actually.
Yeah. By the way, speaking of Shimi, big exclusive, and if you've just tuned in right now to NDTV Profit, while we played that story already once, stay tuned because I think circa 8:30, 8:40 will bring that piece of news to you again. But what's the trade setup for the day today? I think that's the key thing, right? So you could almost argue, and in fact I am arguing, that it was a breakout move yesterday, despite the fact that we've had a bit of a pullback today. But let's see though, what's the kind of follow-up that we see, because a follow-up to that breakout move today or over the course of the next few days is crucial, because the MPC meet is tomorrow. Maybe the market stay quiet until that decision is out of the way. But for the week, we need to see if indeed there is some bit of an uptick on that piece. FI comeback, if it comes about, may lead to a banking stock outperformance in the second half of 2026. And personally, I won't be surprised to see shipping stocks gain today. You really need to keep an eye out for them. primarily because of the results of what Great Eastern Shipping have done, and we'll talk about it in a bit detail, but keep an eye out for them. A key point to note though today, and which is why I brought up the banking stock, there is some serious long-only FII conversation happening about opening up positions in India after a really long hiatus. We know that they've been absent for a really long time. There's some bit of a shift in the month of July, but yesterday, guys, because of some work related to NDTV and NDTV Profit, I'd spoken to a few large global brokerage head of equities, and 75% of the number of people that I spoke to, let's put it that way, essentially 3 out of 4.
I was going to ask.
Yeah, what's the universe looking like?
3 out of 4. But that's exactly the cohort, because that's
Absolutely.
a handful of people out there. Mentioned that there are some serious conversations that are happening by long-only money managers about, after a long time, of opening up positions in India. So while we are all under a bit of a doubt because the last 18-19 months have bruised our belief about a tsunami of flows if it comes on, and I'm not saying there'll be a tsunami of flows, but even
on
if there is an outflow stoppage and a serious inflow that comes in the second half, we've got to keep an eye out for banking, because that's the easiest trade for any FI to play, because frankly,
but
they
that's
don't have
always
the time
been
to
a trend, right? Either it's the banking space or it's the IT space, and seeing what's happening with IT right now, I don't think so. The only option they have is banks.
Yeah, because the valuation are easy, the depth is there, you can sell out the tape when you want to. So I think keep an eye out for banking in the second half.
So banks absolutely in focus. In fact, yesterday as well, there has been that mild performance that we've seen. But very interesting today because we have weekly option expiry. So the equity supply that the markets are going to see is what? 36,000 crores, and this is taking into consideration on the back of the closing auction session, what has come into the market. So there is confusion surrounding this as well. Now, with easing crude oil prices, subdued India volatility index, as well as improving global sentiment, plus if you add the strong first quarter earnings, the overall market bias is remaining absolutely bullish. So the sentiment is positive. Now, if you have to look at the support levels, on the top of it, 24,590 is what you should be watching out for. In terms of resistance, seeing yesterday's closing, now the resistance is coming in at 24,785, and if after that, you're talking about a 24,850. Now, if there is a sustained breakout about 24,774, which is near the 200-day EMA, you actually open up targets towards 24,850, and don't be shocked, 25,000 is not too far in terms of the resistance zone. In terms of Bank Nifty, you're seeing support levels coming in at 57,690, and you can see the other levels as well, but the first resistance comes in at 58,285. So watch out for these levels pretty closely in trade, but it is going to be interesting today to actually understand what happened on the F&O side of it in terms of opening cues. Puneet is here to tell us more. Puneet, taking cues from what happened last evening in terms of the closure, have you seen any major changes if you have to decode the data today?
Well, it is showing some trends of what's happened yesterday as well, and while the implied open does indicate almost a flatter start, expect some volatility, especially in the first few minutes in the first hour of trade as well, because you had, and as we've discussed over the last few minutes, there has been a lot of action on the positive side yesterday in the last few minutes of the trading session, and hence while still new, while still day one, and there will be those details being ironed out, you saw a very sharp up move on the Nifty 50 above that 24,750 mark, and 24,600 continues to be an important level to watch out for. But both for the Nifty as well as for the Bank Nifty, you had a very sharp up move yesterday, 58,200. We started at almost 57,200 yesterday, highlighted that 58,200, 58,800 are important levels, weaker supports, but still ones which are very important for this particular index. But both those will continue to be in focus, especially because of the big names as well as we saw yesterday in the trading session too. Now, July has been a good month. Finally, a trend being broken in for foreign investors where there has been active buying seen, and that has continued at least in this week of August. The index long also is almost the highest that it has been in the last 5 weeks. Still continues to favor the shorts with almost 87%. But the one key factor here is the put call ratio. It continues to be elevated at this point of time. You have the Nifty expiry today as well. So all of those factors will lead to some volatility, but put call ratio currently elevated. What's also interesting on the open interest distribution side though, that while 24,500, 24,600 are important levels where we are currently and the call open interest is built up, you still haven't seen any kind of deceleration in the 24,200 as well as the 24,000 call. So those positions still being held up. If that continues going into tomorrow's session will be important. But you saw some stock specific action yesterday on the back of result reactions. Muthoot was under pressure and that led to a similar build-up of shorts on Manappuram Finance as well. Dixon Tech was another counter where results were reported, PT, and there'll be a block deal today, so watch out for that. And when you look at for EPL Apollo 2, a good set of numbers came for the company, but Bajaj Finance has been a candidate where there has been, after good results, consistent short coverings and all longs being unwinded on Muthoot Finance yesterday as well. Stock was down 7%. So that's the stock specific action for today. But the crucial first hour, very, very important for the benchmarks today and most certainly something to watch out for.
Absolutely. All right. Thanks so much, Puneet, for getting us those details. Let's jump straight into individual stocks that you should watch out for. And there are quite a few. On my list, I've got KEI Industries up top. It's a pretty straightforward set of numbers. In fact, you had a strong growth in the primary business of the company, and that has driven that result performance. Raw material volatility is managed via pass-through as well, so that copper volatility that you've seen is actually something that the company has managed. EPC project revenue is up as much as 30%, so that was a shot in the arm as well. The margin improvement has actually led to an over 50% uptick in the EBITDA on a year-on-year basis. That EBITDA margin coming in at 12.4% compared with 10% in the comparable quarter, as a result of which EBITDA coming in at 396 crore rupees, a decent 23% uptick in the revenue as well, and a 40% uptick in the net profit. Ganesha Ecosphere, interesting set of numbers, margin expansion seen both on quarter as well as on year. In fact, they had an improvement in the fourth quarter and they're building on that improvement in the first quarter as well. It's not on the metric or the lever of sales volume and demand though, where they continue to face pressure on account of weaker demand. Polymer prices have risen on account of geopolitical tension, and that has had a bearing on their results. The net profit is coming at 29 crores compared with nearly 11 crore rupees in the comparable quarter. The revenue is up as much as 26% despite the volume decline or softer volumes, and that's because of pricing. And the EBITDA is up as much as 65%. The margins have expanded reasonably considerably actually to 14.1% compared to 10.8% in the comparable quarter. It's also an improvement on a sequential basis. And finally, I've picked City note on Exide, and it's an interesting one. They've maintained a buy, but they've hiked their target price, and understandably so, because the stock price as things stand right now to 510 versus 410 earlier. They say that the management is or the management outlook is optimistic post the strong Q1 FY27, and they see strong demand across segments in both rural and urban market. The lithium ion cell plant is approaching commercialization phase. They're awaiting more details on that cell business and customer wins as well as revenue outlook going forward. So more than anything else, it's a recognition of how the stock is performed and an uptick in the target price.
Absolutely. In fact, on my list as well, I have earnings from 3 different sectors. Restaurant Brands Asia. The reason I've taken this one is because if you see the loss number, that has narrowed. So let me first take you through the key highlights. Your same-store sales growth at 12.6%, and this is the strongest that the company has seen in 15 quarters. This was mainly traffic-led, which is actually indicating improving customer footfalls as well, rather than only the price hikes that they would have taken. If you talk about the average daily sales, a 9% increase is what we've seen as well. And in terms of the delivery mix, that has increased to 44% of the sales, and it is reflecting continued strength in the digital ordering part of it. Your gross margins have expanded substantially. In fact, the management has raised the long-term gross margin guidance to 72% over the next 2 to 3 years. Initially, it was 70% that they had guided for. Apart from that, if you talk about the Indonesia business, the revenues have declined 4%, and this is only on the back of the store closures and the geopolitical challenges. A net loss of 28 crores versus a loss of 41 crores. It has narrowed. Your revenues have gone up 18%. Your margins have come in at 12.2 versus a 10.4. So thumbs up on this one. Sambhav Steel, another one as well. The highest ever quarterly performance is what they have delivered, where the sales volume of value-added products has been the highest as well. The growth has been supported mainly by better realizations and a better product mix. So if you talk about the profits, a 67% surge is what we've seen, 31% surge in terms of revenues. Margins, though, have remained flat at 12.97%. And if you talk about their capex roadmap, that is very strong, where they're planning to increase the capacity to more than 2 million metric tons per annum over the next 4 to 5 years. Lastly, Ather Energy, again a thumbs up. Revenues, 88% surge coming in there. They have posted an EBITDA loss, but that has narrowed to 33 crores versus a loss of 134 crores. So there is that path to improvement and path to profitability probably that could be on the cards. Their net loss number has also come down to 51 crores versus a loss of 178 crores. What they've said is that the strong volume growth has been led by the 2 times year-on-year jump in retail volumes. The dealer inventory is around 3 days versus actually 14 days, which we had seen in the previous quarter. And the pre-orders have been very strong. Inquiries are very strong. There have been price hikes, and that is what has impacted margins as well. And that is something that will benefit their margins going ahead. And they're running at 100% utilization. So 3 numbers, a thumbs up on all the 3.
The first one is a bit tricky on my list, and that's Paytm.
Okay.
And for 2 reasons. And the trick is because there are opposing factors at play. In fact, if it gets absorbed well, this Safe Partners and Elevation Capital's block deal, then it might all be positive for Paytm as well. But Safe Partners and Elevation Capital are going to sell shares via block deal, about 2.3% of equity. So block size circa 2002 crores. Morgan Stanley is the banker to the deal as per sources to Sumit. And in per se, this could have a bit of a negative impact on Paytm. But keep in mind, a piece of news that Shumi has broken, and we'll of course bring it up a bit later on in the show again, that the MDR amendment piece of news, if it were to come about, opens a path to monetizing UPI volumes that currently generate almost 0 revenue. This is a big shot in the arm for everybody in this ecosystem. So that might actually spur Paytm a bit as well. So opposing factors at play here. Keep an eye out for Paytm. We'll also give an explainer of what this means a bit later on in the show, but effectively this is the piece of news. Right now, just bear this in mind, stick to the show if you want to know more about this. It's a very important development. Then, the reason why I said shipping stocks could be active today, look at the results of Great Eastern Shipping. Quite stunning, really.
I tried to steal it from you, by the way.
Always welcome.
I just saved it.
But look at the numbers, guys.
Brilliant.
Revenues up 66.9% at 2005 crores versus 1201 crores. EBITDA margins at 66.7 versus 53.5% or thereabouts. And you know, this level of EBITDA margin, usually for a shipping company, the mid to high 60s, it's characteristic of peak or near peak cycle conditions. Now, therefore, you could argue that, oh, they've hit the peak, the ahead numbers will not be as good, but we don't know that. We'll have to wait for the management to tell us that. Right now, I think just the point that they've clocked in these numbers is pretty stunning. Look at the PAT number, 1309 crores versus 505 crores. And think of this, the board has declared an interim dividend of 14.4 rupees per share, one of the highest single quarterly payouts, which reflects this strong cash generation and the confidence as well in generating this kind of dividend. Now, shipping revenues, and it was not offshore, but shipping revenues, which effectively did the trick for Jesco, and which is why, or Great Eastern Shipping, it was always called Jesco, and which is why I think
90% uptick, no?
90%
yes, uptick.
Massive uptick, right? And therefore, I think, and you know, both SCI and Great Eastern Shipping con calls at the end of quarter for Alex were saying this, that some of the revenues was not booked, because in a shipping company, the revenue gets booked once it's docked. We know why a lot of ships weren't docked.
Yeah.
And therefore, they have been docked in the current quarter. And in some sense, the uptick ahead for the current quarters as well will look very, very solid. So keep an eye out. I think there might be some merit out there for Great Eastern Shipping and Shipping Corporation if we had to rally today. And then Stovecraft, again, a similar play, right? We know why the induction top numbers look strong. Stovecraft, 41% uptick in revenues. The management had guided to a conservative mid-teens for the full year. They've done 41%. Imagine that, right? EBITDA margin at 11.2 versus 10.5%. Net profit up 64%. Likely factors: strong demand in induction cooktops, non-stick cookware, etc., and premiumization, I presume. So these would have been the reasons. Again, you could argue that will this continue, will this not? Don't know. But for now, the numbers look solid, so maybe the street rewards them.
Two instances of make hay while the sun shines.
Yes, exactly.
Right? So, all right, we'll talk about more of that, but we have to slip in a very quick break. On the other side, we'll talk about what happened yesterday in the first instance of the cash settlement. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना? बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड? 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Welcome back to India Market Open on NDTV Profit. Now, the first day of SEBI's new closing auction session triggered unusual moves in the benchmark indices, with Nifty's official close actually jumping nearly 200 points after the normal market trading ended at 3:15 p.m. Now, market experts say that the move was mainly driven by the new auction mechanism rather than actual fresh buying that happened. Traders are now actually watching for today's expiry session closely for further clarity in terms of the impact of the new closing framework. Sharad is here first up to decode what actually happened in the first session of the closing auction session and why did it actually happen. Sharad, this is a curious case for everyone, and everyone actually wants to understand what really happened, Why the 200 points jump, and what should investors now watch out for?
Exactly. Three C's are there in our discussion. There is cash, there is confusion, and hopefully clarity. Let's talk about what actually happened at 3:15 and 3:30. It is like a drama. Let's look at that. August futures, if we talk about it, earlier they were trading, you could say, at a premium. But of course, from 3:15, the cash trading of F&O stocks, to be honest, has stopped. And that spike is off 200 points. But let's see what action was there in the futures. That is where the discrepancy starts coming in. At 3:15, it was at a premium. Of course, after 3:15, there was a session. The auction session had started till 3:35. But then look at the closing, what has happened. That discrepancy comes in here at a discount. So there is definitely a big change happening here. Of course, there are two schools of thoughts on it. One is, of course, the settlement that has moved around and the impact we can see. But let's look at the key nitty-gritties of what has actually happened. It's a bit long discussion, but I think it makes sense to do justice to it. Nifty was 24,573 at 3:15, and then the normal cash marketing trading that stopped for the F&O stocks. Also, let's look at the official closing. That was at 24,774, 200 points up move coming in. Apart from this, the first session of cash, this you should be looking at. SEBI introduced this setup only for F&O stocks. Remember, for cash stocks, it's business as usual. Also, over 200 points jump in Nifty was not because of fresh buying. It was, of course, some bunched up trades were happening. There was an auction imbalance also, if you could point that reason as well. And remember the discrepancy which I spoke about, the spot and the futures, that is something to talk about. Of course, there was a large volatility spike. Maybe some NAV adjustments in mutual funds, if they are taking for yesterday, that could have been impacted. But one of the key reasons was the imbalance in auctions. There was, of course, Nifty heavyweights also there, and a little bit of concentration came in on these trades. Apart from this, what was the difference? The potential open positions by traders, that was something to look out for. And secondly, bunched up basket buying was there towards the end. That's why you could see a little bit of discrepancy in the prices. But you must have noticed NSE and Sensex closed very differently. The abnormal price discovery might have been there due to lower turnovers, especially coming in from BSE. Also, let's look at what has happened in the key numbers. The NSE turnover was 1276 crores and a minor BSE turnover of just 10.8 crore. There might be a reason for it on this discrepancy. These were the top traded CAS stocks. Largely 30% of these stocks, which are concentrated, drove most of the volumes in yesterday's session. Also, let's look at the clarification which came in from NSE, and they have stated that there were two separate sessions which were there for 20 minutes for SAS session, as well as from 3:15 to 3:35, all the trading were happening across the days. Also, the first 5 minutes and the reference price, which we had already given as earlier, like a syllabus to us, that same thing they have repeated it as a clarification, but nothing major on what actually happened on the trading session. This is just giving the overall points which was already given earlier. And there was plus minus 3%. Suppose 100 rupees trade you have, so max you can give is a 103 or a 97 rupees trade to simplify. And this is very much important. The order entry period, that is only for the limit orders. Also, from the closing auction session, the clarification comes in from NSE on the total setup. And remember, there is no modification or cancellation of market orders, especially with no HFTs or large institutions manipulating at the end. And of course, we have mentioned the random close also. And at 3:40, it's business closed for the derivative space. And this is what the clarification from NSE comes. But moving on, there is something much more to this story as well. What lies ahead? Of course, we know the NSE clarification has come in, but what happens today? This is very much important. Opening session expected to be volatile. GIFT Nifty is showing mixed signals. Nifty expiry today. So there is a settlement angle to it, and there may not be a larger position. That's what the instis are talking about. So you can have lesser volumes today also. Road ahead, day one only it is. Take it with a pinch of salt. Some teething issues happen, discovery happens, and system is expected to digest this. But if you're a retailer, keep your proper hedges, stop loss, and if you're an investor, just chill.
Thank you so much, Sharad, for that. I mean, a very extensive explanation that you've given out. But let's also get in Chandan Taparia, Head Technical and Derivative Research from Motilal Oswal. We have Kush Bora and Parag Thakkar as well in the studios to decode this for us. Welcome to the show, Chandan. My question coming to you is, I'm sure you've seen exactly what happened yesterday. Now, in terms of the price discovery, and if you have to talk about the market structure as well, the stated objective of getting this auction system into place was better price discovery. How should traders actually interpret this situation where the cash market and the future market are showing a significantly different price near the close?
Yeah, thank you so much, Hiral, for having me. So, yesterday was the first day of a new closing auction session. So, first day of the CS, and that's why very less participation has happened in the trading system. If you look at the NSE circular, only 1276 crore worth of participation is seen in NSE, while only 1100 crore participation happen in the auction. So what I understand from the entire the process, that regular market will be there till 3:15 for the cash counter which have FNO, but regular trading will continue for non-FNO counter till 3:30. Future trading will continue till 3:40. So the entire case is to understand the counter which are part of the FNO but in the case segment. And for that, first 3 to 3:15 will be considered for volume weightage average. And after that, there will be 5 minutes of transition period. And 3:20 to 3:35, there will be the auction. So what exactly yesterday happened, as per the rule of the auction, the buyer and seller will bid their trades, and the best matching highest bid will be considered for final price as per the CS system. But yesterday, we have seen that in many counter, the order were placed for buyers and sellers side at the highest price. We also need to keep in mind there is the limit of 3% for the bidding also. So 3 to 3:15 will be considered as a reference price based on the volume weightage average. And from that price, traders can place the order only 3% plus and minus. But we have noticed that being the first day, there was a less liquidity, and most of the traders placed the order 3% higher or near 3% of the closing of the reference price. And that's why we have seen that price jump in selective counter in the spot, including ICICI Bank, Reliance, TCS, and all. And that's why we have seen a difference price in the spot to the future. But we need to understand the market need to digest this. As of now, the suggestion is don't be in a hurry. Keep the position light for last 10-15 minutes. I believe the entire process and system is to get the better price discovery to avoid the mispricing in the last hour. But however it happened being the first day, so now being the expiry day, you need to keep two things in mind. Let the market get the settle near 3:15. Don't keep your option position after 3:15. Exit price near to that zone. And the better suggestion is if you have done some writing and all, try to exit before 3. This is what we understand. So I believe the entire system is good, but because of the lesser participation and the liquidity, we have seen jump in the spot while future which traded didn't get any price movement. And today, as per the previous closing, I believe if market opens higher or lower, the spot will go lower compared to the future to get the imbalance between the spot and future market.
Right, so that's what we'll see pan out in just about half an hour or so. But Kush, you want to come in and add to that? I think it was pretty ably described to say that if the participation in that special auction window was lower and the prices were set at that 3% upper limit, then obviously for these heavyweights, it is bound to have a bearing on the index as a whole.
So first up, a very good morning, guys. And I think this was very well covered by Sharad and Chandan, both of them. You know, the mechanics of how this works and even to a degree as to what do you need to do. I've identified certain areas where this could have serious implications, right? So I'll just take a minute or two perhaps to just quickly go through those. First, let's start with the caveat, right? This was the first day, teething issues, this will perhaps iron out over time. I certainly hope so. Secondly, this is similar to the pre-open session, isn't it? But you know what? We can absorb, a mispriced pre-open session because, once the market opens in a minute or two, that gets sorted. Yeah. What happens when the closing price is distorted in, or not exactly what it's supposed to be, basis, the VWAP or the last half an hour of trade. Now, there are issues that will come about. First, let's look at the participation. The idea is to have better liquidity, better price discovery. As per the previous VWAP session, correct, you had a market discovered pricing for closing, right? Right now what's happening is that is shifted to order matching and auction system. I don't know how many of us right now participate in the pre-open session itself. That's been around for a while now. I think most of us have learned to live with it. Perhaps we might have to do that with the closing auction system as well. Secondly, there is going to be serious disruption for delta hedgers, arbitragers, for those who do VWAP strategies, because you'd have a VWAP window open, just to estimate the closing price and then make your trades. Now that is going to go for a toss, because once the window closes, you just get a price that this is it, right? So that is going to have serious implications. I think bigger implications are going to be on the settlement on the expiry day. Just hypothetically imagine if you had written 24,500 call option at whatever, 8 rupees, 5 rupees, 10 rupees, and then the closing price that you got was 24,700, 800, right? If that were to happen today, a lot of sellers are going to bear a lot of brunt, for the writing. So just be a little mindful of that. It's going to be very tricky, especially today, just being the second day of, the system. Also, relatively smaller points, but still meaningful, is that what happens in case of days where you've got major news, either in terms of results or macro events, right? Like I said, in the VWAP segment, you would get a market discovered price. Right now, the only or the maximum movement that you can get is the 3% up or down. So if there is a major political news just towards the end of the session, or geopolitical news or results, this could have serious implications. You won't get an exactly market discovered price per se, because the 3% band restricts that. And largely, there's going to be distortion of NAVs, and for fans of technical analysis, like and the ones who track technical analysis like I do, the charts are going to be distorted for a while. So there are going to be some serious implications for this closing price. My suggestion, something similar to what Chandan also said. Do not participate in the closing price. If you in the closing activity, if you have options positions, especially on expiry day, both buy or sell, you're better off exiting them at 3, 3.5, 3.10. Don't even wait anytime beyond that. So yes, we will over a period of time understand this better, and maybe we may be able to play this out better. But until that happens, it's good to not participate, close out your positions early, and just see how this rolls out.
Okay. Well, teething issues is the simple way to put this now, and let's wait and see how it evolves over a period of the next few days. Not too many people are too worried about it. Remember that. It's an important story, important to highlight. Okay, a lot of other important stories coming up as well on NDTV Profit. You want to stay tuned for that. In a minute or two from now, we'll get in Shimi Chaudhary, my colleague, to talk about that as well. But welcome in Parag Thakkar on the show as well. Parag bhai, thanks so much for joining in. And Parag bhai, when we think of the market action yesterday, as well as what I'm now hearing from some large sell-side strategists, that FIs might be now opening up or wanting to open up positions in India. Maybe the second half sees some bit of flows coming in, which have hitherto stayed away. And therefore, banks will be the first port of call, right? Where is it that you think people should have the money? I want to know a stock which is not starting with the letter I.
So you made it.
And not ending with the I as well. In terms of
You meant Infosys, right?
So ICICI, ITC, all are I.
No, banking.
So that's why I said and not ending with the I as well.
So Hindalco is one which I mentioned, right? Which is something. So I would say that if crude oil remains low, then of course many other sectors come into play, as we discussed, right? Whether it is in the Interglobe Aviation, whether it is Pidilite, which is going to...
And you think FI money will come in for those as well?
I think FI money will definitely come into... For example, we have seen how Bajaj Finance went up, right? From 900 to 1060 in no time. So that is FII. Domestic funds cannot buy like this. Domestic funds will always buy on dips, right? This is FII buying clearly in Bajaj Finance and Bajaj Finserv. And these are their favorite counters, right? So I would say that... it is very visible in the market also that some of the large caps which are going to report or which are reporting strong earnings momentum, they will see maximum inflows. Of course, now I am hearing that long only FIIs have started buying mid caps and small caps also. So they want earning momentum. That is what they are going to chase.
Okay. So you don't necessarily, and while traditionally you've had a gravitation of foreign institutions to the banking stocks and the large ones at that, because of what is happening with IT and what you're seeing right now in the mid cap and the small cap space, you can't take that for granted.
Yeah, so
there is depth. There is more.
Yeah,
there is
what
more
I have
depth.
seen is right now everybody is focused on earning momentum.
Yeah.
And result season is also going on. So that is so Bajaj Finance declared fantastic numbers, gave out superb commentary, and so Bajaj Finance gained the maximum flows.
Yeah, true. But speaking of Bajaj Finance, yesterday, Kush, your point of view was that you should take money off the table, and you're still up. I think you ended positive yesterday. It was one of the top gainers on the Nifty 50. Would you continue to hold that view?
I do. Just that, remember that I said that for a lot of stocks yesterday.
Yeah.
It's not from the perspective that the rally is done and we're seeing a reversal or a topping out or anything of that sort. It's just that a lot of stocks in this space or in the markets in general have actually run up quite a bit. You will see some money being taken off the table and then, perhaps a rally again. The similar view as we had for Nifty yesterday, right? I mean, what did we speak about Nifty was continue to hold your long positions, book partially, but then you don't want to let go of that position entirely, right? Even if you take out the cash effect of about 200 points, Nifty was close to 24,573 thereabouts, right? That's still a very good close because 24,500 has been that level that we've been talking about for a while, beyond which 24,800, 25,000 very much on the cards. So I don't see a reason why you should let go of your Nifty positions. By the way, you'll remember that we said that the most important number that you should track is the FII short positions on the index, right? That has now come down to 87. Like I said
85
yesterday,
was your level.
Absolutely. If it comes to 85 or below, you will see a more meaningful, sustainable rally, and 25,000 target might look like child's play, right?
PCR gas.
Coming to that, PCR has actually bumped up from 1.36 to 1.4, and hence fresh long positions are a little iffy. थोड़ा बहुत decline मिलता है, close to now 24,400, 24,500, you should go long. By the way, an interesting number on the number of short positions that FIIs have is actually gone down from about 2.2, 2.3 lakhs to about 1.5, which is a multi-month low. So not only are they reducing in terms of percentage, they're also reducing in terms of the sheer quantity of short positions. This is what makes it meaningful. And not a political expert, but who knows, maybe the midterm election preparations have started in US and news flow might be positive, but that's anyone's guess, right? But I think FIs are listening to us, Parag bhai more so, because we've been talking about go long on Bank Nifty. That's the index that you want to go long on. The risk reward ratio favorable, PCR neutral. By the way, if you see the futures position, Nifty is seeing short covering, Bank Nifty is actually seeing long build up. Like I said, PCR is very neutral, just under 1 on that. HDFC Bank hasn't participated, but the good news is it's starting to take support from those long-term support levels that we've been speaking about. So I think Bank Nifty also has a favorable risk-reward ratio. 58,500 is my first target. This, by the way, will also get reset because 300-400 points of the uptick came because of cash, right? So 58,500, 60,000, these are the levels to watch for on Bank Nifty. If you have a position, stay long, bump up your stop losses in Nifty, Bank Nifty, both. If not, go long on Bank Nifty.
Okay, just to add to Kush's point, FCNRB numbers are also looking very good. I think they can now go up to $80 billion easily, in my view, based on the momentum. And if you see, ICICI has gained market share.
Yeah, in fact, all your private banks have actually gained market share. PSU banks have not garnered to that extent. I think they are still at 31%.
SBI has done well, but not to their. But I think they'll catch up.
But the expectation, Parag bhai, was that it will not. I mean, your foreign banks, your private banks will not have that quantum of FCNRB inflows versus
I think
your
foreign
PSU
banks have done much better.
That's correct.
And and within private sector banks, ICICI, Kotak, all have done well. And I think the other guys will also catch up. I think August, September is where you will get the maximum
the crucial
flows.
one. Okay, on that note, Kush, your top picks.
Yeah, all three longs. Remember, last week I said that, there is something that I'm observing in the mid and small cap space, and we'll cover that. Maybe tomorrow is a better day to cover that. So I'll come back and have a brief discussion about what I'm seeing in this mid space happening. Positive, but mild caution. So we'll cover that tomorrow. For now, going with all three longs, Wokhard, Minda Corp and MM Forgings. Also, a bit of an update because we discussed this yesterday. Wokhard, you're seeing a resumption of buying in this. 20-50-day moving average is being taken out. So for targets of 2090, 2165, you can go long here as well. 1965, that's your stop loss. Minda Corp has given a breakout of a rounding bottom formation above 710. Again, volumes are a given, because that's what I track for sure in a stock. 745, 767 are your targets. 701 is is where you keep that stop loss. And Forgings makes the cut again, because yesterday we saw a decent uptick on this one. 575, 605 are your targets. Pump up your stop loss from 525 to 535.
Okay, all right. Exclusive information coming through, and this is important news. We spoke about this last afternoon. The government is planning to overhaul the zero MDR framework for digital payments. It could have implications for a number of companies in the digital payment landscape. Let's bring in Shrimi Chaudhary, who broke this story yesterday, to tell us about all of the details. Shrimi?
Well, absolutely. The government is all set to change the zero MDR policy by repealing the Section 10A of the Payment and Settlement System Act, which currently mandates that banks and payment service providers cannot levy merchant discount rate on any UPI and RuPay debit card transactions. So this is very, very crucial, because the proposal comes after months of industry discussion over the sustainability of the zero MDR regime, with payment companies and banks arguing that the absence of MDR has made it difficult actually to build a commercially viable payment ecosystem. So what is happening is that instead of a blanket statutory ban, the government is proposing a notification-based framework under which the center will decide which digital payment mode will continue to enjoy zero MDR status. Now, in other words, only payment instruments specifically notified by the government will remain exempt from MDR. While the proposed amendment in the bill itself does not impose MDR on any payment instrument, it creates the legal framework that could allow merchant charges on the digital payment modes not covered by the government notification. Now, the detailed framework is expected to be notified by the center in consultation with the Reserve Bank of India after the law comes into force. But do note the fact that the MDR is, in whatever form it's coming, will be levied only on the large transaction, and that threshold will expected to be around above 2,000. So let's await for that clarity. But for now, the government is making the provision in the law for the digital payment levy.
Okay, important updates, Shrimi. Thanks so much for that. By the way, incidentally, when this broke and when Shrimi brought us this update, we spoke with the management of MobiKwik, and Upasana Taku, if I can call it that, was cautiously optimistic. Listen in.
I believe that this change is required so that different payment methods can be clarified in terms of what can be zero and what can't be zero. At least that's my rudimentary understanding. I'm not a lawyer. I've not read this in detail. I've also heard this news in the last few hours only in terms of the proposal to make this a change. But essentially, we believe that this legislative change is going to have create a change in the Payments and Settlements Act, and thereby allow ease of change of MDR for different payment instruments. We believe right now the way the language is not flexible enough to allow changes in MDRs for different payment instruments.
Got it. Okay. Now, why is this important? Simply because it opens up a path to monetize UPI volumes that currently generate almost zero revenues, right? And therefore, for companies like Paytm or others, but from a listed space, it's Paytm effectively which has got this. Parag Thakkar, you're not necessarily the most bullish on these businesses necessarily, but this, if this does materialize, could it be a big shot in the arm for, let's say, a Paytm? Because it's also a stock in news because of a block deal.
Block deal, yeah. So I think, see, whatever I am hearing on Paytm, I don't hold it for sure. The people who understand this business are getting more and more positive. Even the latest quarter results where they reported 203 crore EBITDA, which was a good jump. So I think this business is gaining momentum. For example, Misho is also, there is a block today, right? So Paytm and Misho, both I am talking about. Third one is what excites me, that is LIC. But the point is that this more and more what I hear from people is that whatever metrics they are tracking, whether it is Paytm or Misho, those metrics are falling in place. And so at some point, there will be a big number jump, is what their theory is. I look at current valuations, current cash flows, so I don't focus too much on it. But definitely people who have been successful in the past in this kind of stories are turning positive on these names.
And Jeffries, by the way, weighing in on Paytm and Pine Labs, MDR on UPI likely ahead, and this is exactly what we spoke about. There could be a threshold, but remember, a lot of people do transact using the various UPI applications, and that would be positive, right? An amendment to the PSS Act, which is essentially the act that is being spoken about, can allow RBI to decide MDR on UPI. The actual implementation is set to come in after 2 to 3 more steps, but this is an enabling framework. You can look at it that way. The industry checks point that a 15 to 30 basis point MDR on a P2M, that is I'm understanding this is a peer to merchant, right?
Yes.
Right? A peer to merchant transaction above 2,000 rupees is likely, and this is set to generate between 5,000 to 10,000 crore of revenues for payment platforms. Given the weak economics and focus on profit and a need to invest, players may retain most of it. So that's quite interesting. For Paytm, this can lift the FY28 EBITDA by 15 to 35%, and so to the profit, as well as for Pine Lab, this can lift the FY28 EBIT and profit by as much as 9 and 23%. So that's quite significant, as a result of which I think you saw these stocks in trade yesterday as well. On the buzz of this coming through, Paytm up as much as 5%, Pine Labs as much as 9.5%. How would you trade this, Kush?
Both of them positive. Very positive. Just to give you, some reference points. 1380, 1385 was the near-term resistance for Paytm. That is being taken out. But dial the clock back, and Paytm is now at the levels that it was somewhere early Jan 22, where 1350, 1360 were the resistance levels. That is being taken out on the back of decent volumes, sustained up move. So that is positive. Pine Labs also, after listing, it hit a high of about 284 thereabouts, has seen a sharp fall, but now for the last about 2.5 months, it's consolidating in this broad range of 140 to 160. This is where you want to start accumulating. Volume action also very healthy on this one. So yeah, if you want a extremely favorable risk reward ratio, then Pine Labs with a stop loss just under 140 is about 135. And if you want a momentum play, I think Paytm is a good bet still.
The beauty about Pine Labs is that it listed way higher and then it's corrected so much that there might be value, Parag bhai, in Pine Labs. But no, let's try and discuss some of the others too. There are so many stocks in focus.
The Paytm block deal that has just happened right now. 2 blocks that have just exchanged hands, I think, if I'm not mistaken, in terms of Paytm. And if you have to look at the pre-open as well, it's going to be interesting to watch out for on both these ends.
Yeah, so important. Okay, that's a large one. And look at, let's see what Paytm does this morning. It'll be very, very interesting to see that. Okay, more news and updates. First, UPL, and then get in Somit to talk about what's heard on the street. But UPL returned to profit in the third quarter, in the June quarter rather. Varsha is here with the details, and what is it that brokerages have said? Varsha.
Well, overall the revenue growth that you're seeing, the strong revenue growth is mainly driven by forex gains. Number one, lower volumes were though offset by price hike, and they also saw better product mix and pricing. The crop protection volume, but if you see, declined 3% year on year. Margins may moderate from Q2 considering pricing normalizing. Now PAT turned positive of course after 3 years. On to the group volumes, which declined 3%. Negative volumes were offset by equivalent price hikes, and growth was driven by more pricing than demand recovery. They don't miss their EBITDA guidance. Q1 EBITDA came at around almost 11.3% growth, but earlier if you see, Q1 guidance was at 14 to 18% of EBITDA growth, so they missed over here. FY27 outlook, well, revenue growth is estimated at 7 to 11%. EBITDA growth guidance has been given at 10 to 14%. Future growth expected is from volume recovery though. Let's see what brokerages are saying. One more thing, there's a key overhang. If you see, UPL Corp CEO has actually resigned, no successor announced yet. Mike Frank will leave on August 31st after 4.5 years. Let's see what brokerages are saying. Well, Jeffries have maintained buy, though they've cut target price. According to them, stock has corrected 21% year to date. Nuvama will have maintain at hold. They've revised their target price though, and according to them, currency uplifts quarterly performance. They've cut EBITDA estimates closer to lower end of FY27 guidance. So overall, this CEO overhang and volume is one of the key watch one of the key concern that investors might have.
Thanks for that, Varsha. Parag Thakkar, do you have any concerns on UPL?
No, as she said, it is mainly due to currency gains. We have to wait and see how structurally the business performs. And remember, it's a slightly highly leveraged company, more than what I would like to buy.
Yeah, the facial expression say it all. Yeah, you don't have to look beyond that. Okay, let's see. To somebody who doesn't have too much of facial expression but gets the khabar spot on, Somit Sarkar joins in 10 minutes late. I know viewers will be complaining, but he joins in 10 minutes late. With all that is being heard on the street. Somit, good morning. What are you picking up from your sources today?
Good morning, Neeraj. Firstly, it's Jubilant Food. Now, there are buy flows on the FI desk and delivery volumes are also on the higher side. Dealers indicate that a big FI has been accumulating this counter in trade. For Titan and Go Digit, both the stocks were up in trade, but there are some sell flows on the mutual fund desk is what dealing rooms have specifically indicated at the higher levels. For Sudarshan Chemical, that stock was under pressure for the last 15 to 20 odd days. But right now what dealers are indicating is that selling pressure is largely over and the stock could bounce from the current levels. For Axis Bank, there are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter and delivery volumes are also seen on the higher side. For Geo Finance, there are buy flows on the PMS desk and a large HNI in the PMS desk, and dealers are expecting some positive news flow could come in when it comes to Geo Financial. And given the fact that it's earnings season, SBI, Samvardhana Motherson and Fortis, there are buy flows on the PMS desk. Dealers are expecting stable set of numbers to come in from all the three names that I just mentioned. And multiple stocks that we did indicate earlier, PTM on July 4th, where we did a news break where we clearly mentioned that SAF partners will be looking to sell at a discount of nearly 5 to 8%. And today the block deal has happened. Arvind, we indicated on July 24th that the QIP will open soon, and yesterday night the Arvind has opened their QIP, and Nazara Tech was part of our segment on June 24th and on July 31st as well, where we did mention that there will be a CEO change in the company, and that is what has happened. Nitesh Mitterson has stepped down as CEO and Raymond Stoffer has been appointed as Nazara's new CEO. So keep an eye out for Nazara Tech as well.
Quite a few khabar confirmed as well. Thank you so much, Somit, for that. By the way, just want to check with Kush Bora what he thinks about the sell flows information that Somit has picked up on DII desks on Titan. Very interesting because strong set of numbers. I think earnings also around the corner, if I remember correctly. Yeah. So just around that event, and remember the quarterly update was really good. So maybe a sell on news candidate.
Yeah, and if that happens, buy.
Oh, interesting.
Oh, yeah, because it's a massive uptrend. Not surprised that there are sell flows, but those could well be profit booking kind of sell flows, right? The stocks overheated on daily charts, slightly deepish levels of 4750 and 4800. So yes, if you do get the stock around those levels, it's a definite buy, very strong structurally. By the way, SBI is also shaping up well, and Samvardhana Motherson too. So both of these from Somit's list, you can keep an eye on right now. Titan on declines.
Okay, so Titan on declines. Parag, by any view in terms of Titan number one, just ahead of earnings, and today we have Bharti Airtel also that will be reporting numbers. How are you looking at it?
So, as I said, business updates are half truth. So the revenue and everything, you don't know the margins. So I don't know. And stock has gone up in the anticipation after business update. Who could have resisted not to buy Titan? So the stock has gone up. So I'll not be surprised if there is some profit booking after the results, and some kind of margin disappointment can happen, in my view.
Okay, keep an eye out for that. Okay, now 9 a.m. and the markets, the pre-open rates have started to come in. Let's pick up the obvious suspects. So, Paytm, LIC, Meesho, all three should be on your screen as things evolve. Let's see what Paytm, okay, right now no rigs out there. LIC, could it be a sharp downtick? This is circa the price that we were talking about, right? That the offering will be. I mean, that's a very large sum of money that LIC's, that DIPAM is put on the block, and therefore there will be pressure on LIC. Meesho is kind of quiet, so no big issues there. FSSAI has barred Dabur from selling products with 100% claims. And I wonder if that is impacting Dabur. Yes, For now, a 10% downtick. We'll talk about this with Parag Thakkar a bit later on in the show. Keep this in mind. KEI, splendid numbers actually. Pretty good margin expansion as well. Wonder if the stock is reacting duly to that. There is also RBA, which Hiral pointed out, I think. EBITDA margins went up. Same-store sales growth was the strongest in the last 15 quarters. And Restaurant Brands Asia up about 6%. And Jefferies has a note on Torrent Power. They've hiked the target price. Let's see if that one is reacting. Well, today is a day of some fairly amplified moves in a bunch of stocks.
You didn't mention the stock on your list, which is the Great Eastern Shipping Company.
GE Shipping, yes.
Or Stuffcraft.
Or Stuffcraft. But GE Shipping opened with 20% upside, but it's cooled off from that point. Now trading with gains of 11.5%. It's not bad. Not bad.
Chal jata hai.
Okay, and Stuffcraft maybe, that's the other one. If you can just maybe mark that one very, very quickly. Stuffcraft. Not bad. It is a day of amplified moves. Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal with us on the show. Ruchit, big move on the Nifty yesterday is one, are you building out any fresh positions on the benchmark indices firstly?
Yeah, hi, very good morning to everyone. Well, now if you look at last 2.5 months, the markets have gone through a good time-based corrective phase. And this entire correction, 24,500, 24,600 was acting as a resistance. Now that we have surpassed that, this clearly indications that we are out of that consolidation phase and we have started the next leg of uptrend. The potential technically, is around 25,200 in the near term. So we think that we should see higher levels around 25,200. So yes, if we get any minor declines again towards 24,700, 24,650, the risk reward ratio would be favorable to go long over there. With a stop loss below 24,500, keep a short-term view. The potential upside should be around 25,200.
About individual stocks, which is very good morning to you, Alex here. Individual stocks that you're liking, like we were mentioning, there's quite a few where there is an exaggerated move on fundamental updates.
Yeah, good morning, Alex. So Siemens is one stock that we like at current levels. A good 3 to 4 months of consolidation phase. Yesterday's up move supported by better than average volumes and on the verge of a breakout of this entire consolidation. So I think the stock should do well going ahead. So around current market price, one can buy Siemens with stop loss below 37.50 for potential targets around 4170. And auto ancillary as a theme. If you look at last 1 or 2 weeks, then if the markets have given a breakout yesterday, then this is one sector where the breakout was already a week back and the leadership has been seen over there. So when there's a leadership, so one can expect good momentum over there. Samvardhana Motherson, we like a lot of auto names as well, but within the auto ink, Samvardhana Motherson is where the chart structures are quite positive. Stock has formed a good support base at its 20-day MA, now just resuming its uptrend. So one can go long with stop loss below 148 for potential up move towards 168.
Okay, so that's the Samvardhana. So auto ancillaries is another space that we're watching out for. And you have another brokerage call that's coming in for ancillary company as well. Citi remains bullish when you talk about an Excite, and that's the 905 big brokerage call of the day. Sharad joins us to tell us more. Sharad, why this note, and to what is Citi's call when you talk about an Excite as well?
Well, Hiral, a lot of bullishness coming in for Excite counter, especially after the Q1 earnings. And this is Citi I have picked because they have maintained a buy rating. But the target price hike, if you look at it, it's more than 20% from the current market prices. The target price has increased from 410 to 510 rupees per share. Now, the management outlook is very optimistic, especially after the con call from the first quarter, and overall they're seeing strong demand across segments, both rural as well as urban market. This is for their core business. Lithium ion cell plant is also approaching commercialization, so Street is factoring in some positive trigger going ahead for the company as well. But yes, some details are awaited for this lithium ion cell business, customer wins and revenue, but overall the Street is bullish the way the company is transforming into the new age sector.
Okay, so that's with regards to our Excite. Was Parag, by any view when you talk about battery companies as well? I mean, we were just talking about multiple brokerages which have that positive view there. Are you finding valuations reasonable enough?
So results were very good. In fact, Excite. And there was without any inventory gains. So I think the results were good, and they are investing big behind these lithium-ion batteries also. So they are not left behind. So they are investing in future also. So I think markets would love this. Both Excite and Amar Raja, I think.
On the charts, Kush?
Oh, yeah. Very exciting because the recovery after that long phase of consolidation, negative biased consolidation, is finally coming to an end. So if you want to play momentum, I would suggest continue, with the excited trade. I think 475, about 510 also very much on the cards. But if you want to play the recovery, which is just starting out, I think Amara Raja setting up beautifully yet again. So positionally 850 target, and on the upside, not surprised about 1020. 1100 levels also very much on the card. So both of them are shaping up very well.
Okay. We spoke about a supply coming through, and LIC is the mega one. Of course, the offer for sale by the government, and the government looking to raise as much as 31,000 crore rupees through the stake sale of stake in LIC. And because of the pricing of this and the floor price, it's opened gap down, or likely to open. Let's bring in Sharad to get you more details on what the share sale is about, how much is being sold, and what the price is. Sharad?
Well, yes, Alex, almost 6.5% stake. If you add the green shoe option, that's there on the block. Government likely to sell that. Base issue is, of course, 2.5%. Government currently holds 96.5% stake in LIC. So, of course, that SEBI rule which has come in, they had asked for LIC, that kicks in about getting their minimum shareholding to 90%. Now, the floor price is at 382 rupees. That means it's at a 10% discount to the closing price in yesterday's trading session. Government is expected to raise nearly 31,400 crores if the green shoe option is fully utilized. Also, the FY27, the OFS momentum has been strong. Government has already raised 20,272 crore rupees. FY27 has already surpassed the FY26 collections, and this would be the highest OFS collection since FY20. So imagine there's 20,000 crore this side and 31,000 crore coming in from LIC. FY27 OFS details, of course, we are having Coal India, NHPC, GIC, RE, as well as IRFC, Cochin Shipyard, NLC India. That's where they have actually sold, or you could say government has raised money via OFS ranging between 1 to 5,000 crore plus for the deal. And let's look at the OFS trend also, how things are panned up. We have taken the data from FY21 till FY27 included, and this would be the largest when it comes to the OFS proceeds. This I'm talking about FY26 also, it will be much higher, and FY27, look at that number, 51,680 crore rupees. And the recent government OFS activity also, let's get you. LIC was the largest OFS in FY27, Coal India, NHPC, GIC, also sizable stake sales, and government is increasingly using this as a divestment. But what to watch out for ahead is LIC OFS subscription response, how that comes in, potential exercise of the green shoe option, further PSU OFS launches in FY27 it's expected, and whether FY27 will be a record year for OFS or not. So a lot of action happening, a lot of supply in the market now.
Thanks so much, Sharad, for that. The question is, would you get in? And I'm not going to ask the technical analysts on the table on the show because that momentum has been missing for quite a while for LIC. The question is, with that increased supply and more trades likely in the future, right? Because that liquidity comes through, the free float increases, would you say that it's a good time to get into LIC?
Yes, 100%. For a long-term investor who doesn't worry about too much of momentum in the near term, and he's a real long-term investor, in all sense, it's a great price. It's a 0.5 times price to embedded value for a company which has actually done very well in a PSU space. And so I would say that it's a clean buy at this price. And just to add, till May 27, government had to do a free floating of 10%. If this 6.5% gets sold, then they'll achieve that. So till May 27 at least, you will not have any further offering from government.
But if I remember correctly, there was a relaxation that the government has on LIC. They can take their time on...
Yeah. So they can, that is what I'm saying, that they can have, if the 6.5% gets now sold out in this OFS, they have time also.
Sure. The only, and very quick answer here, because we'll talk about few other stocks as well. Life insurance as a pack has done absolutely nothing. So how long is your definition of long term here?
No, in my view, LIC and SBI Life both have a fantastic parent advantage. Like SBI Life policies must be sold to only 5% of SBI's customers. So they have a huge headroom, I would say. So SBI Life and LIC are the PSU insurers, life insurance, I would say. Those are great buys from long-term perspective.
हमारे एक व्यूअर ने अभी फ़ोन किया मुझे, बोला मेरे पास 10,000 रुपये हैं, LIC में डालूँ या ICICI बैंक में?
Tough question.
Tough question.
Parag bhai, at least say 50-50.
5,000 दोनों में डलवा दो, इतना tough है तो।
ठीक है, but see, it depends on your horizon. If your horizon is, for example, say 1 year and above,
18 months.
18 months, yes, then you can divide.
Divide.
But today, because LIC is the
8%
price is down. That's why I'm
You're taking advantage.
Yeah.
चलो
Okay.
ठीक है, I'll remember this date, 4th August.
4th August, 5,000 इधर.
Splitting, हाँ.
Splitting between ICICI and
अगले साल
LIC.
देखेंगे.
Very good. Your viewer will call you in 18 months. I'm pretty sure.
Definitely. G shipping. I don't want to miss this one on the charts as well. Ruchit, with the pre-open surge that we are seeing already, 13 to 14%, would you say book profits, or would you still be a buyer of this one because it's still slightly away from the recent highs?
If they're already holding the stock, then I think one should continue to hold and not book profits over here. Stock has already gone through a corrective phase from 1750 to 1350, and now it's resuming its uptrend. So hold on your existing portions. For buying, the stop loss would be too big if I buy, recommend buy 30-40% higher. So if you get any dips, maybe towards 1500 levels, if not today, then in the near future, then the risk reward ratio would become favorable to take a fresh buy over there.
Okay, Hiral pointed this out earlier today, and this is Ather Energy. For various reasons, the electric two-wheeler companies are doing well. And Parag Bhai has spoken about this in the past as well. Bajaj Auto, his favorite stock outside of ICICI Bank, I think. And the fact that Chetak has actually moved into EBITDA positive, it controls a 22% market share, all positive. But Ather Energy, pull that stock up. It's reacting to its numbers, very strong set of numbers. On the charts though, would you buy right now?
No. Don't buy now.
You wouldn't buy.
इतनी बार recommend किया है, we've said that this is a good stock, buy on declines, all of that. Had you asked me, should you sell right now because it's opening 5% higher? My answer is no.
Okay.
Good momentum, good traction, already paid its dues. Rebounding from the 20-day moving average. It's good. If you see in a very broad time frame, it might seem like a vertical jump, but from a smaller time frames, it's had its round of profit bookings. So continue to hold. I would in fact suggest hold this, but trail your stop losses to about 13.10, 13.25. If there's momentum and building up, why not try it?
Okay. DOMS on the other end of the spectrum, reacting to numbers as well, is down as much as 5%, and 20+% dip in the bottom line is what the company has reported. On the charts, Ruchit, what would you do with a DOMS?
Stock is already an underperformer. Since the month of January, in every pullback move, the stock resists around its 200 EM and it is not able to surpass that. Is now around 2350. So I think already underperformer, not able to surpass its hurdle. So that underperformance could continue. So better to avoid any kind of bottom fishing. If existing positions are also there, one should look to make a switch to some other name.
Ruchit, Titan quickly, it's down about 1%, likely to open lower. Would you use any opportunities of a dip to buy into the stock? The results are imminent.
Overall trend is good, but if you get it towards this 20-day EMA, which is around 4750, 4800, then those would be good levels to buy.
Okay. Apart from these, few of the other names that we want to look at is even KEI Industries, which has reported numbers. That's in focus. CG Power is seeing some good momentum. Power Grid, SAIL, a few of the other names. On the losing end, you have DLF again reacting to numbers as well. That stock is down a little over 2%. Anything, Kush, that you like or dislike from the real estate pack as well? Because again, that's got a little off action right now over the last couple of days.
I haven't liked the real estate pack for a while, except for maybe, the Phoenix Mills and the Oberas of the world. So even now, they're in a void.
Okay then, so how will we do this morning is the key question. We may start off slightly somber, led down by the bank nifty, but could it be deceptive? And could we actually have a decent showing during the course of the day is the question. Here's how we're starting off. 0.5% lower, and I will get the usual suspects out here. I think it's the banks, and a big spurt yesterday for the Nifty, some bit of a cool off, not unwarranted, not surprising, completely fine. Let's see how the day shapes up. For now, banks are leading the charge lower, but the breadth is positive as you can see. 1167 advances, 2584 declines. The market per se is not doing too badly for itself. The Sensex in the green, by the way. Look at that dichotomy too. This is the dichotomy reversing itself. Yesterday's dichotomy reversing itself, if you will. Now, bring up the mid cap and the small cap indices. 1/3% lower for the Nifty mid cap, but the small cap is in the green. Bring up the heat map now. and show you what's moving and what's not. We'll have the Nifty heat map. The Sensex map may be slightly different, and I think this will change, by the way. Keep that in mind. But what is correcting? Titan down 2%, Bajaj Auto, Grasim, HUL. These are stocks that usually don't come in the top trading gainers or losers on open, but we're seeing this today. Could it be a reflection of what happened in the last half an hour, 45 minutes yesterday, and as a result of which this is happening? Maybe, who knows? What's doing well? Adani Enterprises and Adani Ports up 0.5% apiece. Trent, Bajaj Finance, Tech Mahindra. So not too much happening on the index per se. A lot of pain, if you will. Maybe, just maybe, this will reverse. Let's wait and watch. Alex will have better luck with what's happening at the broader end of the spectrum.
Yeah, absolutely. So let's see how that works. Let's pull up the sectoral heat map just to take a look at how much green there is on the screen, and it's likely reflecting the benchmark, and that is in fact the case. Most sectoral indices are trading in the red today. Metals just about holding on to green territory, and so too is the energy pack. On the bottom of the screen you have realty, where money is being taken off the table. FMCG, Bank Nifty is losing about 0.9%. We'll have to go back to Kushbura to find out what the setup is after this kind of an opening, because remember, he's talked about long positions in the Bank Nifty as well. Private banks losing about 0.8%, so too is the Nifty IT. Let's talk about individual counters, and we spoke about how there are quite a few exaggerated moves today on account of the earnings and otherwise. And let me start with GE Shipping, the very definition of make hay while the sun shines. You have freight rates that have gone up, and that is reflected in the Q1 numbers for GE Shipping. KEI Industries reacting to a pretty positive set of numbers. Stovecraft as well. Induction cooktops, when there was a bit of a shortage in gas availability, that has benefited as well, and they've recorded stellar set of numbers. Gulf Oil, let's read through the list as well. Restaurants, Brands Asia, Sami Hotels not doing too well at this moment. KC International as well losing ground. But let's pull up Gulf Oil if we can. Restaurant Brands Asia, Ganesha Ecosphere. Okay, we don't have those. So let me just talk about Gen Resources and Texmaco R&E. These are reacting to weak numbers. So too I think DLF and DOMS will be losing ground. DOMS in particular, PAT is down over 20% and reacting negatively. Positive updates, a few coming through beyond earnings. You have KC International that has gotten order wins. You have Sami Hotels that is down about 4% or so. It's set to raise funds via equity and debt enabling provisions. Then you have the supply that is coming through into the market. You have LIC, you have Meesho, and you have Paytm. Let's pull those up individually. LIC rebounding a tad bit from the lowest point of the day, but still losing about 7.4%. Not too much of action in Meesho or Paytm. Both of them up in the green. Paytm, of course, is also likely reacting to the MDR update. The stock was up 5% and building on those gains. So despite the pressure of supply coming through, that is being absorbed quite comfortably. And beyond that, you have Dabur that has come off the low point of the day quite considerably. So FSSAI has issued orders with regard to the 100% pure tag. Let me just bring back Gulf Oil if we can, and Restaurant Brands Asia. Okay, these are stocks that are reacting very sharply to results, particularly Restaurant Brands Asia. This is something that Hiral pointed out to you, and it was a thumbs up on our list as well. Ganesha Ecosphere, decent update on the quarterly numbers, and it's up about 0.7%. But Hiral, I think I've captured quite a bit of the earnings action. Anything that you're spotting?
I think the only thing I'm spotting, Alex, right now is the Nifty 50 rate that we saw at 3:15 p.m. yesterday versus the Nifty 50 opening rate today. Exactly the same. 24,600 was the whereabouts where we actually were at in terms of Nifty 50 in terms of yesterday's session at 3:15, and after that, in that 15 to 20 minute window is when that 200 points surge came in. The question I have right now is, then are we actually supposed to ignore the second closing rate and look at 3:15 as the rate to take cues for the next day opening? That's the question I have, Kush.
And the other thing is, please let's pull up the Sensex as well while we're at it.
No, I mean, see, Sensex, there was no...
No, I understand. Yeah. That's why I'm pointing it out.
We will come to that as well, but I just want to look at this one. Look at the rates at 3:15 p.m. on the charts as well. And I think Kush has something to share on this. And then let's talk about the Sensex divergence that Alex is pointing towards.
Okay, so First up here, brilliantly identified. Now let me just take a minute again here to show a few pointers towards this. Okay? You rightly identified Nifty at 315 was at 24,573. Look at Nifty right now, 24,611. For me, Nifty is up by about 40 points and not down 160 points.
Yes.
Okay? Bank Nifty was at 57,680. Right now, 830. So for me, Bank Nifty is up nearly about 200 points, 170 points. So this is actually for me positive. Now let me bring up a few other data points to support that. Bring up Nifty futures. If you see Nifty futures right now, which went into a discount, right, can we get Nifty futures?
This is a spot.
Fair enough. So if we get Nifty futures, which went into a discount because of the closing, look at what is happening there. It's actually up 0.1%, 27 points, right? That's exactly what I'm saying. So Nifty is not negative 170 points. Effectively, it's up
taking
140
cues from
points.
the 315 kind of the level right now in terms of opening rates as well, and that's what we need to figure out now.
One last point that I want to bring up. Bring up the Nifty heat map. Okay, bring up the Nifty heat map. See what's happened there.
Let's get that on the wall, simply because the heat map out here will not be legible. So if we can get the heat map on the wall, and then Kush can make his point. Kush, you want to walk over there? So happy to do that as well. Yeah, but let's go there. No problem.
My wall walks have always been spontaneous ones. Bring up the Nifty heat map, right? You will see a major divergence because a lot of the stocks from the indices, right now about 40 out of the 50 are in the negative, right?
Right, Kush.
Perfect. So what this is basically the cash effect. Now counter this with the advanced decline ratio. I know it's just been 5 minutes, maybe a little under, okay, 7 minutes. Bring up the advanced decline ratio chart or the number if you can. These are the stocks, broadly speaking, which were not affected by cash, broadly, right? So you're seeing the advanced decline positive. Does this look like an index which is about 170 points down? It does not have the fragrance or the smell of that. So my point, this is an adjustment to the cash. Don't worry. Look at the last traded price for Nifty at 315 yesterday and then make your bets. This is not a bad move. Also, by the way, the PCR was already at 1.4 yesterday, remember? So some bit of cooling off was anyway to happen. So if Nifty dips below 24,573, from there on I will start considering profit booking. This is just an adjustment.
I wonder what Ruchit thinks of it.
Yes, absolutely.
Yeah, we should check with Ruchit Jain as well. Ruchit, what do you think about the move and what we're speaking about? Essentially, if you account for yesterday's 200-point move at the last settlement time for the benchmark Nifty 50, and you remove that from the picture, we're up 50 points.
Yes, absolutely. And no, I think the clear pictures, if you want to look, then look at the futures prices rather than the spot prices today. Because the adjustment is there in the spot prices, that after 3:15 p.m. What we saw yesterday. But Nifty futures is up by 35 points from yesterday's close. Bank Nifty futures is up by 82 points from yesterday's close. So clearly, there's no point looking at the spot and forming a view or creating any kind of panic about the market's direction. So overall market trend seems to be positive, and it's just that due to that adjustment, because of which we are seeing the spot prices, not actually conveying the true picture.
Just to drive home that point, I want to do a split chart, if we can, of the Nifty 50 and the Sensex. And at this moment, as I look at the screen, the Sensex is up about 111 points or thereabouts. It's up 0.2%, while the Nifty 50 is down about 0.6%. But if you account for what we were speaking about, and you look at the 570 closing, I think at 315, 24,517 or thereabouts, it would reflect the same kind of a move for the benchmark Nifty 50 as well.
Okay. Well, from all of these technical conversations, Parag bhai, which long term it doesn't have an impact per se, right? But I just want to ask you, maybe we haven't spoken with Parag Thakkar about the shipping companies.
Yeah, we haven't.
Parag bhai, shipping companies, so Great Eastern Shipping and maybe even SCI, because if Jesco has done this, SCI may do that, and RBA. With the kind of numbers that it had. So two names on your.
So first of all, on RBA, Restaurant Brand Asia, the same store sales growth was 12.8%, which is amazing. And if you remember, we discussed this Mesas Bectors. One of their businesses also supplied this buns to QSR. So and that is also going to report good numbers in my view. So I'm just correlating both stories that QSR is picking up. In fact, yesterday we saw good move on Jubilant Foods also. And Restaurant Brand Asia has done phenomenally well, actually, in India business at least. Coming to GE Shipping, of course, the dry bulk rates have come off in Q2. So this numbers might be the peak of the earnings, but management is excellent, superb management, and balance sheet is net cash now. So basically, it reduces the cyclicality. But I would say that earnings might have peaked out. That might be the story. Tanker rates have not fallen; they are still elevated, but we'll have to see that. And this is a very highly cyclical business.
Which is what you were pointing out. The mid 60s margins that they have experienced are generally the peak that you would see.
Guys, I'm going to come back. Sorry to bring the cash conversation back because
we have a minute, yes.
Because the only reason I want to do that is look at Divi's Laboratories. That stock is down 2.3% on NSE, and the same stock is up 1% on BSE. My question is, will your F&O stocks see that divergence in terms of pricing on NSE and BSE? And two, what happens to the arbitrage opportunity that arises over there?
No. So, okay, so at closing, this might have an effect. Right now, what you're seeing in terms of the percentage points might be divergent. But remember,
the pricing is not.
Yeah, the pricing is exactly the same. So I don't think that is going to play out once the market opens. At close, yes, this will distort a few things, and that's exactly what I mentioned in the pre-opening commentary, right? That the arbitragers, the delta hedgers, the VWAP strategists, these guys are going to have a tough time. Especially, and also guys who write options. Guys, sincere request for a day, 2 week till the time this settles. Please don't carry forward your positions, especially on expiry day. Wind them up at 3 p.m. Don't even wait till 3, 5, 3, 10. Sincere request. This we don't know how this will play out. So let it settle down.
I mean,
this is just an example.
No, but it's described pretty well. The prices are effectively the same. It's just that the percentage is different, and so therefore it's not really an arbitrage opportunity. I think it's time now to thank all of our guests. We've got Ruchit as well as in studio Parag and Kush. As always, thank you so much for taking the time. Pleasure having you. Sarda Energy is the stock that we're focusing on now, and it's delivered its highest ever quarterly EBITDA and profit despite outages and maintenance shutdowns. With its energy business continuing to drive earnings, the company is now targeting or rather planning to double both its power capacity and EBITDA over the medium term. We're going to be speaking with the management in just a bit, but before we do, let's head across to Varsha. Varsha, what are the key aspects to focus on? When does that capacity come on stream?
Well, overall, if you see, company has delivered highest quarterly EBITDA and PAT, and this is coming despite outages and maintenance shutdown. But the profit spike that you're seeing is, of course, on the back of one-time gain, which boosted profit. Q1 PAT, if you see, included 110 crore one-time benefit. Energy business, if you see, remain the main growth driver, contributes almost 70% to the EBITDA. Stable plant load factor and better realizations supported earnings. Overall, if I were to talk about the growth plan, so they plan to double SKS thermal power capacity from 600 megawatt to 1200 megawatt, and they also target to double EBITDA over the medium term. So overall, if you see energy, then mining, and the clear roadmap that the company has, and the capex the expansion that they are doing surely should benefit over the coming years.
Okay, so interesting counter. The stock is up nearly 1% as well. But let's get in the management to talk to us in terms of the quarter gone by. Nilay Joshi, Executive Director at Sarda Energy, joins in. Nilay, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. If you have to actually look at the first quarter and take cues from the impact that we've seen from the geopolitical perspective as well, to a certain as to what FY27 will look like. What are the key positives that you're tracking, and what will be the negative aspect that will get carried forward?
So, see, if you look, for us, the two main levers are the energy demand and the steel demand. And if you look at both the levers, both demand side, both of them remain quite robust. Energy prices, in fact, characteristically, even in the second quarter, they are they're holding good and they are strong. So on the exchange, so we remain very positive for the full financial year. And even steel side, the demand is holding up, and the prices are also with a mild negative thing. They're quite okay. So we are very positive for the entire year. In fact, I think if once the war settles, the metal demand should be quite robust. So I am very positive for the full year.
Okay. So essentially, Nilay, what you're saying is that quite a bit of what you reported in the first quarter is replicable in the rest of the financial year. We'll come to the full year picture as well. But specifically on the power business, you've contracted about 380 megawatts out of a total of 710 megawatts of sellable capacity. What is the timeline to contract the remaining capacity?
See, we are as a business, we would like to have volatility out of the numbers, and that is the reason we are kind of tying up the long-term, medium-term PPAs. So SKS out of 540 saleable, 327 is what is tied up, and we are trying to see if during the financial year we can kind of tie up a larger part of it. On the hydro side, 3 projects are tied up in long-term PPAs. The fourth one, as of now, it is on merchant. So we'll see what has to be done during the year.
Okay, so Nilay, energy as a business, 70% contribution is what it has done in terms of EBITDA in the first quarter. Now, my question is this kind of a earnings mix sustainable, because the power demand has been substantially high this time around? And 2, if not, and if mining and say metal start contributing higher as well, what does that do to your operational matrix? What does that do to your margin profile?
No, so couple of things here. See, on the power side, if you see, even in this quarter, the realizations are around 5.7, 5.6, 5.7 on an average on the thermal side. And the PPAs that we have tied up are in the range of 5 to 6. So I don't see any major impact of PPA getting tied up, because that's the range that we are looking at, 5 to 6, between 5 to 6 rupees a unit. As far as the energy side of the business is concerned. On the mining side, that is a business that is ramping up. As of now, the thermal coal mine, we are largely utilizing captively for power generation. And the first high-grade coal mine will start from the fourth quarter of the current financial year. So, and we are hopeful of better realizations because of the better grade of coal. So I don't see that any major impact of either tying of PPAs or mining should come, because all the mines are high-grade coal mines, and we expect better realizations there.
Okay. Mr. Joshi, good morning, Neeraj Shah here. I would love to know that the view that a lot of people have, that this space is actually becoming a bit structural versus being cyclical. If indeed that is the case, I would love to know what is it that you anticipate the numbers to look like for, let's say, your business over a 3-year period, from where you are right now at the start of FY27 to where you could be at the end of FY29. Possible to hypothesize that?
See, we have already given the first part of your question, yes, there is, we also feel, while these are early years, but we also feel that there is a structural shift in the sense that the energy demand is very solid, and the way the economy is planned to go because of various manufacturing and AI and data center related investments, there should be robustness in that, and that should be a structural shift in the energy side. So that, yes, we also hold a similar view, and that is why if you see the expansions are happening in that fashion, that we are doubling the energy capacity. As far as the numbers are concerned, you look at it, we have already kind of given a 5-year guidance, not a 3-year guidance, but a 5-year guidance, where we are trying to double the EBITDA over the 5-year period, say by 2030, 2031, and it's not something which is like it's a linear function, in the sense that you will see one mine coming up in this financial year, another one coming up in the next financial year. So you will see constant growth being delivered on those numbers.
Okay, Mr. Joshi, Much appreciate this candid answer. Thank you so much. Hopefully it's even more structural than what you are penciling in it right now. Early days as well. I agree completely. But thank you for joining in today. Really appreciate your time.
Thank you.
Okay, on to a really important conversation. And Dixon came out with its numbers, but it is not just about numbers when it comes to Dixon now, because when we are wanting to do this conversation with Saurabh Gupta, who's the group CFO and is on the board of Dixon, the interesting thing to note is that in this EMS space, Dixon is the only company which has not raised funds post the IPO, whereas capital raising is becoming an integral part for a lot of other players as well. So we are trying to talk about all of this, and this particular aspect, we'll get in my colleague Puneet in a bit to talk about it, but let's welcome in Saurabh Gupta first on the show to try and start off by talking about how is it that the year has started off for them and what is it that Dixon could likely do over a period of the next 12 months. Saurabh, good morning and thank you so much for joining in. This is Neeraj here. And I wonder if 12 months is too long a time frame to talk in the current scenario, or do you believe that based on what you've done at the end of Q1, you will be in a comfortable position to tell what is it or how is it that the year has started and what is it that Dixon could do for FY27 as a year?
No, absolutely. Thank you, Neeraj. Thank you for having me. So we have our strategy clearly laid out across the various verticals. Of course, short term, there can always be challenges on the commodity cost, the inflationary pressures across the supply chain. But that is there for across all the entire industry. But we feel that we are sitting on a very large opportunity. Clearly, electronic sector, which is presently around at $135 billion in India, is projected to grow almost 3 times by 2030. And the EMS industry within that is closer to $35-40 billion. With the kind of companies like us attaining a scale and size, a strong government policy framework, China plus one happening, the geopolitical tailwinds in India's favor, clearly we feel that we are sitting on a very large opportunity, and we definitely hope to doubling our revenues in the next, hopefully by next financial years, by next couple of years actually.
Okay. The other thing I want to check is, Saurabh, and this is something that's playing out globally, right? In the handset space, mobile handset space in particular, but also for laptops, the increase in the memory costs and the projection of the increase as well. So, of course, this is a pass-through effectively for you and your realizations actually go up. But for the buyer, is it going to affect demand? And from that perspective, will it eventually have a bearing on volumes? Have you thought about that?
Yeah, absolutely right. I think so, especially in low-end to medium-end smartphones, where the prices are going up by almost 30-35%, because the memory prices have gone up by almost 5-6 times, and memory is almost a large component of any smartphone. So definitely it is impacting the demand. And as per the various reports, industry reports, the overall smartphone market in India is expected to contract by almost 10-15% this year. So from 153 million smartphones, it should come down by 10-15%. We as a company we will be hopefully maintaining our market share. In fact, we'll be gaining our market share and we'll be doing almost similar volumes ex of Vivo this year. So which means definitely we have done well in a declining market. If we are able to maintain our numbers, I think so we have broadly done well in this segment.
Okay. So Saurabh, a couple of things where if someone has to only look at the first quarter earnings and then gauge, the question will be, where is the scope of improvement coming in there? A lot of brokerages have actually pointed out the kind of growth that one should look at on the back of the multiple partnerships that you have in place. You have the PLI 2.0 which comes in as well. You have the MPMS scheme that could probably boost exports. So multiple positives that we're talking about. If you can shed some light on these 3 aspects. And 2, in consonance to this, should investors make their expectations right that the margin profile is not something that will see that substantial improvement in spite of all of these positive triggers, because that is going to be a slightly longer gestation?
Yeah, absolutely. So across the verticals, so mobile continues to be the largest trigger for our growth. Vivo hopefully should get fructified and should get consolidated into our revenues from Q3 onwards. So we will have 6 months of performance for Vivo, and it will have a significant contribution in next financial year. As far as IT hardware is concerned, again, we are gaining a large market share in that particular segment, and we feel we'll have a large market share across all the categories of products of laptop, tablets, all-in-ones, and desktops. And this year, we are looking at a significant growth in revenues as against last year. Also, our JV with Inventec should be operational, which would also help us to get into high category products like servers. Thirdly, on the telecom side, we already have we have a JV with Bharti Airtel, and we're already doing the CPE products. Now we have also started manufacturing microwave radios for large US based client, and we've also got into Gemtech with a JV with a Taiwanese company called Gemtech, which is basically for optical transducers. That basically captures the growing demand both in telecom products and the data centers. Refrigerator vertical, we are expanding the capacities from 1.2 million to 3.2 million across categories of frost-free, side-by-side, deep freezers, visi-coolers. Again, it's an ODM business. It's a high-margin business for us. On the washing machine portfolio, we are expanding beyond semi-automatic and top loaders. We are getting into the front loaders category, and also looking to get into offering our own ODM solutions on the microwave ovens and the dishwashers. And as far as the lighting portfolio is concerned, our JV with Signify is looking very good. We have kind of taking a larger market share in the indoor lighting portfolio. We are getting some export opportunities there, and also looking to now to get into the professional lighting. So all around across all the verticals, we have a plan for growth. We have a plan for backward integration. We have a plan for exports. So yeah, we think we are sitting on a very large opportunity.
Absolute large opportunity, and I think sort of the fact of the matter is Dixon is the only company which has not really raised any funds post the IPO versus the other EMS players. And before we take that conversation forward as well and speak to you about it, my colleague Puneet Javeri, who tracks this space pretty closely, has done a complete analysis of the EMS space where Dixon is the only company who has never raised funds post the IPO. Let's understand from him what has actually transpired in this space and what is it that Dixon is doing differently versus the others as well. Puneet, over to you.
Well, thank you for that. We'll be looking at three key metrics today, but very quickly on the context of what we're talking about, because recently Amber as well as Sirma SGS have both gotten an approval for raising funds. This is after doing already a round of fundraise in the last year, and Keynes as well as Sirma have also done already one fundraise. So this will be the second line of fundraisers via QIP, and Dixon, as mentioned, is the only one that hasn't done so. So when you look at Sirma, they raised almost 1,000 odd crores at 699 rupees last year. Of course, the stock has appreciated post that, but they will be looking, they already have an enabling resolution for another 1,000 crores. For Amber Enterprises, 1,000 crore QIP last year at 7,900 odd. So stock's not gone too much in the last 1 year. But Dixon essentially hasn't raised any kind of equity funds since listing way back in 2017. So what is the company doing different is the question. The first one is on return on capital employed. So whatever the money has been invested in, essentially it tells you how much profit a company essentially generates from every 1 rupee generated. Of course, the ratio is the higher, the better. And when you look at the 3-year comparison, that has materially improved from Dixon to go to 42%. The others currently are in the mid-teen range, and that has been the case for the last 3 years. When you look at the cash conversion cycle, that is the other important question, because how long is it taking for that money for Dixon Tech to get converted to actual cash? They currently operate at a negative cash balance. So essentially, before even a sale's done, they have the money in the bank, and that's minus 7 days for FY26. Look at the payers. They are much, much higher at 48 to almost 200 days in terms of cash conversion. And finally, the third key metric that we speak about, the cash flow to operating profit. That also has seen a material change for Dixon from 100 to 120 odd %. That has materially also reduced for Keynes Tech, while a trend is visible in newer segments. So Amber is entering newer segments, hence that has gone down. But for Sirma, that has continued to improve. But clearly, on all three metrics, Dixon Tech gets a tick mark as of now.
Well, the group CFO at work, Saurabh, should we say that? Puneet, thanks so much for this fabulous set of numbers, and quite astounding to see what Dixon is doing. But Saurabh, CFO at work, I mean, how are you doing all that you're doing, and what are the implications of this? Would you not need capital for a really long time?
Yeah, Dheeraj, we feel confident. See, any business, and more so our business, where the margins are very thin, It's a B2B business. So capital allocation is the key, is the single most important factor. So you have to have that utmost discipline in allocating capital where you can generate those paybacks of 4.5 years on any new vertical linked to our core of electronics. And any capex that we do on automation or backward integration should have a payback of 3 years. So that is the kind of discipline that we have followed. And current asset management is very important because it's a low margin business. So you can't afford to get your current assets out of control. So one, we have to ensure that we have enough order book across all our factories and verticals, enough customers with us so that we are sorting out our infrastructure to the maximum. And second is the management of current assets. So that we have done successfully, and we have grown from say 2,000 crores to last year 50,000 crores without compromising on the cash flows, balance sheet or the ROCs. And we feel that we can go from 50,000 crores to 1 lakh crores hopefully next year. Again, without compromising and without raising any further equity. We have now reached to a stage whereby the internal accruals and also the good work on the working capital should take care of our capex. In fact, we should start generating free cash flow, a decent amount of free cash flow from this year.
That's very interesting. So Saurabh, therefore, just to drive home that point, it's unlikely that you will need to raise funds anytime soon to pursue everything that you're pursuing right now in the capacities that you are currently building out, in the products that you're venturing into.
Yeah, we feel confident about it.
Okay.
It's very interesting. Sorry, just remember that for a company to do the free cash flow generation in a business that Dixon is in, and at the scale at which they will probably do it, is quite something, right?
It's quite something. I think just one thing I have for Saurabh is, you've won the game in terms of scale, right? The question is, when do you actually start winning the margin game as well? I know that was my question earlier, that is something that we need to ignore, but what do you have in mind in terms of your projections as to win that margin game now?
So there are three levers for a margin expansion. The largest lever for us is, of course, the backward integration play. So we already acquired this company, QTech India, last year for camera modules. So now we are really expanding the capacities there, putting up capexes for deepening the level of manufacturing. So that should lead to margin expansion. Then our JV with HKC on the display side for automotive, mobile and IT hardware displays, laptop displays should be up and running by Q4, and then it should ramp up by hopefully next financial year. So both this backward integration play should lead to a significant margin expansion because large part of that will be captive to our own requirements. Secondly, increasing share of ODM business in washing machine, lighting, as well as refrigerator business, which is high margin business for us, where we are offering our own solutions. They should lead to margin expansion. And overall, we feel that at an overall level, the operating leverage will keep kicking in because the fixed costs will keep getting absorbed on much higher revenues. So these three we feel are large margin drivers for us. And also we feel this mobile PLI 2 should trigger and should nudge the brands to get additional exports from India. And we are already seeing a significant traction from two of our customers. So once you get those exports, which means more effective utilization of your infrastructure, and that would be more margin accretive for us.
Got it. Saurabh, is there, because you look at the business long term, is there something that you believe the street is missing entirely, either in the kind of return ratios that you will deliver, or in the kind of margin performance that you could do, or in the kind of fundraise requirements that you don't have, but the street may believe that, oh, maybe you do? Is there something where the street is missing the point that you're trying to drive home?
I can't say much, I think so, but my sense is they are slightly bothered about the margin, what I could sense in the last few days. But so I can only tell that this is only a temporary thing. Margin should get restored starting next financial year, and 28-29 there should be significant growth in margins. So it should start getting restored from next financial year. Also, we are also working on some acquisition opportunities in the precision components. We feel those are higher double-digit, 20% plus margin opportunities, and we have taken a call to get into some high-end specialty EMS business, and we are looking for some acquisition opportunities there.
Sorry, I just want to drive home that point before you, and Hiral has a question for you as well. But you were talking about the increased share of some of these high margin products, and you're talking about being acquisitive as well, right? So and you're saying that the margins will improve progressively over FY28 and FY29 as well. So if you were to describe the kind of share that you would see from these various products that you're manufacturing projecting in FY29, how it would look versus how it is right now, Saurabh, how would it be?
I would say in absolute percentage, it may not grow much because mobile and IT hardware, which are mostly on the prescriptive side, will continue to be the largest drivers for growth. But in absolute numbers, both this washing machine, lighting, refrigerator business, and this high-end specialty business, in absolute numbers, would significantly go up.
Sort of my question to you is, from the industry perspective as a whole as well, if you're talking about EMS as a business in India, which is entering a golden era that everyone is talking about as well, and if you have to look at Dixon's revenue and profit pool, would it be led by assembly-led, component-led, or export-led kind of a revenue mix? Where do you see that in the next, say, 3 to 5 years?
So it will be largely component-led and export-led. So next trigger of a growth, so it will be one, of course, there's all these partnerships, JVs that we have done should now start contributing significantly to our revenues. Secondly, we feel we'll keep taking increasing share of exports across some of the verticals. And third is the large backward integration play, both in mobiles, whether it's your displays, whether it's your cameras, and also in the IT hardware, we look to get into SSD modules. We're also exploring opportunities for power supply, mechanicals. So it will be largely a large part of that will also be component and backward integration driven.
Saurabh, absolute pleasure speaking with you. Thanks so much for taking the time. Street is listening to what you're saying very closely, by the way, because the stock is above 14,000 as we're speaking right now. And absolute pleasure. Let's talk again soon. All right. That is the long and short of Dixon, and you heard it right here on NDTV Profit.
What also matters, Alex, sorry, just a small point, we don't usually do this, but for a stock of the size and the liquidity of Dixon to be absolutely flat and then move, because the street is listening in to what the CFO is saying about what Puneet said firstly, and then about what the CFO is saying about gross margins, about margins in general, and about maybe a couple of points that the street may be missing. So I think credit where it's due. I think what the management said is something the street has heard.
Three or four things stand out, right? The return ratios, and this is from Puneet's data that he's pulled up, it's better than the rest of the industry. The fact is that they haven't raised funds. Third, they don't likely intend to raise funds. Fourth, they're going to be acquisitive in areas which are high margin. And fifth, the mix is going to improve.
And the margin answer. And that FY28 onwards, the margins
will start improving. So that's the expectation that the street is absolutely taking it with a pinch of salt and saying everything is in place. This was the only link which was missing right now, and it's going to come.
It's large companies today,
It is.
First is Dixon, and now?
It is. KEI Industries. I thought that was a trick question, but it's not. It's actually pretty straightforward. This is a stock that's up as much as 6.6%, reacting to numbers. And let's take you through some of those numbers because they look pretty robust. You had a 23% uptick in the top line, margin expansion. Remember that Q4 was an improvement over Q3, and Q1 is a further improvement. So there is an improvement in the margins both sequentially and on year. The EBITDA uptick is as much as 53% and net profit is up as much as 40%. Strong growth in their core business, which is the domestic wires and cables business, where there's an uptick of as much as 29%. Let's head across to Mr. Anil Gupta, who is the CMD of KEI Industries, joining in to talk about what has occurred in the first quarter. Mr. Gupta, thanks so much for taking the time. This is Alex here, and good morning to you. Can you take us through some of the trends that you saw in Q1? And this is something that we're speaking to all of the managements about. How much of resilience did you experience in Q1, and how much of the performance is replicable in Q2 and the rest of the financial year?
Yeah, good morning. I think Q1 has been a decent quarter for us, and we have been able to grow by around 25% in our wire and cable business. But moreover the revenues, it is the margin expansion we have been able to achieve. Close to 13% EBITDA margin we have achieved, which was in the last year more or less less than 11%. And we expect that this margin expansion we should be able to maintain or sustain between 11 to 12% in this full year as well. As the demand traction is strong and in the domestic markets and as well as our export markets as well, I hope that the full year will be having decent numbers of growth in terms of revenue as well as the profits.
Okay.
Okay, Mr. Gupta, good morning, Neeraj here. And, I had a slightly, I would love for you to try and help me hypothesize this, sir. Simply because everybody is talking about how your business and the cohort of business which are in your space and a few others are going to be the key beneficiaries of the manufacturing renaissance as well as the data center boom that is to come into place. And the budget showed the glimpse, right? 21-year tax holiday, and therefore more people are setting it up, etc., etc. If you can help us understand, and please take your time, but if you can help us understand what would this manufacturing boom and the data center boom mean for a business like yours over the next 3 to 5 years? Because people know, broadly people bolte hain ki bahut supply aa jayega, but nobody is able to quite wrap their head around it. Could you please explain?
See, first of all, when the data centers will come up, so it will not just generate the demand from data center itself, but it will generate huge demand from the entire energy space. Reason is the data centers consumes a huge amount of energy. So we need to generate more energy, we have to transmit more energy, and we have to distribute more energy. Moreover, data centers requires energy sources from 3 different alternative sources. So hence, in the larger cities, wherever the data centers are coming, they are connecting the energy through underground cables. And even inside the data centers, when they are building up, there is a substantial demand of wires and cables inside the data center also. So the data center will generate compounded, growth of wire and cables. Then secondly, when the computer users grows up, data users grows up. So they also generate energy demand in the household and the commercial spaces. So this entire space of energy transition, energy consumption, in the producing energy, generating energy, and also the users like data centers or households will compound the growth of wires and cables as a whole.
So, Mr. Gupta, we are talking about the demand, which is very strong. Good morning, this is Hiral here. The next question that comes in is, what happens in terms of meeting that kind of demand as well? So, the market is actually closely watching out for the expansion that you have at Sanand. So, what is that commissioning timeline that you have in mind? And when will it actually meaningfully contribute to revenues? And does that mean, with the demand which is in place, with the capacity that you're setting up as well, probably this could be the beginning of another market share gain cycle for KEI Industries then?
You are correct. We have already commissioned first phase of our Sanand project in end of December, and now we are gradually ramping up and stabilizing the production there. And I think from the second quarter onwards in this financial year, we will see reasonably good revenues from the new facility. And in the balance of the plant, we expect to commission by March 27. So there will be a gradual ramp up in production and capacities month after month in Sanand, which will help KEI to grow in terms of volumes and revenues in the times ahead.
Gupta, just want to understand. So therefore, you're saying that the Sanand full completion will happen in March of 2027. It will be fully commissioned. So if you can give us a sense of the total capacity that will be added on account of the full commissioning, that's one. And two, therefore, in FY28, when you start off with a significant addition in the capacity, there'll be a dramatic shift in the way that your revenue will grow as well, right? So obviously there's a market. The question is, where do you see revenues in FY28 whole? And do you anticipate that you will be able to maintain the margins at the improved level? And you've traditionally done 14%. You've come to over 12% now. So are you expecting to go to that 14% number? And based on that, what are the EBITDA projections?
First of all, we have not done a 14% EBITDA in the past. It was less than 11%. So this is the first time we have been able to achieve 13% EBITDA, and I'm giving a guidance of 11 to 12%. So so the data has to be corrected at your end. Secondly, I can't.
Mr. Gupta, I was looking at the. Yeah, you're absolutely right. I'm going back as far as June 2023, and you've done 10 to 11%. This is the highest that you've. I must amend myself. Yes.
Yeah. So secondly, I can't quantify the numbers at the moment for FY28. So we are in FY27, and I believe that we are expected to grow more than 25% in whole year, or even more than that, by due to prices as well as the volume growth. So there will be a substantial revenue growth in this financial year.
So, Mr. Gupta, my question then is, you've delivered on the growth front, if you have to look at, and you've delivered on the margins front simultaneously in the first quarter, right? Will KEI Industries be able to narrow the gap with the largest player now? How soon will you be able to do that?
I think we will be able to narrow the gap with our other peers, maybe in the second half of this financial year.
Interesting. Okay. That's a quick takeaway for me as well. Narrowing the gap between the first and the second player in the second half of FY27.
Yeah, well, I was just, as we thank Mr. Gupta, I just want to thank him for taking the time out and explaining that whole data center piece, right? As simple as it terms is. And Mr. Gupta, one final request from our end. As time permits you, if you at any point of time in Mumbai come to our studios, we would love to do a whole explainer of what this whole piece could mean for a leading company like you, because I think it'll be tremendous service to a lot of investors who are still trying to grapple their heads around what growth can be over the next 5 years. So I heartily invite you to our studios whenever you can make it.
You can send us a message. We'll work it out.
Most certainly. Looking forward to that. Thank you so much for taking the time out. All right.
Thank you.
That's KEI. The stock is on a roll today, 7% higher as we speak, doing very well for itself, 6.3%, but doing really well for itself on very strong numbers. Margins at all-time highs. Take a break. Come back with a very special conversation with Pankaj Murarka. We talk about all that's happening in the markets and whether the anti-AI trade could actually be positive for Indian stocks. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Back with India Market Open right here on NDTV Profit. Just pull up the markets for you for a moment and just see what the Nifty is up to, because remember it started off much lower, but these are all anomalies because of the CAS system. It's recorded a little bit of lost ground, but the market breadth has looked okay, and a lot of individual names, KEI, Great Eastern Shipping, on the back of Great Eastern Shipping, Shipping Corporation of India, a clutch of other names are actually doing fairly well for themselves, so keep them in mind. Actually, Great Eastern Shipping is completely cooled off, so that's the other interesting piece out there as well. But this earnings season has looked solid thus far, and on that pretext or in that context, let's get in a special voice. Pankaj Murarka of Renaissance Investment Managers joins in right now on the show, and we are going to divvy up this talking point conversation into two halves. Pankaj, thank you so much for joining in. I want to first talk about the markets and earnings and what's happening at that end of the piece, and then we're going to talk about this whole global trade, the formation of bubbles, and when the pricking of those bubbles happens, as it eventually does, because mean reversion is the only truth, what happens to some of the other asset classes. I'd like to kind of divvy it up that way. Start off with the markets, Pankaj. Have you been surprised with the resilience of India Inc. in Q1?
Morning, Neeraj. The answer is partially yes, and partially probably I was expecting this, because we were in the midst of the first round of this war in March and April. We were engaging quite, with quite a lot of companies across spectrum, across sectors. And the one clear feedback that we were getting from companies was the underlying demand remains fairly resilient across the board. And I think which is what is got reflected in quarterly numbers so far that we've seen, that the demand momentum which got unleashed or post the GST cut, which acted as a catalyst, the demand in the economy has been holding pretty well. And despite a hike in fuel prices and global uncertainty, the demand is held through. And my inference from that is, and that's primarily because we're coming out of 2 years of underlying slowdown in the domestic economy. Effectively, that means whenever we've gone through such prolonged slowdown in the domestic economy in the past, what we've seen is there's always a latent demand that exists in the economy. And once you trigger that, once you have a catalyst which triggers that, the demand sustains despite cost headwinds or price headwinds. And I think that is what exactly is playing out. So you're right that earnings have been fairly resilient. And I think probably demand will continue to stay resilient going forward, because there's a lot of latent demand that exists in the economy.
Pankaj, hi, morning, Alex here. So as somebody that has watched the IT space so as closely as you have, what did you make of the entire debate that has been ongoing? So I think there are a couple of nuances to this whole argument, right? People said that the margin of safety is significant because valuations had come off so dramatically, and I think that catch up has already taken place. So I think it's ripe to get an opinion from you to say that obviously there's going to be a separation of the wheat from the chaff, but is that going to happen this year, or will you have to wait longer for that to pan out?
Interesting question, Alex. As you rightly said, IT stocks and software stocks globally and IT services companies, which are a byproduct of global software, got beaten down relentlessly in the last 18 months or so. I think what I understand and what I sense from talking to companies and probably looking at companies globally and some of the data points, AI is now getting into phase 2. Phase 1 of AI was all about building infrastructure. Mind you, just to bring in a context here, that whenever you have a big breakthrough fundamental technology, game-changing technology, frontier technology, last time it happened was with internet in 95, you need to spend, the world spends 4-5 years in building infrastructure for that. And during that period, all the infrastructure companies, this time around being the semiconductor companies, the hyperscalers, they see exponential growth. But now I think we're getting into phase 2 of IT, of AI, where companies, global companies, want to really, they have built their use cases and they want to adopt AI, implement AI at scale. And clearly, meaning the fear that AI will eat software is not the case. In fact, software still remains very much relevant. So from here on, I think while it will be a gradual pickup, but I certainly see a pickup in software spending and more importantly, global IT spends probably in the later part of the year. So I think some of it will be visible in the second half of this financial year, but it will become more prominent next financial year. Because I'm saying that it's been 4 years where discretionary IT spends have been held back. In last 30 years, I've not seen 4 years of discretionary spends not happening. So which also again leads me to an inference. There's a lot of latent spends which are being held back, and there's a lot of latent demand for discretionary spends in IT because companies are building use cases and wanted to understand this whole AI phenomena in terms of which models to use, how to go about it, and all of that. But now a lot of companies have done that. So I think probably it's all about implementing AI at scale, and which should be a significant tailwind for Indian IT companies. So I understand that these companies have had significant moderation in their growth prospects in the last 3 years, but we also have to see it in the context that this is unusual times. We haven't seen discretionary spends not happening for 4 years in a row in the last 30 years. But I certainly think all of that will come back. And when they come back, it really comes back with a very big momentum. So I think while it will still take 12, 18 months for that momentum to build up, but I certainly see early green shoots of discretionary spends and IT spends coming back in second half of this year.
Okay, so Pankaj, good morning, Hiral here. Would it be right to say that IT does become one of the sectors where you would see meaningful upside from here on, because your valuations are absolutely reasonable, and the way markets are panning out right now with the earnings trajectory as well, it's seeming that investors are not really chasing momentum, they're actually chasing quality companies now, and that's where the moat is going to be. So is this trend now reversing towards value? I wouldn't say value, but quality companies, reasonable valuations, and not really looking at chasing momentum now?
Absolutely, IT really sits in right in front of that. As you rightly said, I think globally also what we're seeing is a great rotation trade that's playing out. Last 12 or 18 months in equity markets globally was all about momentum. And I think that momentum has clearly peaked out from the kind of sell-off or corrections we've seen in a lot of these momentum stocks and in AI stocks, which is where the biggest momentum was. And what has happened in the process in the last 18 months is quality has become extremely cheap globally also and in India also. And I think there's a mean reversion that's playing out where money is moving out of momentum and going into quality companies, growth companies, cash flow generated companies because they're pretty attractive, and IT is really at the front of it. And I think meaning valuations for sector at the sector lows few weeks back were back to where they were during 2008 global financial crisis. So all I'm trying to say is you get to buy IT companies at that cheaper valuation once in a 20 year. It happened in 2008. You get this opportunity once again in 2026, and you cannot miss that opportunity.
Okay. Pankaj, the other quick thing that a lot of your peer sets are telling me about is this whole precision manufacturing, whether auto Ang's diversifying into aerospace, defense, etc., or vice versa, and the kind of gross margins and the promise of growth that they are saying. I mean, Sona Comstar saying will grow 10x in 10 years, Sansera saying this, somebody else saying this. Are you present in this space? Why or why not?
Sure. Just one last thing on IT and then I answer this.
Sure.
Just to put things in context. See, whenever we have this kind of foundational technology, for the first 4 or 5 years, most of the money is made by the hardware guys. The same thing happened in internet era in 95. Then for the first 4 or 5 years, all the hardware guys and the telecom companies who were laying down the cables and the networking companies like Cisco and all of that made money. But over the 20 years after that, the money is made by people who provide services on that infrastructure. So I think we are in the fourth year of this whole AI evolution. So the last 4 years has been about hardware guys, but from here on, the next 20 years will belong to software, AI native companies, and services companies. So I thought I'll just complete that context. Coming back to your point on Neeraj, I think there's a definite opportunity there out there in precision engineering, aerospace, and some of the ancillary sectors. And the good thing is now Indian companies are graduating from being tier 3 to tier 2, and in some cases tier 1 vendors, and these are really really complex products with very deep customer relationship and very high level of engineering and precision engineering skills, and companies have invested like 5 years, 10 years in building these businesses. So I think there's very strong growth prospects for a lot of these companies, and more importantly for a sustained longer period of time as Indian companies become a meaningful player in global supply chains. And now that's India's manufacturing prowess clearly. We own some of these companies here, but having said that, I must say we would like to own much more, but I find valuation in the sector extremely rich in that sense. So probably for value conscious investors like us, probably we would like to wait out for more opportune time to be investing more into these companies.
Speaking of valuations, Pankaj, I think it's an opportune time for me to refer to this very interesting report or note that you've written on bubbles in the financial markets. One of the quotes that I think is very interesting, and I think our viewers will appreciate as well. It's the business of free markets to create bubbles and burst bubbles. Markets are good at doing their job, which is very interesting. And you've also said people often ask you about, is gold a bubble? Is IPO market in a bubble? Is AI a bubble? And you say, why are you asking? Isn't it obvious? Well, Pankaj, to most people it is not. But let me ask you about specifically AI, because you made some interesting points here. And we saw some elements of correction in Hynix, in SK Hynix, in Samsung, and the impact that that had on the South Korean market. What do you think about the various signs and the concentration we've seen play out in this AI theme?
As I said, one of the most, one of the classical sign of spotting a bubble is when it's really happening. One, valuations become very disproportionate, and secondly, everyone starts believing into it, and people don't, as you rightly said, people don't realize that it's a bubble. But when you step back and try to look at the big picture, you realize that it's so obvious. And I think there's something similar that's playing out in this whole AI world, where there are a lot of funny things happening. We know that at least for the frontier models, LLMs, they doesn't seem to be a business case because the revenue model is not in place, and on top of that, you have these Chinese low-cost models coming in, and for all the capex which hyperscalers are doing, obviously it's difficult to justify that in terms of economic rationality. It's more about people don't want to be left behind, kind of a thing. It's not economically, it's difficult to justify the capex, and the scale is really some.
I think we might just okay, Pankaj, you were making a point. If you're back with us, you were making a point about the AI bubble, but just to the point, and I think you were making a very good point. But isn't it true that once the bubble has burst, in retrospect, it was obvious that it was a bubble, and while it's happening, it's not necessarily clear?
Yeah, that's true, absolutely true, Alex. And I think which is what is, when you talk about the semiconductor companies or the Korean stock market, I think it's a phenomenon, meaning where all of these companies were making losses a few years back. They've had their day in the sun. Probably they'll continue to make some very strong profits for the next couple of years, but markets are smart enough to, stock prices tend to peak out much before profit cycle will peak out, because markets have the ability to look ahead of the cycle. And I think which is what exactly has happened with some of these stocks, including SK Hynix and Samsung that you're talking about. While these companies can continue to deliver strong profits for the next probably 4 or 6 quarters, but I think markets are trying to look beyond that, because stock prices are a reflection of long-term value of the company and the terminal value, which clearly market sees that And the last thing in this whole AI thing is we've seen it in the internet era, and even in the past, you go back to as long as railroads in the 18th century. When you build out infrastructure, the world tends to overbuild it, and the companies who build that infrastructure, meaning it's very normal thing for a lot of companies in that space to go bankrupt or go out of business. We've seen that in the internet era. We've seen during railroads and many other infrastructure build out cycles that have happened in the last 200 years in the world. And I'll not be surprised if some of the neo cloud companies, as they call them in US, if they land up I'll be in chapter 11 probably in next 12 to 18 months for the kind of leverage they're building on, and not having a rational, economically rational or viable business plan in place. We've seen that happen to WorldCom and so many other companies every cycle. So the world is seeing an infrastructure build out on unprecedented scale for a frontier technology after a gap of 25 years. And eventually it ends up creating a bubble and bursting the bubbles. And markets are good at doing that job. And in the process, a lot of these global companies, and this time around, I think that lies with these new cloud companies. I'm sure a handful of them at least will go belly up.
Okay, that's a very interesting point, Pankaj, that you make as well. And I think both Neeraj and I are cracking up on that one. But
the confidence of the prediction.
Exactly, but that's what I'm saying. But Pankaj, the question is then, we're talking about three themes right now, right? You've mentioned about gold, you've mentioned about Indian IPOs, and you've mentioned about AI. If you have to actually rank the three in terms of the risk profile, where there could be a sharp correction, where the bubble could burst, how would you actually place them in pecking order?
I think as far as IPOs and gold is concerned, we have seen at least some part of froth being taken off from Indian IPOs. Companies are finding it difficult to sell through IPOs. Investors are getting much more nuanced. 70% of the IPOs that have happened in the last 2 years are trading 1 year out. They're trading below the issue price. And we've seen companies struggling to really get their issuances through. And I think something similar post the SpaceX euphoria is probably playing out in US as well. So I think that's clearly fizzled out significantly. On the gold, we had a big fraud that's been taken out. While there could be some risk premium to gold in terms of uncertainty, but I still think there is a significant tail risk to gold, given what the new Fed governor has to, wants to achieve. And one of the things I think prime on his agenda is to cut down the Fed balance sheet, which has been above normal for an extended period of last, 18 years. And if the Fed goes down that path, then I think the logical path for gold prices is lower. So I think while there could be some risk premium to gold in the near term, but I think gold price could be headed lower in the medium term if Fed really cuts down its balance sheet. And I think I think we are at the beginning of the fizzling out or popping out of the AI infrastructure bubble. We've seen that start of that meltdown happening in July. I think it's a process. It will continue probably for the next 6 or 8 months because it's become pretty large even by global standards in terms of, and now we've already seen the overflow of that the AI bubble from equity market into private credit, where some of these neo cloud companies have, including likes of Oracle's, where their risk spreads have gone up significantly because they've raised significant amount of capital from private credit, and these companies are now borrowing at 11-12% dollar terms to fund their capex build out or cloud infrastructure build out in US. So I think probably over the next 6-9 months, we're just in the beginning of that fizzling out or popping out of the AI infrastructure bubble. And I think all of this, I really think benefits India because India has labeled as a reverse AI trade. So which effectively means if money comes out of a lot of these speculative asset classes, eventually it come to more sustainable and more durable growth stories. And I think which is where India really fits in kind of a thing. And this whole AI infrastructure and regional markets are more cyclical growth story. And I think the peak of the cycle is behind us from a stock market point of view. And markets are very good at calling peak of cycles is what I would like to say.
The best. I mean, Mr. Market knows it best. Pankaj, one quick follow-up there. Conversations with a few sell-side strategists seem to suggest that the FI interest in India is starting to come up. And I think there are telltale signs, right? July, of course, was a positive month. But just the way, as a guest was making a point today, Bajaj Finance is moving or some other large caps are moving, a smack of FI interest out there. If indeed this is durable, do you reckon banks are the first port of call? I'm moving away from your report now because we've discussed that the bubbles have burst. So now, how does India benefit? Could banks be the first port of call? Could it be others where the FIs will come in and therefore existing holders can benefit?
I certainly think Indian financials are looking in good shape. After a very long time, I'm seeing banks' balance sheet, which are pretty healthy 6-7 years into the cycle. Capital adequacy levels are pretty adequate. and growth is picking up, and more importantly, valuations are reasonable. So all the factors are aligned. Generally what happens is when you're on the 6th or 7th year of an economic cycle, you tend to get asset quality concerns on banks, because by that time banks have had significant loan growth and things start falling apart in the economy, or there are risks that starts emerging in the economy. But that's not the case this time around. So despite being at a fairly mature stage of this economic cycle, I think balance sheets of banks are pristine and valuations are attractive and growth is picking up. So I clearly think banks should be one of the first port of calls for a lot of these global investors wanting to take an exposure to India, because it gives you a exposure to the aggregate economy, aggregate Indian economy across all segments of the economy. So I certainly think that. Apart from that, I certainly think that we are probably the consumer is one sector which has underperformed big time in the last 6 years. But I think the worst of underperformance of consumption is behind us. As I said, we've already seen the initial signs of it. The underlying demand, despite global uncertainty and price hikes, has been resilient, and I think demand will accelerate from here on. And valuation in the sector will become far more reasonable than what they were 6 or 7 years back. And more importantly, the sector is under-owned. So that's another sector where I think growth will recover, valuations will become reasonable, and these are high-quality companies generating huge amount of cash flow. So that's another sector where I certainly see a lot of money flowing in.
Okay, very interesting. Pankaj, it's been a fascinating conversation. It usually is. So thank you so much for taking the time.
Thank you so much, Ali. Thank you. Thanks a lot.
Our pleasure entirely. No, our pleasure entirely. All right, so quick check of the market, and don't get surprised by the 0.75% downtick that you're seeing for the benchmark Nifty 50. We're trading above yesterday's level at 315. So bear that in mind. We're at very close to that 24,600 mark, and just about flat for the Sensex at 78,712. A quick update for you on Dabur, and this is a stock that is in focus. It's the FSSAI, which is a regulator, has cracked down on Dabur's 100% claims, directing the company to withdraw select products and comply with labeling norms. In fact, the update, of course, is that the 100% claims were under the scanner. This has to do with products like honey, apple cider vinegar, coconut water, coconut milk, virgin coconut oil, sesame oil, and also now cow ghee. The regulator said the claims are misleading and violate the labeling norms. They've been asked, Dabur, to withdraw the products and submit a compliance report as well. The impact, of course, is that the order could lead to temporary disruption in sales of the affected products. They could have recalls and would have to be relabeled before they return to the shelves, and it could also signal tighter regulatory scrutiny on advertising and packaging claims across the FMCG sector, much needed in my personal opinion, and potentially impacting peers under similar marketing language as well. You've already seen action to a certain extent. We were talking about the energy drink action that was done not too long back. And look, ultimately, if we're looking at, and both of you, you know about this, you've been to Japan, yes? So I haven't been, but what I've read and I've seen is that the packaging on those products in Japan have to be absolutely true to label, in that if there's a biscuit being sold, the image of the biscuit has to match what is in the package, right? We're far away from that in India, right? So I think this is all steps in the right direction.
Yeah, I mean, individual companies notwithstanding, the fact that all of these moves are happening are great, because it was left to social media influencers to do that.
Yes.
The fact that regulators are doing it is a great thing.
Absolute great thing.
Which is a great thing. All right. Well, it's been a fascinating show, and I hope that you think so as well. Let us know what you think. In the meanwhile, stay tuned. Up next is Ask Profit. That's the prime location for you to get your questions answered. Stay tuned. From all of us and the team that put the show together, thank you so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद
Good morning and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $64,000 mark as short squeeze rally comes in. American Bitcoin Corporation grows its reserves to over 8,000 Bitcoins in the second quarter. Senate Banking Committee passes Clarity Act, advancing it towards a full Senate vote. And lastly, BlackRock expands tokenized cash via Treasury Fund. Looking at Bitcoin, it's near that 64,000 odd levels on a short squeeze rally. Of course, this is aided by a strong macro sentiment, improving market sentiment, and narratives around US regulatory clarity for major tokens is providing a supportive backdrop. The American Bitcoin Corporation has increased its strategic Bitcoin reserve to approximately 8,002 Bitcoins in the second quarter of calendar year 2026. Now this marks a 14% quarterly rise and a record 932 Bitcoins mined. Now American Bitcoin is a publicly traded crypto mining and a treasury management company which is founded by Eric Trump and Donald Trump Jr. The Senate Banking Committee has approved the Digital Asset Market Clarity Act in a 15-9 vote, sending the bill onto the full Senate and marking a major step towards a unified US crypto regulatory framework. And lastly, BlackRock has launched its tokenized product on Ethereum and a stable coin reserve vehicle. Both of them are aiming to qualify as Genius Act compliant reserve assets for the US payment stablecoins. The Genius Act is guiding and establishing national innovation for US Stablecoins Act. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, we see Bitcoin, Ethereum, XRP, Solana, Tron, all of them in the positive, but a very narrow range. Even the support resistance has come down for Bitcoin between that $63,000 to $66,000 mark. Well, time to take a look at the crypto strategy of the day. Here's what's there to keep in mind. Overall, it's a cautious rebound. There's a technical buying happening and likely the resistance levels will start coming in for Bitcoin. You should be looking at that $65,000 to $67,000 mark. That's what the charts are suggesting. And the technical reaction right now is happening to an extreme bearish positioning. So whether this will sustain or not, that's the big question. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxations, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
watching Ask Profit here at NDTV Profit. I am Mahima Vachrajani, and of course, this is a show where we get all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing. The Nifty 50 right now is trading pretty much where it was trading at 315. We've talked about this at length in India Market Open as to how the closing account settlement did impact the last 20-25 minutes of trade, and that the trade went on up till 340, and largely there was buying seen in the cash markets, which led to that uptick coming in the Nifty 50. But the Nifty 50 right now, the downtick that you're seeing is just probably a correction of that happening, and largely where it was at that around 315 mark, around the 24,500 levels. For the Bank Nifty also, it's a similar story, but the pressure on this one is slightly higher because it's down by about 0.8% around the 58,200 levels. We were 57,700 levels. With regards to where the broader end of spectrum goes, let's try to pull that up and see as to where the mid cap 150 and the small cap 250 is trading. The mid cap 150 is down by about just 0.15%, and the small cap 250 is up by about 0.4%. So in all of this, I think the small cap 250 is where the resilience is. Let's also try to pull up the Nifty 50 heat map and see as to what are the stocks that are under pressure and what are the stocks that continue to gain as we speak. You have Hindalco, Trent, Eternal. So large part of that screen is in the green, and there is profit taking coming into the counters that saw that surge after 315 yesterday. You have Infosys, Bajaj Auto, Titan, Grasim that continue to be under pressure, but there's some relief on Hindalco, Trent, Eternal, but not as much as even a percent. So the relative strength in the market, it's not very strong as we speak. Lastly, the BSE 500, to take a look at how the different stocks are reacting to very earnings specific or news flow specific. There you go. There's LIC, which is down almost 6% on the back of that OFS. You have UPL on the back of not a good set of numbers, down 5.8%. Questcorp, PNB Housing, Dabo on the back of that FSI notice. On the other hand, Restaurant Brands Asia is doing very well. Strong same-store sales growth has aided that stock up 11%. And this is after a really long time. And you also have something like a Kia Industries, which is up and about by 8%. In fact, we spoke to the management as well in IMO, and you can catch that full conversation on our YouTube channels. But let's get in our guest for the day and start taking all your stock-related queries. We're now joined by Swati Hotkar, AVP Technical Research at Nirmal Bang, and G. Choklingam, founder and MD of Economics Research, joining us now. Welcome to both of you, and a very good morning to the both of you. I'll start by taking the first question. In fact, before I go to the first question, Swati, your quick take on how things have fared because of this cash settlement, and do you also agree with the fact that the pressure that we're seeing on the Nifty is largely on account of the correction because of the spurge that we saw in the last 20-25 odd minutes?
Yes, definitely, Mahima. Yesterday, we have seen in the last few seconds, we got a surge of almost 180 points on the closing basis. Because of those difference only, probably we might witness some sort of a correction into the Nifty in order to match the closing prices on the futures and the spots as well. The overall view on the market will remain definitely positive, probably due to the technical errors we might witness. Yesterday, we have witnessed some such kind of a problems, but over a period of time, definitely it's going to be resolved. The overall setup on the market view on a technical spot is definitely positive. If you're getting any kind of a correction towards 24,500 levels or 400, that should be utilized to take the long positions. But no need to worry as such. Over a period of time, definitely the problem will be resolved.
Okay, so that's the view coming in on this entire cash settlement thing. But let's start taking your queries. The first one is from Satyan. Satyan is saying that how will this LIC news affect my LIC housing finance, if at all? He's been holding this counter at the levels of 590. He wants an advice on this one. Mr. Choklingam, a very good morning to you. I'll come to you with regards to this OFS announced by LIC. The stock is, of course, taking a knock. Any impact of this on LIC housing finance?
Yeah, there cannot be any impact fundamentally. Yeah. It has nothing to do with operations of LIC Housing Finance, which is trading at a steep discount to book value. So it looks good in terms of valuation, but only thing is it lacks momentum as compared to private housing finance companies. But still, as I said, because of the steep discount, one can continue to hold for medium to long term.
Okay, so that's the view coming on LIC Housing Finance. The next one that we have is from Bindu, who's writing us from Hyderabad, asking about Reddington and E2E networks. Which one is a better bet in terms of entering right now, considering the charts? So, Swati, Reddington has seen a significant up move in the last couple of days. Do you think there's more steam left to this, or something like an E2E networks could be considered?
I would suggest hold with the Reddington itself, because on the weekly chart, the stock has given the breakout of a downward sloping trend line, which was at around 1.5 years trend line resistance zone. It has given the breakouts. The volumes are literally increasing on the higher sales along with the price momentum. No wonder in the last few trading sessions we have witnessed a spurt from almost 290 to 350 levels. Now, little bit correction can be witnessed, profit booking after such kind of a rally we cannot be denied. So any dips towards to 320 can be definitely look forward to accumulate the long positions. The overall setup is still positive. I'm looking for a target of at least 380 to 400 rupees on the higher side. So compared to E2E, I will be going for the Reddington at the current, looking towards the current setup of this particular stock.
All right. Okay. The next one that we have is coming in on CG Power. This is the one counter that Ashok Reddy from Andhra Pradesh has been holding since the past 20 months. He's saying 400 units is what he bought at the levels of 690. So he's sitting on good gains, and he wants to know what is the future prospect of this one and whether he can continue to hold this one for a year or so. Mr. Oaklingam, this one is trading much higher today. It did see a knock when the government had announced Chinese company to be allowed selling products in India, but after that it's seen gradual recovery. Fundamentally, do you think that Mr. Reddy can continue to hold this from a 1 year perspective?
1 year maybe nominal return is possible. It's a great company, part of Murugappa Group. Extraordinary talent the group has. The company also done extremely well. But only thing is, on a trading basis, already trading at around 100 PE. So all good news factored in. Therefore, it is good to hold for beyond 1 year. If somebody wants to hold it for 1 to 3 years, I think it can create a decent return. But within 1 year, I doubt whether it can create any meaningful return.
Okay. All right. The next one that we have is from Sundar, who's writing us from Madurai. He's asking about Pheniotex Chemical. His average buying price is 48 and wants to know the technical view on this one. Swati, what would you recommend him on the charts for Pheniotex Chemical?
The chart looks promising at the current levels. No wonder sideways momentum has been witnessing, but on the higher side, the stock has a strong resistance nearby 3950 levels. If it manages to give the breakout of those levels, then definitely a positive move is likely to be seen into this particular stock, which will take a counter towards to 42 to 44 levels. So I will suggest to hold on for time being period. Downside, it has a very good support at 37 rupees. So keeping that as your stop loss, you can hold on the long positions.
Right. Okay. The next one that we have is on City Union Bank. Our viewer Sumant from Hyderabad is holding 830 shares, bought at the levels of 232. Says got it 1 month ago. Wants to know from a long-term perspective, is this a good hold fundamentally? Mr. Oaklingam, your view?
Yeah, but definitely it can create a good alpha in the long term. It's more than 100-year-old private sector bank. Excellent track record, and also trades around 2 times, which is a fair value, but definitely beyond 1 year, it can create a decent return.
All right. Okay. The next one that we have is from Rishad, who's writing us from Palakkad, Kerala, asking about the short-term view on Cupid. Swati, do you think that this is one of the counters that you can still make an entry and probably see an upside from here on?
Frankly speaking, I will not suggest to make a fresh entry at the current market price, because already we have witnessed a very strong move in this particular counter within a very short period of time. Wait for some more time. We might witness some sort of a profit booking, which will take a back stock towards to 200 and so level. So any dips towards to 200 level can be utilized to build up the fresh long positions, but not at the current market price.
All right. Okay. So that's the view coming on Cupid. The next one that we have is on Thangamayil Jewelry. Shrikant from Bengaluru wants to know if this is the right time to enter this counter from a short-term perspective, and if yes, please suggest the entry price and the target also for this one. Swati, it did see a significant amount of up move, but it's also corrected quite a bit. Do you think that this is the time to kind of make an entry? It's found its bottom, and from here on, it could bounce back?
I will suggest to wait for some more time, because already we are witnessing a strong profit booking into this particular counter along with the volumes, and it is just given the breakdowns of the short-term moving averages. So more selling pressure can be seen, which will take a stock towards to at least 4,400 to 4,500. Those levels are the very strong support level for this counter. So any dips towards to 4,500 one should wait for over that period of time. We need to witness whether this particular counter manages to hold those support levels or not. So wait for some more time. Let the stock find out a support nearby 4,500 levels, then we can review back this particular stock. But definitely a bounce back rally can be seen, which will take a stock towards to 5,500 levels.
All right. Okay. So that's the technical view coming in on Thangamayil Jewelry. The next one that we have is from Sunita, who's writing us from Hyderabad. The right level to enter KPI green is what she's asking. Again, a short-term query, so I'll stick with you for this one as well, Swati. KPI green, what are the technicals indicating?
Yes, we have already seen a correction into this particular stock, and the counter is forming a cluster support zone nearby 350, 355 levels, nearby trading the oversold zone. So I believe we might witness some sort of a bounce back rally or the reversal in this particular counter. Don't buy the full-fledged quantity at the current market price, but at least whatever the quantity you're planning, 30-40% can be taken as a buy call at the CMP. And the immediate for a short period of time, my target is 400 and beyond at 420 levels. So definitely you can go for a long this into this call.
Okay, so that's the technical view coming in on KPI green. But there has been a development that NDTV Profit broke yesterday with regards to, of course, it's not out yet. It's going to be tabled today. But the government is kind of considering bringing back MDR, that is merchant discount rate, on select UPI merchant transaction. This is generally it's going to be on larger, of course, transaction, larger value of transaction. To exactly understand as to how this is going to impact something like a Pine Labs. We are now joined by Samir Kamath, who's the CFO of Pine Labs, joining us now. Samir, thank you so much for taking out the time and speaking with us to help us understand. First and very basic question as to how do you view this proposed reintroduction of MDR, and if implemented, in its current form, what is the kind of impact that you see overall in your payment business?
Thank you. I think UPI has been a big revolution for India. It's probably one of the largest real-time payments across the globe. And I must say a lot of effort has gone from the government and the payment ecosystem to kind of take it. We are probably at about 30-40% penetration of the market. But traditionally, to drive adoption, most of these UPIs were without what we call MDR, which typically is about 1.5% on credit cards and about 0.9% on debit cards. UPI were technically hitherto having zero MDR. Typically to kind of launch UPI across, payment companies have to incur a lot of costs. And I think this adoption has been driven despite these payment companies absorbing these costs. And you've seen the real-time impact of that in terms of the adoption. I think the government has made the first step towards moving in that direction. While I think this is just a first step, a couple of other steps are still underway. The first step is obviously the Payment and Settlement Act has been amended to give more discretion to RBI to kind of go ahead and implement MDR rates if required. Should they come in maybe more so in large value transactions or to merchants, I think that's a reasonable cost to be absorbed, but it will help channel and fuel a lot of further adoption. If you look at international markets, like if you look at Pix in Brazil, which is also a real-time payment, or the real-time payment ecosystem in China, they typically charge about 25 to 30 pips. And despite that, the penetration is already at about 90%. So I think anything in that direction will help further real-time payments. We will become obviously a big beneficiary as a part of the payments ecosystem, as will banks and other ecosystem players, because today almost about 70% of our transactions on our POS machines happen through UPI. And that's something which is growing at a good take rate. And therefore, I think that will be a large benefit for payment companies should it come through. Though I think it's still work in progress in terms of the fine print. But whenever it comes out and if it comes out, definitely will help in the overall growth of the ecosystem and payment players like us who are kind of helping further the UPI system.
Understood. Samir, I know that the rules are not ironed out yet because the bill is yet to be tabled, but from the sense of, whatever you've heard or whatever, industry sources tell you, can you give us some perspective on how much of, your merchant base or UPI TPV could potentially fall under the proposed framework? Any kind of sense that you can give us?
Yeah, see, typically Pine Labs operates into large merchants, the mid-market segment, and we are an ecosystem preferred partner for most of our large merchants, banks. And because of that, there is a myth that typically UPI is largely on sticker codes. Let me kind of correct that myth by saying that a large amount of UPI transactions do happen on POS terminals as well, because it gives some kind of a reconciliation access to the merchants. It gives you a lot of security. It gives you a lot of fraud prevention, and therefore the adoption of UPI across POS terminals is also growing at a fast clip. As I said, 70% of our volumes on the POS terminals happen through UPI. In addition to that, as an ecosystem player, we've also been adding products on UPI for driving further adoption. Part of them were our latest agentic product on e-commerce, which is the P3Pay platform, which can help commerce become intelligent, is on the backbone of a UPI reserve payment mechanism. We've also launched EMI products on UPI, and we've also launched other RuPay card or CC or credit limits on UPI. So I think we have been working with the UPI ecosystem to drive the growth. I think with anything like this coming in, Pine Labs will definitely benefit, as would the ecosystem around it.
So then because of this, correct me if I'm wrong here, your margins should improve and your merchant investments should also improve from here on or increase from here on?
Look, the fine print is out there, so I will not hazard a guess as to what the exact benefit would be. But yes, we have already created the rails of the business. We have a very large merchant network. We have close to about 2.1 million POS machines through which we generate about 4.2 lakh crores of volumes on a quarterly basis. Some part of it, a large part of it is UPI as well. So if this some and form of this regulations come into fold, Pine Labs will definitely benefit because the rails have already been laid and this will be incremental revenues that come on top of it. Obviously, a lot of investments have gone. I think this will also help us recoup some of those past investments and monetize things better.
Got it. And any clarity that you have in terms of proportion that would typically accrue to Pine Labs versus what will go to acquiring banks or other ecosystem participants?
I think there are a lot of industry notes out there from the analyst community. I think at this point, given there's still work in progress, as I said, the first step has come out and the second and third step still has to come in. I think the total UPI MDR is shared between banks and the payments ecosystem players. So little early for me to say in terms of the exact specifics, but whatever sum and form, if they come in, again split between P2M, which is to merchants, and probably P2P, which is payment to people, will kind of be out of it. So I think it's a little early to say, but any step in that direction helps us absorb the cost better and drive better profitability. I think that's what I can say for sure.
Perfect. Just one last question, because you mentioned that, this is largely applicable to large merchant or transactions, right? And that's where, Pine Labs pure play is. So do you think that you're better placed than peers because of that?
See, I will not look. I think I can talk for myself. I think all payment players will benefit. We participate in the large and mid market. So while the fine print is, again, as I'm saying, is still out today, from what I've heard, I think it technically fits into the right bucket for the segment we operate. As I said, we process close to about 20,000 plus crores of volume on a monthly basis. We typically land up having a large part of our POS base doing this. Our average settlement size is average ticket size about 1,500 crores. So a lot of these things will kind of play in well to the segment, but I'll wait for the fine print to come. Anything which comes in this direction will be accretive to the bottom line of Pine Labs.
And in terms of where, the numbers go, Samir, because, this was, of course, a very important conversation to have, but also the numbers, because it's been on a very strong footing. But considering that you have guided for a revenue growth of 21 to 23% going forward, what are going to be the levers from here on? And this could possibly aid that?
Yes, I think beyond UPI, which is still, I would say, a work in progress to be there, I think we've been actually, we had given us a growth guidance when we started Q1. And I think it comes from multiple things. It comes from the fact that we have built an ecosystem where on top of the rails of the POS devices we have created, we're building a lot of value-added services. For example, the EMI business is a very strong business for us where we run offers and campaigns for multiple brands across our merchant network, and it kind of helps banks also get a revolver credit. We have a prepaid card solutions business, which helps merchants and brands get more customers. All of these are built to scale in India, and we are also kind of now taking this to international markets where we have strong presence. Our international business has grown at about 45% over the last few years. About 16% of our top line, and we believe that will still give us a good growth rate there given the size and the scale of opportunity that exists. Our online business is again growing at about 50%. The omni-channel strategy that we have and our ability to provide value-added services help us grow in that segment, while we see growth within our existing segments as well. So I think overall, we have a lot of kind of strategies in place and our businesses in place, which are poised to kind of deliver in the guidance that we've been giving. Anything in this region with UPI, etc., will only be on top of that to help us kind of reach those numbers.
Perfect. Samir, just one more last question. You've said that adjusted EBITDA margin is expected to be either at that FY26 level or maybe improve in FY27. What would that improvement look like, if any, and if you can help us quantify that for FY27?
I would not like to make any forward-looking statements here. I think the only firm guidance we give is on top line. But if you see our margin profile, given that a lot of cost has gone into building the rails of the business, which was a lot of upfronted investment in CapEx, we have been seeing operating leverage. Our operating margins before we went into IPO used to be in the range of 9 to 12%. That has been clocked at 16% in FY25, came at about 21% for the FY26. And we believe that the incremental business will come from tech-led businesses which are built on top of the rails that we've created, and therefore our margin expansion should happen. There are certain variable costs in our business, like the investments we've made in tech, cloud, etc. So that will continue to be there as we build in for the growth. But I think the fact that our incremental businesses have lower OPEX and CAPEX intensity will drive the operating margin going forward, and that's what we've been showing for the last few years by being a full year profitable company as well post-listing.
Right, Samir, thank you so much for, of course, providing us that clarification with regards to this entire MDR thing and, of course, talking about the earnings as well. Thank you so much for taking out the time.
Thank you so much.
All right, viewers, so that was, of course, the management of Pine Labs. But let's, come back to all your stock-related queries. And it's time for our rapid-fire round. Swati and Mr. Chokalingam, thank you so much for waiting by. We'll start taking, the questions that we have coming in and start the rapid-fire round now. The first one is on urban companies. Sastri from Visakhapatnam has bought 500 shares at the levels of 120. Wants to know whether to continue to hold or sell this one. Mr. Chokalingam?
One can hold tactically about 10-15% return is very much possible because of the growth story.
Okay, the next one that we have is on Zaggle Prepaid. Akshay Agrawal has bought 300 shares at the levels of 235. 6 months view on this one. Swati, on the charts?
I will suggest to hold on with a stop loss of 200 rupees downside. Upside potential is 250.
Okay, Suzlon Energy is the other one. Our viewer Somla Naik has bought 600 shares at an average price of 66. Wants to know whether to continue to hold, buy maybe more and average out. What would you recommend, Swati? Because elevated levels is where she's bought it.
I will suggest to hold on for some more time for average out position. Any dips towards to 44 to 45 levels are the good levels to take the average out position.
Okay, the next one is on Patel Engineering. Raja from Chennai has bought 166 shares at the levels of 61. Wants to know whether to continue to hold or average. Mr. Chokalingam, your view?
One can hold it.
Okay, the next one that we have is on Tejas Network. From a short-term perspective, is this a good time to buy, and what could be the levels to watch out for? Swati?
I will suggest, he can take a long position at the CMP. Stop loss can be kept at 525 and immediate target will be at 560 to 580 levels.
Okay, Vadi Energy is the other one from a one-year standpoint. Jay from Tamil Nadu wants to know whether this is the right time to enter and maybe continue to hold. Mr. Chokalingam?
One can hold it.
Okay, the next one that we have is coming in on the recent IPO, Manipal Hospital. Any view on this one, Mr. Chokalingam, by any chance?
See, one can hold it for long term because while debuting as IPO itself, it was fairly valued as compared to other large hospitals. So one can hold it for very long term.
Okay, Apollo Hospitals is the other one. Jay Krishnan from Kerala wants to know at what level can he make an entry into this one from a short-term perspective. Swati?
Any dips towards to 8500, one can take a long position.
Okay, the next one is on Tata Motors CV. Shankar from Bengaluru is holding 750 shares, bought at the levels of 440. Wants to know whether to wait or sell at the current market price. Mr. Chokalingam, what's your view?
CV one can hold. It's a domestic demand story. I think good opportunity is there.
Okay, the next one is on India Mart Intermesh. Ramaya from Chennai is holding 43 shares at an average price of 2665. Wants to know whether averaging at the current market price makes sense or should she book her losses. Swati?
I will suggest to wait for some more time. Any dips to 1600, one can take a average lot position.
Okay, the next one is on Bajaj Housing Finance. What could be the one-year target on this one? Avi wants to know he's holding 9,000 shares, bought at the levels of 91 rupees. Any view on this, Mr. Chokalingam?
One can hold for long term. It's already trading fairly in terms of price to book value for the short term.
Okay, the next one that we have is on GE Shipping, 260 shares bought at the levels of 1560. Lavanya from Eluru wants to know as to what could be the target price for this one and what could be the stop loss. It's come off quite significantly from the day's high point. Swati, what would you recommend on the charts?
I will suggest to maintain the stop loss of 1430 on a downside, and you can hold on the long positions. For immediate target will be 1500 to 1540.
Okay, the next one is on United Spirits. Our viewer Sabita from Hyderabad is bought at the levels of 1290. A short-term target for this one, Swati?
A short-term target will be at around 1560, and beyond that 1600 levels can be seen, but you can maintain the profit stop loss of 1500 on a downside.
Hindalco is the other one, Mr. Oklingam, where Mr. Murthy from Hyderabad has been holding since the levels of 1000 rupees. So probably very near to the current market price. Wants to know from a medium-term perspective, can he continue to hold this one?
Yeah, beyond 6 months to 12 months, it can give at least 10% return from current level.
Okay, the next one is coming in and this is on... this is on LIC. Our viewer Kokila from Tamil Nadu wants a short-term view on this one. Of course, the stock is taking a knock today, Swati, on the back of that OFS that we talked about. But on the charts, what's the view like?
View is little bit cautious because we are witnessing a selling pressure, but definitely stock will find out a support nearby 385. So as long as it holds that level, the view will remain a positive. Pullback rally can be seen up to 420.
Alright, that brings us to the end of this rapid fire round, and it's time to slip into a very short break. But on the other side, of course, we'll be taking all your stock related questions, and also we'll be speaking to the management of Sangvi Movers, so do stay tuned in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं।
Welcome back. You are watching Ask Profit right here on NDTV Profit. We are putting the, Sangvi Movers on focus now on the back of their quarterly results. Results were good. They were, at a time where you've seen a lot of volatility, especially in the export side of things. Stocks not reacting too much, and hence it's important to get the perspective. The company is expecting a guidance of almost 1800 crores by FY28. Let's welcome in Rishi Sangvi. He is the managing director of Sangvi Movers, now joining in. Rishi, very good morning. Thank you so much for joining in. Let me start off with the first question. The traditional crane rental business, the utilization has stayed through at 86% despite the volatility that we've seen in the last quarter. How are you seeing this current utilization given the uncertainty? Is it more domestic led? If you could start us off with that perspective.
We are extremely bullish on the demand for cranes as all the sectors in the economy are firing on all cylinders. We're seeing demand for cranes coming from steel, cement, nuclear, thermal, renewable wind energy, ports, metros, railways, and bridges. So we are guiding for a utilization in the range of 80 to 85% for this year and yields at 2% for the India business. As far as our Middle East business is concerned, we are at a 86% utilization this year, and we believe that we will maintain that utilization for the full year at a yield of 4.1%. So we are extremely bullish. There is a tremendous demand for cranes, and this is reflected also in our capex plans for this year.
Rishi, when you also look at your international operations, you mentioned that the Saudi operations have now turned EBITDA positive. You also received your first order from Qatar actually in this particular quarter itself. So how are you looking at both the profitability as well as the orders incoming from the export market, especially led around the Middle East as of now?
So we are still extremely bullish on the Saudi market. Given the current situation in West Asia, there have been temporary disruptions in supply chain, but we believe that these disruptions will normalize in a couple of months, if not 1 or 2 quarters in this financial year itself. We opened Qatar as a market in the peak of the war, which is in March 2026, and we have a substantial portion of revenue that will come from Qatar in this financial year. So we are still seeing very strong positive momentum in the region, and we are focused both in Saudi and Qatar, where once again, we see utilization levels around 85% and yields around 4%.
Got that view, Rishi, but also you've given a good guidance for this year for FY27, almost 14 to 1500 odd crores for next year also, and I'll come to the FY28 guidance in just a bit. But how much is the export that you're currently baking into this number? Because you mentioned that last year was a smaller proportion. You entered, of course, Saudi, now EBITDA positive. So what could we expect for the export side of things from this year?
So FY26 was a startup year for the business. We had incubated it in July of 2025. So the revenue was insignificant in last year. This year also, the total revenue in the guidance that we are given, which is, as you mentioned, 1,400 to 1,500 crores, less than 10% of the total revenue will come from our Middle East business, which is spread across Saudi Arabia and Qatar. The rest of the business will be domestic, and it would be split roughly 2/3, 1/3 between the crane rental business and the renewables business, which we do engineering and construction for.
Also, Rishi, in terms of the return on capital employed metric as well, you've given a guidance of 16.5. It's something that you do as of now as well. But you have that renewable business coming through. You've also mentioned a very strong inquiry pipeline as well. Talk to us a little bit about that business. How are you looking at the revenue growth contribution for this year, as well as the ROCs now that it's almost 4 to 5 times of a traditional business? Is that being baked into the current numbers for ROCE for this year?
Sure. So our FY26 ROCE was 16%, and we are guiding for maintaining that ROCE, improving it by 16 to 16.5 to 17% for till FY28. So it will improve by 0.5 percentage in FY27 and another 0.5 percentage point in FY28. Now, our renewables business is asset light, working capital intensive, and high ROCE, as you correctly mentioned. We do have a very strong inquiry pipeline. It is roughly 4,500 crores of inquiry pipeline, all of it driven domestically by the renewable wind energy sector. And our order book currently stands around 686 crores. And we have essentially been doubling the top line every year since inception, which is 2024.
Also on your order book, because you are at roughly 1,253 crores in terms of order book, but a lot of that growth has actually just come in the last 10 weeks post quarter 4 earnings. So could you talk us through if this is more domestic led in terms of order books, certain region specifics that you can give us?
Our total inquiry pipeline spread in India across both our businesses, which is the crane rental business and the renewable business, as well as our crane rental business in the Middle East, is roughly 5,600 crores. So, even if we convert 10% of this inquiry pipeline, we would add another 500 crores to our order book. So today, our opening order book, when we started the year, was roughly 1,000 crores. And as you mentioned, it has grown by 20% in the last 10 weeks. Now, in the renewable business, I must say that some of the order book may get deprecated and may get delayed due to factors which are not in our control, such as, grid connectivity delays, local ROW issues, etc., which are, or delay in supply of WTG components, which are beyond our control. There may be also some delay due to delay in project execution on our part. So roughly 10 to 15% of the renewable order book will get slip into the next financial year. But we do see a continuous growth in our order book a majority of it driven by our crane business in India, followed by the renewable business. And then whatever capex we do in the Middle East is directly translating into our order book because most of our cranes are moving from port to site directly.
And a final question, Rishi, then, because you are looking at FY28 revenue guidance of 18 to 1900 crores. What could be the contribution for renewable in that number as of now? Because you also seen that we still are yet to see that margin profile of the new business. Any kind of, if not the numbers, if you can give us some longer term picture that we could expect from these two key aspects.
So Puneet, it's a little difficult for us to guide based on the business vertical, and what we are guiding for is a 30 to 40% growth on the top line for FY27 and a further compounded growth of 25 to 30% for FY28, reaching almost 2,000 crores in FY28. Now, the reason we can give forward guidance up to FY28 is because we have a 5-year strategic roadmap called Elevate 2030, and this has given us confidence and look ahead visibility in the businesses that we are building. We've also given a target EBITDA range for FY28, which is about 650 to 700 crores. So simply put, roughly a third of the revenue is converting to EBITDA. And this reflects the revenue mix, which is, the crane rental business is a high EBITDA business. The renewables business is a high ROCE business. They both complement each other. And therefore, we are seeing this kind of EBITDA margin profile.
Well, Rishi, we'll leave it at that. Thanks so much for joining in, giving us more perspective about the business as well as what's the outlook going forward. Look forward to our next conversation. But next, let's get back to your stock-related queries now. This one's coming in from Sunita, who's from Hyderabad, wants to know about KPI Green Energy and if she can enter the stock in the short term. Swati, very good morning. Would you recommend Sunita to do that?
At the current level, I will suggest to hold for some more time because we believe that we might witness some sort of a more correction. 365, 360 levels are the good levels to build up the long position where the risk reward ratio will be favorable and the immediate target will be at around 400 to 420 levels.
Right, okay. The next one that we have is coming in from Mohit, who's writing us from Ludhiana, asking about Container Corp. He's bought it at the levels of 512 and 1 year is the time horizon. He's owning 200 shares. Wants to know if he can continue to hold this one or not. Mr. Oaklingham, any view on this?
One can sell in case it rises by 10% because it's trading at 32 times on a trailing earning, and recently the growth momentum has come down. So I would sell the stock in case it rises 5 to 10% from current level.
Correct. Well, the next question coming through, and this one is from Manish, who's from Bengaluru and wants to know about Biocon. Swati's question being that, it's, and we spoke about it yesterday as well with a technical expert, that it's crossed that 400 mark after a really long time. He wants to know largely a 9 to 12 month view on the stock based on the charts. What can you recommend?
Definitely, if you're looking for a short period of time, at least minimum 9 months to 1 year, the view will still remain positive because on the monthly chart, the counter is trading in upward rising channel and 400 is acting as a very crucial support level for this particular stock. On a higher side, it is facing a little bit resistance at around 440, which manages to give a breakout of those levels on the closing basis. Then this pullback rally or this swift rally can be witnessed, which will take a stock towards to 470 to 480 levels. The view will still remain positive in this particular counter as long as it holds the 400 support levels.
Okay, the next one that we have is coming in on Ircon. This is from our viewer Pankaj Jain, who's writing us from Bengaluru. He's got around 495 odd shares that he's bought at the levels of 201. Wants to know if he can continue to hold this one or switch to an alternate in the same space. Mr. Oaklingham, what is your view?
One can hold considering the valuation and the price point. There's been a massive correction also. And trading at only around 20p on trading basis. I think it's a good to hold, and in fact, it's a good stock to buy if declines from the current level. That's my view.
That's how you got that, Mr. Chokalingam. But the next question, and this one, it's coming in on Vikram Solar, Mr. Chokalingam. Our viewer wants to know about the long-term prospects of this counter and if it currently makes the list, how are you looking at this one and within the space as well? If not this one, anything that you like?
It's a great company, no doubt, but I am little apprehensive about, the small and mid-sized solar companies because large industrial houses have entered and in certain segment there is already excess capacity also if you take in solar. So if one is trapped in such stocks, one can hold it, but fresh buying, I would suggest only, confining to very, very large companies which belong to big industrial houses rather than buying small and mid-sized solar companies.
Okay, all right. So that's the view coming in on Vikram Solar. But I think we've got Mansingh who's calling us from Andhra Pradesh. Very good morning to you, Mansingh. Go ahead, ask your question.
Good morning, Mahima. I'm holding Techno Electric Engineering, 1100 rupees, 100 shares. I want to know the Chokalingam view. Should I continue stay invested or add more at the current juncture? And also, I have 2 lakhs for fresh buying. Should I go for Nesco or any other recommendation from Chokalingam, sir?
Okay, got your question. Though you've nicely squeezed in 2 questions in in one call, but I'll let you do that. Mr. Chokalingam, first of all, your view on Techno Electric, and if he has 2 lakhs to invest in, should he buy something like a Nesco, or would you give him some other pick?
Techno Electric is a fabulous stock, I believe. Quarterly results may be disappointing, quite possible, but with a track record and capital expenditures and foray into data centers and the progress of the new data centers all give a lot of confidence. I think Techno Electric is very good stock for medium to long term. Nesco, yeah, I personally hold it. Company also invested. I remain extraordinarily bullish on Nesco for medium to long term because the company is tripling the capacity in the realty business and sitting on a cash of over 1,600 crore. So, and the existing corporate realty is operating at 100% capacity utilization. So, all this give me a lot of confidence.
Got that view, Mr. Chokalingam. But so definitely Mansingh has done his homework on which stocks to ask Mr. Chokalingam on. But let's go across to the next question from Shankar, who's also a regular viewer from Bengaluru. Swati wants to know about Tenneco Clean Air. He's holding shares at 580 and post that, run-up stocks corrected yet again. His question being if it's a good time to add now, would you recommend that?
I would suggest wait for some more time. As of now, the stock is witnessing a resistance of 20-day moving average, which comes at around 556. And today we have seen high levels of 562. I believe any dips towards to 545, 540 will be the good levels to take a fresh long positions. And the immediate target, any momentum above 562 on the closing basis will extend this rally towards to 600. The view is positive to take up the long position, wait for some more time.
Okay. All right. I think we've got Kiran Kumar, who's writing us from Hyderabad and asking about J&K Bank as well. He's got around 1,637 shares, bought at the levels of 181, and wants to know as to what should be the outlook for this one. Mr. Chokalingam, 40,000 of loss is what he's sitting at. What should he do?
It's a very good bank. It's one of the old private sector banks, trading at around just one-time price to book value. I would give even a buy call on Jammu and Kashmir Bank at current price.
Also, since we are talking about banks, Mr. Chokalingam, your view on Canara Bank as well. Raghav wants to know about this counter. And we recently actually just seen the last couple of days, the FCNRB deposits also coming through very sharply. Would that be a play, Mr. Chokalingam? Because it's all about margins for this year for banks, and I think that's all the conversation about. Is that a play when you look at your picks in the banking space now?
Certainly, yes, I believe, because first of all, the banking industry has got a lot of good tailwinds. The industry credit growth is around 17 to 18%. It's a very record high level. And Canara Bank, trades at just around, one-time price to adjusted book value. I think it's a very, very attractive. And it also has investments in the AMC company, insurance company. So when you put all these valuations, I think in the worst case also, it deserves anywhere around 150 to 160 rupees as a target price as per my analysis.
The next one that we have is on Vishal Megamart. Our viewer wants to know as to what should be the course of action for this one. Swati, what would you recommend on the charts for this one? It's trading around 1.3% higher today.
Yeah, on the longer term perspective, definitely my view is positive because the counter has already witnessed a strong corrections, and I believe that 105, 110 is acting as a good support levels. I believe that the reversal is likely to be seen in the near term future, which will take a stock towards to 120 to 125 levels. So view is positive. Definitely, you can hold on the long positions. If you have any longs, maintain the stop loss of 105 for a target of 120 to 125 levels.
Got it. The next one, it's coming in from Navendu Sharma from Patna, and his question is on Quest Corp. Now, this week, stock's been buzzing as well, and he's holding shares since the pre-demerger era. Wants to know if he should still continue to hold this counter or exit. Mr. Chokalingam, how are you looking at Quest Corp right now? Would you recommend him to continue holding?
It would be difficult for me to answer right now because I have not studied it, business in detail in the recent time.
Swati, just a quick view on the charts as well. We've seen a run up this week. Anything that you see right now?
Yes, from the last 4 months, definitely we are witnessing very strong momentum rally. The counter has entered into the overbought zone. We are witnessing some sort of a negative divergence from higher levels. So I will suggest to book the profits if you have the long position, or else you can maintain the strict stop loss of a 320 levels on a downside and carry your long positions. But on a personal opinion, book the profits at the CMP.
Okay, all right. The next one that we have is coming in, and this is an IDFC First Bank. Nivendu Sharma from Patna is holding 2,000 shares, bought at the levels of 80 rupees. Acha, this is already taken, sorry. The next one, I think we've got a caller. Vijay is calling us from Hyderabad. Vijay, very good morning to you. Go ahead, ask your question.
Yeah, good morning. I'm holding the TD Power shares.
Okay.
At 1230 price, 200 shares I'm holding. So I want to know the technical.
Okay, got your question, Vijay. I'll take this up with Swati then. Swati, what's your view on TD Power?
My view is positive because the counter is under the formation of the inverse head and shoulder pattern. We might witness some sort of a selling pressure which will take a stock towards to 1100 or 1070 levels. But then from there onwards, we will witness the reversals. Breakout levels in this particular stock comes to at around 1165. If it manages to give the breakout level, definitely we are going to witness 200 points momentum, which will take a stock towards to at least 1250 to 1300 on the higher side. So my view is positive. Hold on your long position as long as the counter holds 1100 rupees on a downside.
Got that view. But the next one's from Mantha, who's writing into us from Canada actually, holding IDBI, bought at 86 rupees per share. Wants to know about if she should continue to hold. Mr. Chokalingam not mentioned the time frame, but I think this is largely a divestment play, if any, right? Because you're not seeing the stock move too much on results or any other factor. If that is her play, should she still continue to hold? What's your opinion?
It's a very good quality bank. It has improved asset quality substantially in the recent years. But the problem is it's still trading at a slightly elevated level as compared to other PSU banks. It trades around 1.5 times price to book value, which is much higher than a lot of comparable banks in the PSU bank segment. So therefore, it's a good to hold for medium to long term. But I don't think one can make any decent return in the short term.
Okay, all right. The next one that we have is on GM Breweries. We don't get a query on this, a lot of times. But Kushal from Delhi has bought 200 shares at levels of 1,000 rupees. Wants to know if he can maybe add more, average down, because elevated prices is what he's bought it at. And wants to know the 3 to 6 months view on this one. Swati, anything on the charts that you're picking up?
My view is a little bit cautious in this particular stock. I will not suggest to hold on also this particular stock. But definitely we witnessed some pullback rally on every rise towards to 950 or so 1000 levels. I will suggest to exit the long position in this from this counter.
Got it. The next one's from Suresh, who's from Kochi. He sent across a very interesting query on Dixon Tech. We spoke to the management today, put focus on the non-earnings part of things, also on the capital side of things, why EMS companies are investing as well as going to for QIP so much. So with that context, Suresh has actually bought 500 shares of the company, but at 750. So he might have bought it really early on, probably around the listing time as well. But Mr. Chokalingam, he wants to know if he can still continue to hold. And his question is, if he should shift into Coforge, would you recommend that? Because such attractive levels that he's bought into, should he ride the wave?
See, Coforge is a great company, no doubt about it, but I am quite cautious on recommending any IT stock at this juncture because of the structural change happening in AI and impacting the revenue growth of these companies. So otherwise, it's a quality company. So personally, my research would be to just hold on to Dixon. The stock has corrected and trading only around 45 PE as compared to elevated PE it enjoyed in the recent past. And also, latest quarterly results have given a little comfort to me. So I would better hold Dixon rather than recommending Whole Foods.
Okay, all right. The next one that we have is coming on IRIDA. Sriram from Hyderabad is holding 100 odd shares, bought at the levels of 180. Wants to know whether to continue to hold, maybe average out. Swati, on the charts, what would you recommend?
Yes, at the current level, you can definitely average it out because downside it has a very crucial support near 110 levels. A bounce back rally can be witnessed to 140 to 150 levels. So you can average that position at the CMP.
Correct. Well, let's now start with the rapid fire round in this edition of the show. Swati as well as Mr. Chokalingam, you know the drill. First question is on HDFC Life. Our viewer Manish is mentioning that stocks at a 52-week low and he's been holding for a while. What would you recommend, Mr. Chokalingam? Should he still continue to hold?
It's a good to hold.
Okay, the next was on Radhiko Khaitan. Sriram Raghuraman, who is a senior citizen, is holding 5 shares, bought at the levels of 806. A fundamental view on this one from a 1-year perspective. Mr. Chokalingam?
Sell on further rise. So.
Correct. The next question coming through, and this one's on MCX. Subhas from West Bengal bought it at 3114 and wants a 2-year view, Mr. Chokalingam. Valuation slightly more richer now. How are you looking at it?
2 year, I think it can give a very meaningful return. So hold.
Okay, the next one is coming in on PNB. Sampath Kumar is holding at the levels of 70 rupees, since the level of 70 rupees, and 208 shares is what he has. Wants to know whether he can continue to hold this from a slightly long-term perspective. Swati, on the charts?
Definitely you can hold on. I'm looking for a target of 125 to 130. So you can hold on to long positions.
Pine Lab is the next one. Radha Krishna from Bengaluru is holding shares at 151. We of course spoke to the management as well, but Mr. Chokalingam, your view?
See, it has improved the margin, it has grown the business, it is sitting on a lot of cash. Hold it or even buy with a little risk because other assets are growing. That is the only concerning factor for me.
Okay, the next one is on Latent View, bought at the levels of 476. Soumyan Mukherjee wants to know whether from a long-term perspective, can he continue to hold and what should be his strategy? Mr. Chokalingam?
I think the stock has been punished much more than what it deserves. I think it's a good to hold or even good to buy at current level.
Is Enviro Infra as well, Mr. Chokalingam, good to buy is what Kumar is asking for the next 3 years?
I've not studied it recent time. I would stick with.
Okay, anything on the charts, Swati?
I will not suggest to hold on for a longer term duration, but definitely any momentum positive comes towards 235 levels, one should exit the loss.
Okay, Varun Beverages is the other one. 100 shares bought at the levels of 462. Continue to hold or exit? Srinivas from Vijayawada wants to know. Swati, on the charts?
I would suggest to hold on for a target of 470 to 480 levels. You can hold on by maintaining stop loss of 435 rupees on downside.
Next one's on City Union Bank. Swati, our viewers holding shares at 232. He's holding 800 shares. What do the charts suggest right now?
Chart suggests that we witness some sort of a more selling pressure in this particular stock, which will take a counter towards to 190 to 185 levels. So at that level, you can try to average out the position, but at the CMP, you can definitely hold on this particular counter.
Okay, the next one is on HDFC Bank. Vijay from Chennai wants to know the short-term target on this one. What would you recommend, Swati?
The short-term target from the current level is at around 770 to 800 levels. So you can definitely hold on the longs.
The next one's on Elecon Engineering, and our viewer Sankar Narayan has mentioned that he's bought at 474, Mr. Chokalingam, mentioning that post quarter 1 has seen a downside and the last 1 chart suggests that. Should he still continue to hold?
One can hold. Power transmission segment has good opportunity.
Okay, the next one is on Senco Gold. Asma bought it at the levels of 385. Continue to hold. Exit. Swati?
I will suggest to hold on this particular counter for a target of 420 rupees on the high side.
Also, Swati, on Texmaco Rail as well. Mahindra has bought these shares at 164. Wants to know if he should, average down. He's definitely sitting on huge losses. What should he do?
I will not suggest to average out this particular counter, but any rise if you are witnessing up to 115 to 120 level should utilize to exit the longs.
Okay, the next one is from Barney. Kalyan Jewellers is what she's bought at the levels of 645. Continue to hold. Swati, on the charts?
You can book the profits at the current market price. I believe we might witness some sort of a profit booking, which will take a stock towards to 560 to 550 levels.
Sunita is holding on to EPAC durable, but at 355. So Mr. Chokalingam bought at elevated levels. What would you recommend? I think the last year was a washout because of no PLI income, but should she maintain the faith?
One can hold tactically. There is possibility of 5-10% rebound.
But should she average down because she bought it at 355?
I would suggest just to hold it. No.
As to hold it, got it. Well, that was the last question of the rapid fire as well as this edition of the show. Mr. Chokalingam, Swati, thank you so much for helping us solve 71 queries that we have in the last hour. Definitely with a lot of managements too. It's a big number that we've solved today.
For sure. And we've been, at a good speed since the last couple of days, it seems.
The 5-minute rapid fire definitely helps.
Yes.
But thank you so much, viewers, for staying in. A lot more queries we'll do and solve at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, be it earnings, alpha, or even some interesting promoter buying. And yes, that's one of the key reasons also I've got you a company. But before that, try to decode which company I'm talking about. Of course, there's a big conglomerate name attached to it also. And the company was founded in the year 1970. Pretty old, right? Also the second one, it's a Gurugram based stainless steel manufacturer. So I'm sure you are about to guess the name, but I'm going to give you some more hints. Promoters recently started acquiring stake and company came out with its Q1 numbers also. So we'll be actually focusing in this company. And the last one, the stock is up 5 times in the last 5 years, multi-bagger already. So the company in focus, I've given you a hint, a conglomerate. It is in stainless steel. So it's very obvious if you're tracking the markets, the company in focus is Jindal Stainless. Yes, this is the company which I'm talking about, but why the interest has come for me on this counter? There are some questions to be asked. Promoters started buying, so a little bit of interest came for me in this counter. The volume outlook, is it getting impacted in the first quarter? Yes, it did, but future, is there any green shoots here? Second question, the margin pressure, will it sustain? Because there are some supply chain issues happening and that's impacting this overall industry. And the debt reductions plan, the D ratio has come down. So we'll understand whether the company will go for future capex and the expansion plans, because this is very much important. Apart from this, we'll also cover the demand trends, especially from Indian Railways. A lot of orders have started coming in, and also how the confidence is looking like. And of course, we mentioned supply chain issues as well. And also lastly, one important question would be the value-added products. What are the timelines looking like for this segment? And that's a pretty important take as well. And Tanur Khulbe, he's going to talk about it. He's the CEO at Jindal Stainless. But let's understand more about the company. What does the company actually do? It's a pretty old company. Stainless steel is largely, Dalal Street has factored in that, but is there any premium in this sector? That's the big question. Stainless steel maker with an annual melt capacity of 4.2 million tons. That's the first important thing for this company. They have 16 manufacturing and processing units in India and abroad, like Spain and Indonesia. So pretty mature business in a mature industry. But what are the products? Let's understand that. There is slabs, there is coils, there is plates. Of course, one raw material comes in, and then different shapes and sizes is something where they talk about it. Precision strips is also there. Also, the company manufactures these products using electric arc furnace. Why this is important is because they are moving towards the green energy segment, and of course ESG ratios will be also good. But Q1 performance, how was it? Overall, it was mixed. Margins were flat. There was of course some impact coming in from the supply chain segment. But let's talk about the other key pointers. A healthy demand was there. That is a good point actually in the mobility, infra and manufacturing segment. And this infra is very much important. The supply chain pressure was there. The question is it still there or not, or is it improving? Also, they won orders across power, oil and gas sector. See, another important trend comes out, oil and gas sectors. Try to correlate these things in your analysis and it will help your portfolio for other stocks as well. Now, the finished goods sales volume, there was a downtick of almost 7% as the production had moderated looking at the global demand supply issues. But the pricing, how things have panned out, these are the raw material pricing for Jindal Stainless. Of course, we had largely flattish over the last 3 quarters, but then you see, look at that, the fourth quarter as well as this first quarter, this is where the hike started coming in, and it takes time to pass on the raw material pricing as well. There might be a lag in this industry. We'll try to understand that model as well. Also looking at the ferrochrome prices, that also shot up in the last 3 quarters. This is where we are seeing the movement happening, and when this happens, of course the margins get impacted. But nevertheless, we'll understand more about the company. The net debt to EBITDA, this is what I liked. It was 0.86 times, and now they have got it down to 0.53x times. So definitely the debt reduction is positive. So the finance costs become less. Maybe in the future you might have a rating upgrade. This is just the mathematics I'm giving you. But what may work? Promoter buying, that's where my eyes actually came in this counter. Over the last 2 weeks, we were chasing this. Demand and order trends are very strong for the company. That's the second point. You should note it down. Third one, interestingly, analysts remain quite bullish, and in the KYC ratings, I'm going to give you the exact analysts who are bullish in it. So stay tuned with us in the show. And also, apart from this, valuations, they are quite attractive as well, and the reduction in the debt ratio, which I pointed out. So these are the reasons what may work for the company, but let's understand what may not work for the company. The margin pressure might be there, high raw material costs are there, and they might be lag and in giving out their price hikes, supply chain issues. It's not that easy to get corrected, might be extended, and the global macro risk. This is what everybody is facing. It's not just the company. So at times the industry doesn't work in your favor. Bad luck to that. But sales volume did fall by almost 7% on a year-on-year basis in the first quarter of FY27. So we'll try to understand the outlook going ahead, and the moderation in the production capacity was there on a temporary basis. So short-term issues are definitely there, but long-term it seems the trend is strong. So this is the entire picture for Jindal Stainless. I've given you both sides of the plate, good, negative, but another important rating criteria is there, which we get in income statement, balance sheet. We also get you the cash flow and the return ratios, how things have panned out, and we have taken a sizable time in our analysis. Shareholding street cred is also very much important, where we give you how the movement has happened, and yes, promoter buying has been there. So we'll understand that. And also let's look at the valuations, also how things pan out, and lastly the analyst take, how much analysts are bullish on it, and the street cred, how this has become a multi-bagger. We'll get you all those numbers. But let's start with the first one, that is the income statement. And largely income statement, the top line numbers a little bit of concerning, but for an industry like this, you should analyze the bottom line numbers, and that has done well, decent enough, 15-year and 16-year CAGR numbers. But a little bit of concern comes in, and this is of course on the first quarter earnings. They were largely mixed, if you talk about it, and the margin hit was definitely there, but the EBITDA margin, for the long term, is it sustainable in that 12 to 14% mark? That's what we'll try to understand. But nevertheless, the company has done well, and there is an angle of value added products to it also. So always have that offsetting analysis in your mind. One, A, there is a value addition production going on. B, there is a little bit of suppression on the supply chain. So there is always a mix and match, or a yin and a yang. So this is the margin trajectory for the company, and it's a largely neutral from my side. But let's look at the balance sheet, and balance sheet I really like. There's a reason for it. Of course, you're seeing the borrowings coming in at almost 7,341 crore rupees. But if you look at the Q1 numbers, the net debt to equity ratio, which we discussed earlier, that's important to judge the company, just not on FY26 numbers. And that is where we see the leverage ratio coming down, and that is a good management. And even the cash balances is towards the higher side. That means they can take care of their working capital and the capex expansion. So I'm going to give this a strong thumbs up in my analysis. But cash flow, remember, there is a little bit of lumpiness at play because of the industry which the company operates in. So take things with a pinch of salt when you analyze that. And largely, cash flow from operation in FY24 and 25 have been on the higher side, but a good downtick coming in, almost 3,400 crore rupees in FY26. A little bit of concern is there. Even the conversion from cash flow from operation was 170 plus for FY24 and 25. That has come down, but still decent at 107%. For a company like this, net cash flow is not an important trigger, but of course the operating cash flow would be important here. But I'm going to give this a strong thumbs down in my analysis. Return ratios are pretty decent. A business having 15% plus in the stainless steel space is something which investors say it's good, and the company has maintained that. Be the return ratio, the ROE numbers I'm talking about. So I'm going to give this a thumbs up in my analysis. Let's talk about shareholding. And shareholding, there's a reason why I have given a thumbs up to it. This is because of the buying which has started creeping in. This FY26 number is likely to go up in the June numbers as well. Why I'm saying this is because of promoter buying which has started coming in. Of course, there was a little bit of consolidation and a fall from 2025 highs, which the stock has not recovered. By the way, FIs, DIs and public is neutral. So on just promoter buying, I'm going to give this shareholding a strong thumbs up. Let's talk about street cred. I mentioned that company is a multi-bagger in the last 5 years. Let's put in the numbers, how things pan out. Over the last 5 years, if you're holding the stock, congratulations to you. You have a multi-bagger, a 5x return coming in for Jindal Stainless. But in the medium term, there is volatility. From 2025 highs, stock is still down 15%. But if you look at the lows, the June lows, which we saw last month or last month, from there the stock is up 11%, and last 1 year the stock hasn't done much. So medium term, short term, there is a volatility, but long term, the stock has rewarded the shareholders. So I'm going to give this a neutral rating to balance things out. But let's try to understand the valuations. What has happened here? The current 12-month trailing PE is just 19 times. Now compare that with the peak which we saw in the 5-year average, that is 32 times, and it is almost at the same price of their 5-year average levels. That means the valuations are attractive in the current levels, and because of that I have given the company a strong thumbs up as well. Let's talk about the last one, which is of course the analyst take or the outlook as we call it. From the analysts, there are 17 analysts tracking the stock, but not even a single analyst has a sell rating. It's a 12-month target price of 870. That's around 15 to 20% of return potential. But look at the buy and the hold. Buy, 88% of analysts are still trusting the stock with a buy rating. The remaining 12% have a hold. So definitely the analysts have given this a strong thumbs up. So this is the entire 8 ratings which I've given you, but let's revise those ratings. Where does the company actually stand? And let's get you the income statement. Largely the numbers, the bottom line numbers were decent, and numbers in the Q1 were mixed. So I've given this a neutral rating. Balance sheet is strong. The debt equity ratios, they have come down. Cash flows, a little bit of question is there. There might be some lumpiness, but it has reduced from what we saw in FY25 and 25. But return ratios, that is pretty decent because they are moving into that value added segment. It's an old company. They know how to play with the overall business model and actually mitigate whatever risk comes in. Shareholding, the promoter is buying. Valuations are attractive near that 5-year average levels, and the analyst take is quite bullish in this counter. So the total final rating for Jindal Stainless comes at 6 out of 8 for KYC. It's largely higher than the average numbers which we generally give. So that will be a pretty interesting take. But let's understand who will be joining with us. We'll have Tarun Khulbe, the CEO at Jindal Stainless. And let me point out an interesting story about him. He's an industry veteran with more than 35 years of experience, and also appointed as the CEO of the company in January 2024. It's just been 2.5 years. And he's ex-ThyssenKrupp, which was formerly the Raymond Steel, and interestingly education MBA from Jamnalal Bajaj Institute of Management Studies. Tarun, good afternoon. It's always a pleasure to have you with us at NDTV Profit. A very interesting take in the first quarter. The numbers came in. Of course, a little bit of stress is there, but I want to understand the volume outlook, because most of your sectors you spoke about, the volume trends are pretty strong.
Good afternoon, Sharad. The stainless steel market, we have been always bullish about the domestic market, and even in the past we have indicated that in the midterm for the next couple of years we expect the market to grow at a rate of around 7 to 9%. And the same thing is visible to us. All the sectors, be it automotive, process industries, transportation, the railways or infrastructure, metros, everywhere we see that growth coming up. And of course, because India is also growing, so the same thing is being reflected. Beyond this, also stainless steel is finding its place in the new applications, because as you must have read even the recent news where it is estimated that the country is losing around 14 lakhs crores on account of corrosion, and stainless steel is one of the product which helps in in countering this problem. Beyond this, stainless steel, of course, helping in mitigating corrosion, has its own weight to strength ratio, and all this is giving its place into the newer applications, even in the EV buses, new energy sectors, green hydrogen generations, and the nuclear power and all these applications. So all this, with all this, we believe the demand, which is we have already projected, will be strong. It will remain strong, and we are very hopeful, and that is why we are also preparing ourselves accordingly. Our capex plans, our growth plans, and That is why we have also given our long-term story of targeting to be a player of 3.5 million tons by the FY29.
Right, so that's the important guidance coming in. Tarunji, the margin pressure was there in the first quarter. Do you think this margin pressure will come or stay in the second and the third quarter, or is it bottoming out?
So the first quarter of this year, Sharad, was a bit something unusual, I'll say, because the Middle East war took place and a lot of disruptions in the fuel supply, particularly LPG and propane, on which we were having a lot of dependency. Also, there was a disruption in the logistics supply chain, and the prices also of the raw materials going up, whether nickel and chrome. Now, all this together, this disruption created problem for us, because of which, in fact, we had to take a cut on our production. So, if you look at our Q1 numbers, there is a year-on-year basis, there is a reduction in the volume of around 7.5%. But so far as our EBITDA per ton, what we had projected before, or what we had the guidance, what we had provided before, we are still able to do better than that. We had given a guidance of EBITDA per ton 18 to 20,000. We have ended up with 22,900. Now, the reason being that being an old company, like you were also saying that we are a more than 50 years old company, we have presence across sectors, across grades, across various thicknesses of whatever application. Because of that reason, when we saw all these disruptions coming in the volumes, we decided to focus on the sectors and the areas where the value creation is better, and that has helped us in performing on EBITDA per ton basis.
Right.
Better than what we had projected.
Right, Tarunji, that's a very good business strategy, to be honest. And the debt reduction has also come in. And during this time when things are wrong, you have been actually reducing your debt also. Further debt reduction plans, because your net debt equity ratio has come down from almost 0.86 to 0.53?
So, Sharad, we had given a guidance of reducing our debt around from 2,500 to 2,800 crores by the end of this year, from a level of 2,950 crores. And that is along with the capex guidance what we had provided from 2,400 to 2,600 crores. So we believe that we are on course, and we are very mindful of our ratios. We want to keep them very much in control, so that we are prepared for our larger journey, which we have already announced to a bit, or details we have yet to provide, but our greenfield and all what we'll be announcing shortly, which we have planned in Maharashtra. So for all that, we are keeping ourselves prepared.
That we can see, your debt levels are lower, cash levels are high, and largely we can expect large set of announcements coming in from the company, and maybe this is the first time we are hearing in KYC also. But any expansion plans which you would like to share with us broadly? We don't have to give us any numbers, but you discussed a little bit about capex, but expansion in which areas we can expect?
Okay, so whatever the capex, what I have broadly, what the numbers which I gave you, Sharad, they are broadly to enhance our downstream capacity. So, but these are the announced capex, whatever we have announced so far. So they are more for increasing our downstream capacity, and also to increase our efficiencies, operational efficiencies. But the larger capex which we have yet to come out with, and of course, because we have already stated that our next journey, because the midterm journey of 3.5 million player which we are targeting by FY29. Beyond that, for our journey beyond that, we have decided that we will expand at a new location, for which Maharashtra state, as of now, we have identified and we are working on it. But the details of that we have yet to come out once we do a more sure work on our land, and then we'll be coming out with our definitive plans for that capex.
That's a pretty interesting because, of course, your exposure is there in North India also, and now you're increasing it across. Already have presence abroad also, Indonesia and Spain, if I'm not mistaken. But the value-added product segment, that is where whenever there is a margin pressure, your company actually does a turnaround because of the value-added product segment. I wanted to understand from your company specific, not the industry specific, what are these key value-added products you are looking out for? Any new launches or timelines, if any? Because I'm sure every 6 to 8 months something new comes up from your company. So I wanted to understand, the viewers wanted to understand what's next in the value-added segment.
Okay, so like when we say one of the value-added product is the cold roll form of the product. What is there in the system, then across that various grades comes out, and cold roll product, like as of now we are somewhere around, out of our total basket of products, we are at around say 54%, which we are targeting to take around 68% by FY28. And that is why all our investments I talked about. So essentially, we are keeping these value added cold roll products in our target, and we are quite focusedly working on them.
Okay, so you are working on your value-added products. But one more interesting take, and of course, we have already spoken about the supply chain risk, so I'm not going to go there. Because now India is being looked a very big place for precision manufacturing, stainless steel. Globally also there is a rebuild happening, and a lot of inquiries are coming for Indian products, especially also in stainless segment. Your export outlook is little, not so much, but does the story change now? And if yes, are the inquiries coming in? If you could share on that.
Well, export, Sharad, for us is an important market, and important, and we give it due value. But the point is that in export is having its own challenges and uncertainties as well. Most of the economies, they are protecting their market also. So at the same time, the domestic is growing, and we are very bullish on our domestic market. So we are quite focused on our domestic market, and just keep everything pretty focused on that. But at the same time, export, we have a very long-term relationship with many of our customers. So we continue serving them despite challenges which keeps on occurring, logistical challenges and this policy challenges by their government, but are still maintaining a certain number over there by serving the customer who trust us and who are into long-term relationship with us.
Right. So that's the entire view coming in. Thank you very much, Tarun sir, for taking out your time, explaining us about your company, how you have actually navigated the issues in the first quarter, and of course, what's your target going ahead. It's always a pleasure to have you with us at NDTV Profit, and best of luck. So a very interesting story coming in from Jindal Stainless, and interestingly, promoters have been buying also while the stocks valuations are at their 5-year average levels, and companies speaking something positive as well. So for interesting stories like this and maybe alpha opportunities, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and
Absorbing the previous session's cash surge, Nifty today trades around 24,500 levels, with broader markets too moving in tandem. Most sectors bear the cash anomaly brunt, trading in the red with only media and metals in the positive zone. Real estate as well as IT are the top losers in trade today. LIC shares crack under pressure after the government launches a two-day offer for sale to divest up to 6.5% stake. The OFS opens today for non-retail investors at a floor price of 382 rupees per share. Dabur is in focus after the FSSAI barred the company from using 100% claims on products including honey, ghee and edible oils, saying such labels are ambiguous and unverifiable and could mislead the consumers. Ather Energy is buzzing in trade after a strong June quarter. Revenue almost doubled, losses narrowed sharply, while robust retail demand, surging pre-orders and leaner dealer inventories signal improving execution for the company. KEI Industries is gaining after delivering a strong June quarter performance and announcing a 700 crore rupees capacity expansion in Rajasthan. The project will boost cable as well as the GI wire capacity, with commissioning planned in phases by the year 2028. Good afternoon. You are watching Markets at 12. I'm Nisha Podar, and let's take you through the market momentum at the current moment. And yes, the cash surprise that really came in and hit us at the last hour of trade yesterday, that is having some impact on our overall momentum, because remember, the closing price was just so high on the spike. So therefore, a 1% drop, while Nifty 50 is above 24,500 all levels. All right, leaving aside the technical aspects, but
but also take a look at how the market sentiment is today. Well, Hindalco is the top gainer with adding only 3 points to Nifty 50, while the rest of the pack really looks in the red zone. HDFC Bank really eroding over 40 points from Nifty 50, as well as big boy Reliance Industries, ICICI Bank, Infi, all really having their bit of pressure. So that is the overall contribution when we talk about Nifty 50. And when we take a look at the sectoral play, metal being high, beta is showing some positive momentum. Media anyways has a smaller weightage on the overall market as well. But Nifty is the key dragger. In terms of the internals, well, while Nifty 50 is down just over 1%, it's the mid-cap universe which is really outperforming the key indices, but still in the red zone. So there is some selling pressure there as well. 0.5% down on mid-cap universe. In fact, Nifty Bank is the one which is really taking a charge in terms of the downside momentum of the overall market. So that's the broader picture for you. Let's get chatting with Achin Goel, who's the CIO and fund manager at Bonanza Portfolio, joining in with market expertise and the outlook going forward. Achin, how do you assess the market momentum today? And there is a broad-based pressure that we are really seeing after a good day of trade yesterday, where the fuel prices, crude oil prices softening really weighed on the market in terms of positivity.
Hi, Nisha. Thank you for having me. And, markets dynamics, play out and span out in the manner probably we don't envision or foresee. Having said that, banking is having a slightly negative impact on the, index today. And definitely, some impact of the post-closing thing that happened yesterday. We are seeing a 1% drop in Nifty. Overall, if you will look the broader market in terms of results, the earnings seasons, I feel the markets are on the positive side. There are a lot of positive triggers, in fact. So I'll take every dip as an opportunity, to kind of create and build the portfolio for the investors. So markets are volatile; they're on the downside, but overall, I believe the Q1 earnings season so far has been pretty good. There are good sectors that one can look at.
Right. So you mentioned buy on dip strategy, and you also mentioned some sectors. Which are those sectors which are really good for buying in this particular dip at this point, Achin? Because the sectoral play and the thematic play are different, and they are also changing very fast with the geopolitics and the various other factors.
So, Nisha, some of the sectors, if you will actually look at the automobile numbers, the numbers have come very robust. One of the highest numbers that you will see in the, automobile, almost, 4.7 lakh dispatches of the passenger vehicles, and, roughly 12 lakh plus of, sales in PV. And across, whether it's commercial or EV, it has been the strong quarter for automobile. So one of the sector I would bet upon would be the automobile for the long term. Definitely EV will be adding to that, and it's not only pure auto but ancillary as well. Another sector again, I think I've been telling for the multi-decadal flow will be a capital good and electric sector. Because the kind of power growth story that is going to unfold in Indian economy, I believe this sector is someone that one cannot ignore. And definitely it's running at high valuations, but I feel this is some, for patient investors, this is a good sector to be in. And so, yeah, I mean, and one more would be the healthcare one. So healthcare, if you will see, the numbers have been pretty good. Healthcare, health tech, so those are another sector that you will see there's no negative surprises, except few. In fact, some of the companies have posted very robust numbers, more than the expectations, beating the market expectations. So yeah.
All right. But Achin, you mentioned EV as well as the ICE and the entire auto sector. In the EV space in particular, while we are looking at electrification, today again, Ather Energy is up almost 15%. The numbers are looking very good. Give us a more detailed sense on this sector. The valuation dynamics also, because during the fuel shortage, it did run up quite a bit. In terms of valuations, how do you see? And for mid-term as well as long-term growth propensity, what will be the outlook?
Sure. So Nisha, I will have an analogy with service defense as a sector. If you will go, 2 years ago, the defense was some, darling of the street, and everyone was chasing defense, and valuations did reach out to a peak. One more sector that had the similar kind of run-off was the solar energy and solar panel sector. Everyone was chasing solar, and the valuations went too steep. So similar kind of bull run we are seeing in the EV sector. And definitely the valuations, I would not say they're very comfortable, but at the same time, markets discounts, what is the future earning, right? What's the outlook? So one has to be cautious if someone is looking for a short-term play. But if your vision is, for long-term, again, I'm talking about 5-7 years, then EV is a place you can comfortably enter and go with a staggered approach of investment. Don't go, for a, immediate bulk investment. So stagger your investments. That way you'll get that comfort of valuations. But long term, I feel it's a good play.
Right. Achin, also earnings play a big role, and we are above the halfway mark of this particular earnings season. Looking at the momentum and also looking at the fact that probably the higher crude prices have really made up for a large part of the month so far. Looking at both these parameters, how would you assess the earnings-led impact on the market for at least this calendar year?
So, Nisha, so far, if you will look at the earnings expectations, from the Nifty companies, they were close to around 9 to 10%. And so far, the earnings have been close to 11%. So the upside revision has been there, that has been seen in Q1 earnings, which is pretty positive. In terms of EPS, if I look, EPS for this quarter is somewhere, close to 300. And by the year end, my expectations are it will be close, 1250 kind of thing. So the growth, the upside, the headroom, if I talk about the Nifty, at a maybe 21, 22 forward P, I see somewhere close to 26,500 to 27,000 for the top 50 companies. So that is the headroom I, see for the top companies. Overall, Q1 earnings have been positive. Like I said, if I look at the ground level triggers, which comes with GST numbers, which comes with automobile number, which comes with $40 billion of inflows, that government launch scheme. I think that is phenomenal, and it's going to propel the growth, increase our forex reserves. So I think it's just a positive environment I'm enjoying right now, Nisha.
Right. Positive environment, definitely good. And as we speak, positive environment, well, the market, or at least Nifty 50, is at its day's low, but still, holding above that 24,500 level by the teeth right now, Achin. All right. Looking at some of the other factors also, Achin, do you foresee any impact of monsoon delay that would really show up later in the year? And also, we are soon getting into a longer festive season. So looking at this particular momentum, what are the in-house views on the levels for Nifty that we can really look at? And you also mentioned staggered investment at the current level. What percentage of the cash would you keep aside as a reserve for more such dips to really capitalize on?
So I'll address your later question first, because at our fund right now, we are maintaining cash levels anywhere between 7 to 15%. And the staggered buyings will be used as and when the dip comes to, buying the opportunities, and quarter one results will be definitely throwing some good stocks, for the investments in the long run. Coming to the rain part, right, the deficit, the monsoon, so far we are expecting maybe around 6 to 7% of deficit during the season. But India as a country has been prepared for the deficit. A lot of storage provisions have been done. So honestly, will you see an impact on inflation because of the deficit, or impact on the market movement? My guess is probably that will not be the case, even if we are in deficit of 6 to 7%. Coming to the festive season long haul, that's one time of the year that all the investors look forward to, and I'm expecting a good build-up from here. Even FI's data, if you will see, for the month of April and May, there was close to 65,000 crore of outflows, and in the month of June and July, there has been a reversal. We have seen close to 17,000 crore of FI's inflow. So FI's are turning positive to the Indian market. That's a big thing.
Yes. So FII, yes, that wields a lot of power on our market and the overall momentum. But Achin, my final question to you, of course, the RBI policy meet is tomorrow. Banking sector is a key laggard in trade today, may or may not be connected in events. But how do you see the expectation from RBI and any particular aspects to watch out for when it comes to banking and rate-sensitive areas?
So, Nisha, honestly, given the inflation is under control, I don't see that there's any need for the change in the monetary stance. So, 5.25 will remain at 5.25 is the best guess. So, expecting that the repo rate will be held at the same levels. We are in a comfortable position, and taking any preemptive step at this point of time might be a little early. So, it's wait and watch, but our estimate is that we'll be going for the same repo rate, no change. And maybe sometime, a quarter or two, we may see an increase by 25 bips is what my take will be.
Right, so that, Achin, is a very important, outlook being given, because you already mentioned the inflation aspect, and combined with that, the interest rate uptick that could be expected later in the year. Thank you so much, Achin. Always a pleasure to get chatting with you with your expert take on the markets. All right, moving on, let's shift focus on one particular counter, and we are talking about from the FMCG space, Dabur. It has cracked about 3.5% in trade right now, and that is because of the news development. Remember, food regulator FSSAI has cracked down on Dabur's 100% claims, directing the company to withdraw the select products and comply with the labeling norms. In fact, my colleague Mahima is right here with more details on what the FSSAI directive really means and how is Dabur really impacted. Mahima.
Right, so Nisha, as you rightly mentioned, so what's happened overall is that FSSAI has directed Dabur to stop selling select products carrying a 100% claim. What this means is that products include, and for this particular aspect, products include like honey, apple cider vinegar, coconut water, coconut milk. There's also virgin coconut oil, sesame oil, and cow ghee. The regulator is claiming that 100% natural, 100% pure, or 100% organic are misleading and violating the labeling norms as well, and that's why they've asked to kind of get it back, retrieve it back, and Dabur has been asked to withdraw all of these products. Now this could possibly have a temporary disruption in terms of sales that could affect the products and may require relabeling before they return to shelves, and it also signals a tighter regulatory scrutiny around the fact that the labels cannot mislead. While the immediate financial impact, of course, is not very quantifiable, but it'll be a wait and watch out for. In fact, the statement that came from them said that they've received the FSI notice and are in the process of checking the content mentioned in the notice, and the notice is also on their website. This is the statement that we've gotten so far, but we're awaiting a proper reply or a proper filing from the management of Dabur to kind of help us understand as to what's happened exactly.
All right, Mahima, thank you so much for putting that together and giving that perspective, and of course how it will impact Dabur in terms of numbers, and they will probably have to also do the relabeling and that cost as well. All those will be important guidance for the stakeholders here. Moving on then, let's get chatting with one of the managements basis the numbers. Unichem really delivered a record June quarter with the revenues really surging over 7%. All right, and Unimec Aero is what we are talking about, and 7.5% jump when we talk about the stock reaction to the kind of surge in revenues that we have seen, and the EBITDA of the company has almost doubled. In fact, Ramakrishna Kamojala, who's the CEO of Unimec Aerospace and Manufacturing, is joining in. Always a pleasure to welcome you on NDTV Profit. My first question, it's record quarterly figures when we talk about the revenues and the uptick in the profitability as well. What were the key drivers in your view, and how sustainable are these drivers for this present quarter in terms of the performance?
Thank you, Nisha. Good afternoon, everyone. Yes, this quarter is a fantastic quarter. I can say, one of the best quarter ever in Unimec history. See, I think the main driver for this is Unimec has fundamentally the tooling segment, which is the primary segment, always high margin segment. Last year, when the utilization, the overhead utilization was lower, yes, we have seen slight pressure in the margins, but however, when we started utilizing it better way, and the quarter, if you see, the current quarter, Q1 is one of the highest quarter in the Unimac history, and as the quarter's revenue is increasing, the profit start coming up more. That's the primary reason. And also in the sense the efficiency level is also slightly increased. So, and we were very confident that this kind of margin is sustainable, and because the other segment, whether it's a PCA or the within that nuclear or semiconductor, all are kind of a good profitable segment, and I don't see any reason why it can go down.
That's right. And you mentioned about all the segments. We'll come to that, Ramakrishna. But my first question on the follow-up of the momentum is that in terms of the profitability, and you talked about the efficiency and how higher revenue is really adding to the profits and profitability parameters as well. But in terms of efficiency, what are the key levers that can be pushed further? And the EBITDA margins that you have really clocked in, a growth of QOQ, almost 37%. Is this sustainable? Can you give us a guidance for the present quarter?
Yes, primary reasons I can give you confidently that if you see for the last 6 months or more than maybe 8 months, the hiring is very high. In fact, in the last 3 months to 4 months, also heavy hiring happened. Now our employee cost is almost 15-16%. With 1,200 employees working, and many are recently recruited, and operational cost, which is 13%. And when you see, these are all 3 to 4 months of kind of overheads added, and when the scale up happened, definitely operating leverage will kick in, and the profits will come up. And second thing, our second business segment, which is precision component and assembly, PCA segment, which is a kind of new business. We started 15 to 18 months year old segment, and this segment heavily new product introduction or qualification process is happening. Last even last quarter 166 new product introduction happened, pro outs happening. When pro out and qualification happens, generally those segment will not yield margin, and going forward these are the new products, which is 165 as mentioned, and some more 300 new products are already happening. Put together 550 new products are going to be production mode. When production mode happen, and this segment will give revenue. So, and the other thing is like the new acquisition, Hobel Bellows, where the acquisition is completed, and the last quarter we have had only 2 months revenue, but going forward it is going to be complete 3 months revenue per the quarter will be there. So revenue will increase, and margins will come up. Overall, the coming quarters, that 36.5% whatever we have achieved so far, I don't see any reason we'll go down below that.
All right. So you'll sound very confident, Ramakrishna, when you talk about the further momentum in more improvement, and the areas that you are the choice sectors as well. You spoke about aerospace, semiconductors, and PCA, many other sectors also getting added, and products really getting added in the pipeline. When we talk about Unimac's aerospace division's fund utilization, that has really changed. Can you take us through the strategy behind it, and what will this fund allocation change really mean for the company?
Fund allocation, as of now, the majorly two segments, like an organic and inorganic segment where we are investing. Last year or last quarter, we have seen, the major investment happened on inorganic Hobel Bellows acquisition, which is into locomotive sector, industrial segment. We have invested, and last 12 months, investment happened on the capex segment. And going forward, also, if you see, always Unimac focus is in both capex and inorganic will be there, when the intention is to add capacity and capability. And capability side, we always prefer acquisition in rather than greenfield. So yes, the policy of the company is to expand and invest on the capex, and the fund allocation is majorly going to be organic, and always room for inorganic growth also.
That's right. So for your, capital expansion plans, the capex allocation is really cut to 23.5 crore rupees, down by about 11 crore rupees. Guessing that you would not require any more capex and fundraising. First on that, and a view on order book, an outlook for this year on order book momentum and what you're seeing in the pipeline.
Sure. The first part in terms of capex. Right now, the capex we don't foresee any major capex during the year. That was the original intention when we budgeted for this year, and the depreciation what you have seen, the quarter 8 crores, which is going to continue to every quarter in the coming 3 quarters as well. However, of late we have seen a lot of the traction from customers, in terms of new prove-outs, in terms of new qualification, and some of the LTS we have already signed and going to be signed, which will give a kind of view that the aero sector as well as semiconductor sector always need to be ahead of capex when it comes to capex investment, then demand. So we don't want to lose this opportunity in terms of when we foresee that just because of capex, kind of insufficient capex, we don't want to lose opportunity. So we are watchful of the situation and kind of view among the management that we need to be slightly accelerate the capex investment in this year, and to that extent, if fund required, we might go for fundraising and all those stuff. That was the first thing. And second thing, in terms of order position, we are right now, the order position is still strong. 280 crores plus order book is there. In that, 80 crores is from the existing the business one, which is aero tooling business. And generally, business tooling, the tooling business number one is always short-term kind of orders, which is 3 months or 3.5 months order kind of cycle will be there, which is going to be delivered in 3 to 3.5 months. The remaining comes from the PCA segment, which is Precision Component Assembly segment.
Yes.
And PCA segment is mostly going to be delivered. I can say 60% is going to be delivered in this financial year, and maybe only nuclear portion, which is 80 crores, we have 50% is going to be delivered in this year, and remaining 50% going to be delivered in the Q1 of the next year. It means 280 crores. I see around 210 crores or 220 crores is going to be executed in this financial year only.
All right. So quite a good summation, but the biggest highlight from you from this entire conversation is definitely confidence in the building of the performance from here on as well. But the focus on capex for this particular year, and you may look at more fundraising to fuel your capex plans. Of course, you are in growth sectors. All the best for that. Thank you so much, Ramakrishna, for joining us on NDTV Profit.
Thank you very much, Nisha. Thank you very much.
Thank you. All right, the government is planning to overhaul the zero MDR framework for digital payments through the changes to the Payments and Settlement System Act. And the move could really give the centre greater flexibility to decide which payment modes qualify for MDR exemptions. In fact, my colleague Shrimi is here with all the details. Tell us, Shrimi.
Well, absolutely. The government is all set to change the zero MDR policy by repealing the Section 10A of the Payment and Settlement System Act, which currently mandates that banks and payment service providers cannot levy merchant discount rate on any UPI and RuPay debit card transactions. So this is very, very crucial because the proposal comes after months of industry discussion over the sustainability of the zero MDR regime, with payment companies and banks arguing that the absence of MDR has made it difficult actually to build a commercially viable payment ecosystem. So what is happening is that instead of a blanket statutory ban, the government is proposing a notification-based framework under which the centre will decide which digital payment mode will continue to enjoy zero MDR status. Now, in other words, only payment instruments specifically notified by the government will remain exempt from MDR. While the proposed amendment in the bill itself does not impose MDR on any payment instrument, it creates the legal framework that could allow merchant charges on the digital payment modes not covered by the government notification. Now, the detailed framework is expected to be notified by the centre in consultation with the Reserve Bank of India after the law comes into force. But do note the fact that the MDR is, in whatever form it's coming, will be levied only on the large transaction, and that threshold will expected to be around above 2,000. So let's await for that clarity. But for now, the government is making the provision in the law for the digital payment levy.
All right, an important development. Thanks, Shrimi, for that. Completely out of time on markets at 12. But do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। P-Mark सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Hello and welcome to NDTV Profit. You're watching Trending Stocks from the NDTV Profit Suzlon studio with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Bid with all the action in the markets today. Sharad, interesting first day after the CAS settlement that we've spoken about as well in terms of the new auction regime that we've been following. If you have to look at yesterday's closing versus the way markets opened today and what midday is telling you, how are the cues looking like?
Well, Hiral, this is the first time for us also, and remember this is the first expiry also coming in for Nifty under the new auction norms. Of course, we had a gap down opening, but seems like there is a rebalancing at play, a little bit of profit booking, and we are at the day's low level when it comes to Nifty. And the story is same for Nifty Bank also. Nifty is down almost 250 points. Nifty Bank also down almost 700 points. A little bit of, you could say support is coming in, but will it sustain or not? That's a big question, and you can expect volatility in the last, half an hour of the trade as well. But how does this volatile session pan out? Compare this with yesterday, there is a big change. The first Nifty expiry under CAS. This is very much important. Remember, there are adjustments happening, there are profit booking happening, so there will be volatility here. Also, importantly, the support levels right now, what we are seeing from the day's low level is this 24,400 to 500, and for Nifty Bank, it's that range of 57,000 to 57,500. But let's look at the other key details. Traders say take lesser positions for the retail with important stop losses, and if you do not have major positions, you can stay back as well. That's also a strategy, to be honest. Value buying, however, continues for the small caps, and the metal sees buying, while realty and IT positions are reversing. But will this sustain or not? That's the big question.
Also Q1 earnings, the focus is there, but majority of the major ones are in the red. Bharti Airtel, ONGC, Marico, and another group of stocks are there in the Q1 space where we would be focusing. That's Pidilite and Nike, and only BSE is there in the green ahead of the earnings. So it's pretty interesting day, even if Q1 earnings impact might not be adjusted, because of so much volatility happening here. So it's a wait and watch right now, Hiral, when it comes to indices as well as stocks.
Wait and watch. In fact, you're talking about volatility. Let's just quickly pull up the VIX as well once again and see what's happening in terms of the India VIX in today's day of trade. And then we look at the entire watch list that we're tracking. There you go. I mean, you are at the day's highs 2.5% up, but you're still tracking levels for around 12.2, which is pretty reasonable. The moment we go beyond that 14-15 kind of a mark is when you will have to be slightly cautious. But right now, we are seeing investors which are slightly sitting on the sidelines as well. But moving on. In terms of the watch list, LIC, a very important development where the government is divesting 6.5% stake via OFS, and that's the reason why you're seeing pressure building up there. 7.5-8% is the kind of downtick, and this is something what the street somewhere expected ahead of the NSE IPO as well to meet some of the regulatory norms. NALCO, there is a double upgrade coming in from a NALCO from a Kotak Securities to a buy, and that's the reason why that stock is buzzing in trade. Paytm is down 1.2%. Pine Labs, though, is up 0.4%. The government is likely to revamp the no MDR regime, which becomes positive for both of these players, but no major reactions coming in there. In fact, in terms of Paytm as well, there was a large block deal that happened this morning. Ather, Q1 pre-orders up 158%. The losses have narrowed. That stock is up in trade. And likewise, Restaurant Brands Asia is also buzzing in trade because the losses have narrowed to some extent. KEI Industries, a very strong set of numbers that have been reported. In fact, we spoke to the management as well, where the management has indicated that in the second half of FY27, they're going to be able to narrow the gap between the largest player and themselves. And that is a very interesting commentary coming in from there. Jain Resources, EBITDA margins are down 180 basis points, and that's the reason why the stock is reacting negatively, because all the other parameters are on the positive end, but it's only on the margin profile that the stock has been under pressure. Kalpataru, EBITDA loss has widened. Sambhav Steel, the profits have jumped 68%. UPL, a weak quarter. The CEO, that's Mike Frank, has stepped down. Unimec, we just spoke to the management. It's the highest ever quarterly revenue that the company has posted. And you have a Sanatan Textiles. We'll be speaking to the management soon, where the margins have dipped by 120 basis points. So that's what we're looking at in terms of the watch list. But Sharad, over to you to take the rapid fire.
Thanks a lot, Hiral, for that. We are joined in by Somil Mehta. Good afternoon, Somil. Always a pleasure to have you with us at NDTV Profit. We start our rapid fire round, and I want to get in NALCO here. Of course, some reversals are happening in the metal counter, and that's one of the top gainers, or you could say only gainer in today's trade. Do you think there is a sustained move to make another, profitable trade on this counter, or do you think any other metal stocks are doing well here?
Good afternoon to everyone. I'm bullish on NALCO, I'm bullish on Tata Steel as well. So both the stocks are looking really good to me. Even Hindalco is looking good. So all three stocks are definitely looking good. NALCO has run up a lot in the last couple of trading sessions, so I'll be expecting a little bit of cool off, but overall view positive. I'll be expecting the stock to go till at least 400 levels.
Right, Somil, next stock, arguably one of the best IPO performances coming in from Ather Energy. Stock has doubled from his IPO price. Do you think it's good time to book some profits off?
It's been in a very good uptrend. It's a very strong uptrend. Every time it comes down to 40 daily moving average or 20 daily moving average, it takes support and starts the new move on the upside. I'll hold on to it. I won't, book profits in the medium term or investment strategy. But if you are trading short term, definitely book some profits.
Right, another stock is Restaurant Brands Asia. Of course, on a long-term basis, the stock has been beaten really badly, but now the losses have reduced. A good institutional buying or HNI buying is coming in this counter. Do you think these volumes will sustain? And if yes, at least in the medium term, what target prices we should be looking at?
This stock is looking good. It has started moving up. In the very short term, I'll be expecting the stock to go up till at least 93, 94. In the medium term, probably 105, 110. But keep your stop losses very tight. Around 76 is my stop loss in the very short to medium term outlook. So keep a strict stop loss and hold on to the position.
Right. KI Industries also, numbers were decent, and brokerages also turning bullish in this counter. Do you think there is more leg for this rally to be there, or the rally has already happened?
The stock is already in the uptrend. I'll be expecting the uptrend to continue. There was a small correction in the medium term. In the short term, it has again moved up. I think the next level on the upside would be 5,700. So I'll be positive. Keep holding on to this position.
Right. And your view for Sambhav Steel, numbers largely were strong, at least on the top line basis. So how do you see this counter going? A good buying coming in, stock is up almost 5%.
Just give me a second.
Sambhav Steel, it will have a smaller history, but nevertheless what you can see on the charts.
Absolutely positive on the stock. Stop loss should be 117. The medium term targets probably would be around 135, 133 levels. Keep those levels intact. With you, and keep a very strict stop loss around 117, 115 levels.
Right. And is UPL a buy the dip candidate here, or you'll stay away from this trade?
I was very positive on the chemical stocks, and UPL was one of the topics till yesterday, but today it's been a little surprise. I'll stay away for now till the time it does not give a breakout on the upside. The breakout for UPL is above 332. So keep that level in mind. Right now, avoid.
All right, avoid coming in from UPL. But over to you, Hiral.
Thank you for that. How about a Sanathan Textile as well, Somit, or any of the textile players? In fact, if you pull up a Sanathan Textiles, in terms of earnings, it's a mixed quarter that the company had actually delivered. A stock down, 2.2% in trade. What would your recommendation be on this one?
Yeah, I'm positive on some of the textile stocks. Sanathan is one of them. It has broken out of a small triangle pattern. It has been consolidating right now, but I'll be expecting the stock to go up till at least 510 in the short term, and then 550 in the medium term outlook. However, keep a very strict stop loss around 434. You can hold on to it. Gokuldas also looks all right to me. But keep a very strict stop loss to all these stocks. 200 daily moving average for Gokuldas would be 760. So that will be a very, very strict stop loss for the stock.
Okay, so that's with regards to where Gokuldas Exports goes as well. But thank you so much for joining in. It's always a pleasure to speak to you. But moving on, as we've been talking about the textile space and Sanathan Textiles as well, on the back of earnings, joining us to talk to us about how the quarter has been and what's the outlook going forward, Samir Dattani, Executive Director of Sanathan Textiles, joins in. Samir, welcome to the show, and always a pleasure to speak to you as well. If I have to look at the earnings, I mean, the margins have been impacted by the raw material volatility. You have mentioned as well that the demand environment somewhere is improving. If you have to take cues from what has happened in the first quarter, how different is the remainder of FY27 expected to look like with things somewhere normalizing?
So we're at a very interesting journey right now because we have current operations at Silvassa. And in fact, in the Q1, we have had improvement in our EBITDA margins. Even our PAT margins and absolute PAT number has improved quarter on quarter as well as year on year. That is showing a clear sign of rebound as far as demand is concerned. On the other hand, our new facility is in Punjab, which is still...
Samir, I'm just going to come in over here. You mentioned that your profitability has improved even on a year-on-year basis. Are you talking on a consolidated level? Because on consolidated...
For the Silvassa standalone.
Okay, you're talking only about the Silvassa setup. Okay.
Ji. And I think that's a fair indicator because that plant is run for the entire year and it's already a stable operation. As far as our Punjab operations are concerned, it's a new capex. It's a greenfield production. It's expected to double our top line for FY27. And that plant is under stabilization. We are improving our capacity utilization, and because of which you see a higher depreciation and interest cost affecting at the consolidated level. And the absorption of this high depreciation and interest cost will only improve as we start ramping up further and improve our capacity utilization at Punjab. And I think that's when you will see the right proportion of absorption of the depreciation and the interest costs at a consolidated level. Punjab for Q1, we've managed to operate at about 80% capacity utilization, and we are very hopeful to improve that for Q2. As far as the raw material prices are concerned, Hiral, you rightly mentioned that because of the West Asia war, there's been a lot of increase in input cost from raw material as well as power, fuel, packing, etc. We saw all that absorption of input cost being passed through in the entire chain to the customers. Slowly and steadily. So today things have been realigned again, and there's been a pass through, and the entire ecosystem works in such a way that the increased cost of raw material is passed through to the customer with a lag. So we've managed to do that, the entire industry. So in Q2, we are hoping to have far more stability and improvement in our margins.
Right. Hi, Sameer. This is Sharad here. We spoke about the rising poly spreads and textile spreads also in KYC, which we had hosted you. Wanted to understand, does that benefit come in the second quarter? Because it seems like you have taken the burn in the first quarter itself all across, and of course the higher depreciation as you had stated earlier. So Q2 on the margin front, do you think it will show good signs of improvement, at least sequentially?
Hi, Sharad. Yes, absolutely. We are very positive about Q2 and Q3 being even stronger. Also, the way we look at it, we are going into season time now. The upcoming festive season and wedding season in India has always been a great demand driver for us. And this season is just starting at the yarn stage. And now, as you know, we are a very diversified yarn manufacturer. We have a large product portfolio offering to customers across filament yarns, cotton yarns, and technical textile yarns. And now we are diversified over 2 locations, our Punjab facility and Silvassa facility. So as the demand improves in the coming season, our Punjab facility will stabilize and our operational efficiency will improve. We are very, very optimistic about better margins and spreads in the coming 2 quarters.
And Sameer, just a follow-up, just ahead of the festive season or the holiday season for the global clients, does this pre-buying start in the second quarter or the third quarter? When do you actually get very busy?
We start seeing the uptick from the second quarter, and it further sort of improves in Q3 and Q4 is how we have historically seen this.
Okay. So overall, if you have to, Sameer, look at business as a whole, you're talking about doubling capacity as well, and in that kind of a scenario where there is little bit of uncertainty when it comes to raw material prices, what happens in terms of the export side of the business as well, what is a worst case scenario that you're baking in?
As far as the export side is concerned, export has been a bit slow in the last quarter. But the domestic demand completely made up for that. The volatility of shipping cost and other costs did affect export demand. Our export contribution in Q1 was 5% to the revenue. But a very interesting development that's happening as far as export demand is concerned are the FTAs with Europe, UK, which are going to be a big demand driver for the entire textile chain. So we are very, very optimistic and looking forward to those developments. Already there is improved interaction with new customers in this region. Samplings are going on, discussion and exchange of information is going on, and we are very sure this will formalize in the coming few quarters and improve export demand for us as well as the entire textile chain. As far as how we're looking at the business, Hiral, we have established our Punjab facility. We're improving our operational efficiency there. So we are looking forward to a revenue top line number for FY27 in the range of 5,700 crores, much higher than the FY26 number of 3,800 crores. And as the operational efficiency capacity utilization improves, we are also seeing an improvement in our EBITDA margins for FY27. Our absolute EBITDA number will definitely go up because of the higher capacity. So internally, we have targets for an EBITDA of 530 to 550 crores for FY27. Again, much higher than the numbers we had in FY26. The main reason, of course, being the increased capacity of the Punjab facility. And once it stabilizes, the improvement in margins, improvement in our value-added products, production efficiency, etc.
So, Sameer, I'm going to come back to my previous question that we spoke about, and when you responded about how the profitability and everything is panning out at the Silvassa unit, the Punjab unit. Now, yes, standalone business, strong growth, good margin expansion over there, as you mentioned. Consolidated basis is where you're seeing that profits fall sharply, right? From an investor perspective, if they have to actually look at the first quarter, do you think it could be called as a temporary transition quarter, or growth that is coming in at the cost of profitability?
I think it can be looked upon as a temporary transition quarter, because even at a consolidated level, the absolute EBITDA has improved because of the Punjab facility. Of course, when you go down towards the PBT levels, because of the higher depreciation and interest, which is completely hitting the books, we see this as a transition quarter for sure. That's quite well put by you.
Okay, super. So a transition quarter that we're going to watch out for. But thank you, Sameer, so much for joining in. Always a pleasure to speak to you.
We'd also like to add one more point here.
Sure.
We are doubling our technical textile yarn capacity.
Correct. We mentioned about that.
Tons. And so I just wanted to share with you and everyone who's tuned in that in the month of August, we'll be starting commercial production for the same. Currently, as we speak, the machine is being erected at the Silvassa facility. The civil work is completed and the machinery commissioning and erection is going on. So we'll also have that additional capacity for the rest of the year for the yarns for technical textile. And as we all know, technical textile is the future for textiles, a high growth segment. So we are very optimistic about that, further supporting our performance for FY27.
That's interesting. We'll look forward to as well to further updates on that. But thank you so much for joining in. Always a pleasure to speak to you. In fact, we have Tapan Doshi as well, who's now joining in. Tapan, any view when it comes to a Sanathan Textile? One, in terms of the earnings, the capacity addition that the management has indicated as well that they are looking at, and overall textile as a space, because there are supply chain constraints over there. You're talking about exports which have somewhere been a downward for the sector as well since the time your US tariffs have started. So how would you actually look at this sector and any topics there?
Yeah, of course, it's a tough time for everyone in this industry. And if you see for this specifically company also, if you see cotton price volatility is there. Again, the export is little bit slowing down. Hopefully things will be better in coming quarters and competition is also increasing. The thing is still it is quite a premium. If I talk about the valuation, I feel the premium valuation is there. Hopefully they are going to add more value added products and margin improvement will be there. But I still wait for one more quarter to things to pan out rather than just getting into this stock currently. And overall, overall sector also, I think one should wait for 1 or 2 quarters for things to get pan out in a positive way.
Speaking of positive, LIC's OFS is also receiving positive response. Now, if you take it without the green shoe option, it's almost 0.78%. And what I'm hearing from my research desk is that it's almost 0.32% if you add the green shoe option also. And if looking at the OFS, that was, of course, 10% discount on yesterday's closing price. It's one of the largest numbers, 30,000 crore plus. And if you add a lot of them from this year itself, in FY27 might be a record year for it. This year already 20,000 crore plus OFS has been there. If you look at the names, Coal India, NHPC, Central Bank also make it to the list. And the recent government activity suggests there would be further OFS coming in. So a lot of supply coming in the market. And of course, stock has taken a little bit of a selling here. But Tapan, how do you see this? Because if you adjust the prices from the IPO and the bonus, it is still below those levels. Is there any attractive accumulation at play here, or you'll stay away from LIC?
See, hi Sharad, good afternoon. See, valuations are okay only, but the problem is the growth is not coming so much. I think private players are doing much better than LIC, and again the PSU discount is coming here. If you see VNB margin pressure is there. Again, if you see the private competition, if you on all segment, they are doing much better from other than LIC. So if you see slower premium growth and looking at the valuation, all that, if someone has, please hold the stock, but new entry I'll ignore currently.
All right, that's the view coming in. But one more stock is not doing well in trade, and we had experienced that a lot of chemical stocks did really well. But one agrochemical stock is on the other hand reversing. That's UPL I'm talking about. And we're joined in by Varsha for this. Varsha, what's the reason for it? A lot of negative news flows are coming out in UPL right now. Do you think it'll sustain?
Well, overall, first, if we speak about the Q1 numbers, the revenue growth that you're seeing is, led by forex gains, and there was a volume decline also 3% year on year, and all the revenue that you're seeing is, of course, on the back of forex gains and price hike. Number one. Number two, they also did miss on their EBITDA guidance. So the EBITDA growth, if you see, came out at around 11%, and the management had given a guidance of around 14 to 18% of EBITDA growth. So there was a miss, and of course you have a key overhang wherein UPL Corp CEO has resigned, so that is also, a new CEO has not been reappointed, so that also remains a key overhang for the stock. So overall, the good numbers, the great numbers that you're seeing is of course on the back of price hikes and forex, but they also have given a guidance wherein they're expecting almost 10 to 14% of growth, 7 to 14% of growth, and of course EBITDA guidance have been reiterated, but that CEO exit is of course the key overhang in the stock.
Right. Thanks a lot, Varsha, for that. A lot of overhangs in UPL, it seems. Tapan, anything on UPL fundamentally, or do you think there is a good opportunity in the medium term for any chemical place? I want your view on UPL and any agrochemical or a chemical play where there is a good risk-reward ratio right now also.
See, if you see the margin pressure is there for this company, of course, if you know over the time what management given the guidance, hopefully the revenue will go up. But if you see the working capital intensity is there, that is what is hurting the profitability. Raw material volatility is there. Again, weather related demand also fluctuation is there. So at this level of UPL, I will not go for the UPL. I think there is clear cut pressure coming on this stock. If someone want to go, I think like Viniti Organics or some that type of stock, one can go where I can feel that I think things will be better in next few quarters.
Right. Viniti Organics is the pick coming in from Tapan. But one stock which has done well, and I think from the IPO price it has doubled. Everybody's talking about it. It's Ather Energy. A great story, good for the IPO investors and also people who entered later on. But what's the actual story behind it, and is it more there? Is there more legs to that growth? Joined in by Puneet.
Well, it's a 4x since 315 gone to 1400, and just why, because the results very strong for the company. 81% growth in volumes has led to the revenue rising by 88%. Net loss has also come down to 51 crores versus 178 crores in the same time last year. Now, very importantly, they've given two new numbers, and I think that's what the street is liking, because they've said that while we have seen a 2x growth in the retail volumes, dealer inventory is just of 3 days versus 14 days, which is also not ideal. So companies at 100% capacity utilization, and they've mentioned that they have already pre-orders of 150,000 vehicles. That's almost 3 to 4 months of consolidated sales, and mentioned that the inquiries are also rising by 95% on a YY basis. So those are some of the key factors. Price hikes, they have indicated about a 1 to 2% that they should be looking at, but the new EL platform, which will have the next set of vehicles, will be the next growth trigger, but most certainly a very strong set of numbers from the company.
Thanks a lot, Puneet, for that. Of course, a multi-bagger here. But Tapan, if you had to make a multi-bagger portfolio, will Ather Energy be in that, or any other stock would be there?
Well, yeah, it's a great stock and you can see the result also. But the problem is, I think the valuation is too high. Still, it's a loss-making business. But hopefully, they'll become profitable soon. Again, if you see the EV adoption is accelerating, that is where Ather Energy is benefited. Again, new scooters are coming. So stock is good, but I think because the valuation is too high, it will be on a buy on dips category. If someone want to look, I think still someone wants to go safe. I think Hero Honda or Bajaj will be valuation-wise are okay compared to TVS and Ather. I like it, but valuation is too high.
That's what the views are coming in from Tapan. Tapan, we are out of time right now. Thank you very much for talking to NDTV Profit, and best of luck for the future. So overall, this is the end of the show. From me, Hiral, and the entire team who put together this wonderful trending stock show. Back to you.
Thank you so much, Sharad, for that. But interestingly, if you just quickly look at the markets as well, we are at the day's lowest levels as we speak. If we just pull up the intraday chart of Nifty 50, we'll just look at Bank Nifty. There you go, at the day's lowest levels on that front, 1.2% lower there. And if you have to look at Bank Nifty as well, let's see if the pressure has continued. Almost a 300 points downtick coming in on that one, 1.3%, a 770 points downtick in terms of Bank Nifty as well. Let's just quickly look at the sectoral heat map, because there is pressure building up in terms of real estate as well. That is at the day's lowest level. So there is pressure on that sector. What's gaining is media, metals, that's it. But apart from that, all the other sectors that have been out, down and about in trade. Let's see how the second day pans out, and it is expiry, so you are expected to see high volatility as well. But completely out of time, it's time for a quick break from the NDTV Profit Suzlon studio. From all of us on the show, lots more lined up on the other side. Please stay tuned. Up next is Lunchtime Trades.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Flood.
Absorbing the previous session's CES surge, Nifty today trades around 24,500 level with broader markets as well moving in tandem. Most sectors bear the CES anomaly brunt, trading in the red with only media and metals in the positive territory. Realty and IT meanwhile top laggards. And LIC shares crack under pressure after the government launches a 2-day offer for sale to divest up to a 6.5% stake. The OFS opens today for non-retail investors at a floor price of 382 rupees per share. Dabur in focus after FSSAI barred the company from using 100% claims on products including honey, ghee and edible oils as well, saying such labels are ambiguous, unverifiable and could mislead consumers. Aether Energy buzzing in trade after a strong June quarter. Revenue almost doubles, losses narrow sharply, while robust retail demand surging pre-orders and leaner dealer inventory signal improving execution. KEI Industries gaining after delivering a strong set of numbers in the June quarter, announcing a 700 crore capacity expansion in Rajasthan as well. The project will boost cable and GI wire capacity with commissioning planned in phases by 2028. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets, and whether you talk about Nifty 50 or Sensex, you're seeing a little bit of caution really creep in. When you talk about Nifty 50, you're looking at a 270 odd point cut coming in there about. When you talk about Sensex as well, it's about a 250 odd point cut there itself. And even when you talk about the mid cap or small cap indices, slight bit of outperformance is what you're noticing when you talk about small cap, with that 0.2% gain also coming in for the small cap index. And when you talk about mid cap as well, about 0.4% lower in comparison with the Nifty's 1 odd percent downtick. Now let's quickly also take a look at the sectoral picture right now, which is, by the way, very sharply tilted in the favor of red. So it's actually Nifty, bank, realty, IT, financial services, oil and gas, rural, FMCG, all of those sectors, as you can see on your screens, holding on to a tinge of red right now. The one sector that's holding on to a little bit of resilience is media and also metals. Media doesn't make much in terms of the impact coming in terms of the sectoral indices. So that's something that you're looking at in terms of the sectoral indices as well. But let's quickly also pull up the charts in terms of some of the top gainers and losers as well from within the Nifty 50. Of course, there's something like an Aether Energy or a KEI Industries. Those are some of the earnings reactions that you're looking at. But when you just talk about the Nifty 50 as well, you're looking at something like a Trent or even a Hindalco just about maintaining some bit of resilience with that 7 point odd gain also coming in. Something like an Apollo Hospital, ITC, Eternal, Nestle India, Tech Mahindra, some of those pockets of resilience. And it's not quite resilient when you take a look at the entire picture as well coming in for some of those stocks. Just a few odd points gain also coming in. So what's really on the back foot right now is a Grasim Industries down about 3.5 odd percent, HDFC Life, HUL, Bajaj Auto, SBI Life, Titan Company, HCL Tech, and even some of your heavyweights like Reliance Industries down about 2 odd percent. HDFC Bank also down about 1.8 odd percent. And even from the financial SPAC, it's something like an Axis Bank that's on the back foot. So across the board, you can really see some pressure really coming in, whether you talk about the financial space with the likes of ICICI Bank, HDFC Bank and SBI as well, trading with some bit of pressure, even oil sensitives against some bit of resilience when you talk about oil prices. That's also some bit of a reaction that you're seeing coming in for stocks like Interglobe Aviations, etc. But let's also get you the picture as far as oil prices are concerned, since we've talked about crude sensitives. Right now, you do have Bireen Vakil, commodity consultant, Paradigm Commodity Advisors, joining us on the show right now. Mr. Vakil, thank you so much for taking time out and joining us this afternoon. First things first, just wanted to try and understand what you think about what's been playing out when you talk about oil prices. Quite some bit of volatility that you've been seeing of late.
The two popular benchmark, that is Brent or NYMEX, they are quite range bound. But if you are seeing distillate markets like heating oil, diesel, jet fuel, they are quite firm and almost decoupled from these paper barrels or futures market. I think real trend is still a structural bull market.
No, absolutely, and that's something that we saw coming in. Every time that there's an escalation, you do have prices that really go up by quite a lot. So in terms of the bottom of the barrel, where are you then penciling that in terms of just the price levels, right? When you talk about Brent and WTI, as well as if there is an escalation, what kind of levels are you then foreseeing?
Currently, market is in terms of WTI stuck between 80, 90, at the most 95. but path to least resistance seems to be upside, 90-95 maybe.
And thank you so much for highlighting some of those levels as well. Let's also get talking in terms of some of the factors that you're looking at, right? You do have Trump also renewing some of that pressure coming in on Iran negotiations. So some bit of peace optimism that you have, and his last chance warning also coming in. Just when you piece all of these together, take a look at the flows when you talk about Strait of Hormuz and some of the alternative routes. What are you then left with in terms of the direction on pricing for much of this week then?
I think three choke points are there. One is Black Sea, that is Kutch Strait, Sea of Azov. Other is Bab el-Mandeb, which is, I think, still fully priced in, is not still fully priced in. Hormuz is still in the play. So I think supply disruption is still very much alive event.
No, absolutely, and that's also something that you're looking at in terms of the shipping disruptions, really, that we've been seeing them continuing to support some of the risk premium. When you talk about Saudi export flows, that's also something that's very important to really watch out for. And just, before we move on to other commodities, also wanted to get a check going on your reaction coming in for the OPEC Plus's announcement as well. How are you then, making sense of that as well?
Production quota is seen little bit symbolic kind of thing. The production loss during this 6 months is much deeper.
No, absolutely, and that makes a lot of sense in terms of that deeper gas also coming in. Let's also quickly talk about the picture as far as iron ore is concerned as well. Just wanted to see if you tracked that as well, because it's hovering near those 13-month lows as well. You're seeing prices slightly recover. China demand seems to be a concern. Steel margins do remain under sustained pressure. So against that entire backdrop, anything that you have to say about iron ore then?
Iron ore market is stuck in a little bit credit event there, as well as deeper downturn in property market in general. So still it's a deflation story there, as well as freights. Seaborne freights are still not supporting any demand recovery. I think market may be near bottom, but still fragile.
No, absolutely, and that makes a lot of sense in terms of what we're looking at when you talk about iron ore as well. Just also wanted to try and understand what you think about copper as well, and we'll come to gold as well. Have a couple of questions there as well, but when you talk about copper, it's quite the interesting setup. It's nearing that $14,000 mark. You're looking at close to 2-month highs as well when you talk about copper, and that along with zinc, that is near some of those multi-month highs as well. So how are you then looking at the entire picture when it comes to copper?
EV is supporting zinc, especially special grade zinc, and copper is supported by multi factors, especially AI, economy, EV, and energy transition. So this is a metal which is decoupled from old economy.
No, absolutely, and that decoupling is also something that you're seeing coming in. July inflows also the highest since 2014 records. You're looking at that entire AI demand also coming in. Is that something that you're penciling in as much of a bigger trend also going forward when it comes to copper prices then?
Yes, it's a mega trend and may last for years. So copper may trade somewhere around 15, 16, 70, maybe 18. It's a secular bull market, what I would say.
No, absolutely, and those are some bull market levels as well that you're highlighting, because right now it's just inching closer to $14,000 and still at a 2-month high. When you're penciling in a $16,000 or $17,000 price for copper, that's also quite interesting to note. Speaking of interesting, let's also talk about gold prices and what's been happening there as well, Mr. Vakil, because it's a very, very interesting setup that you've got at hand when you talk about gold prices. On one hand, you have, a tale of two triggers really coming in when you talk about the hawkish Fed, when you talk about safe haven demand, as well as the way that it's not been playing out in the traditional sense as well. What are the kind of price levels that you're expecting when it comes to gold then?
After last Fed meeting, what I read is the Fed is continuously missing 2% inflation goal since last 5 years. So I think there is deep buying. Bargain buyers are preferring to go long on every dips. So I'm sensing 4,000 looks like a floor for a while. And yeah, and here also path to list resistance maybe somewhere around 4,500 by year end.
No, absolutely. And my last question to you, Mr. Vakil, just very quickly wanted to get a sense of whether or not you think this time is ripe for fresh buys when it comes to gold as well. This is something that we've been talking about right now. Do you think it's a good time to be betting on gold?
After recent rain, monsoon revival, rural demand may pick up. Good levels to buy.
All right then, good levels to buy, and that's the verdict coming in on gold as well. Thank you so much, Mr. Vakil, for taking time out and joining us this afternoon. In terms of the outlook coming in, not just for gold or oil prices, but also for iron ore and copper as well. And he's looking at a bull market when it comes to copper. $16,000, $17,000 levels is what he's penciling in. But let's also move on and talk about Samhi Hotels. That's reported quite a steady quarter. You do have revenue growth staying strong and occupancy also improving. Let's go across to Mahima, who's standing by with all of those details when it comes to the numbers here.
Right. So, Shanti, as you rightly mentioned, the operating performance has remained resilient for SAMHI despite of the, kind of external disruptions that we've seen. In fact, let's get in, the chairman, MD and CEO Ashish Jakhanwala to try to understand as to how things are shaping up going forward. Ashish, thank you so much for taking out the time. I think, I'll start by asking because you've kind of guided for operating EBITDA margins to be around that 40% over a period of time. What are the key drivers, firstly, that will kind of help you bridge the gap from the current 32%, and by when do you expect to reach that level?
Two levers here. One is that a part of our mid-scale portfolio, which opened last year, is on a ramp-up stage at this moment, and then as that stabilizes, it will start delivering better EBITDA margins. And the second is, of course, as the company shifts more from mid-scale to upscale, the impact that we've seen in the last 1 year of the loss of input tax credit from GST changes will start to make less impact. So we open W Hyderabad next year, and I think by end of FY28 we should reclaim the 40% EBITDA margin, largely on account of shifting towards upscale and improvement in our mid-scale margins.
Understood. The other part with regards to your Q1 numbers, because RevPAR was up almost 10%, 9.6% overall growth, and occupancy was nearly at 80%. How sustainable are these numbers? And in terms of the momentum, are you seeing similar demand trends continue in Q2, or do you think that Q2 is going to be better, particularly in the corporate travel and MICE segment?
What's been very reassuring is the fact that domestic demand has really stepped up and almost replaced any shortages that we had from international inbound. So that's really heartening and reassuring because that demand also tends to be very, very resilient. In terms of future, we actually see the total revenue growth inching a little higher than what we've seen in the last quarter. So if you see last quarter, same store growth was about 9%, total was about 10.8%. Both metrics, which is same store, which is comparable hotels, and total revenue growth, what we've seen early trends in Q2 is inching to be stronger than what we have reported in Q1. So for the rest of the year, we remain fairly positive and bullish that it will be ahead of what we've done in Q1.
Got it. So things are looking better in the rest of the year is the indication coming in from Ashish. But Ashish, can you provide more details on the proposed 750 crore fundraise that you've disclosed about, and how much of it will be used in terms of acquisitions versus expansion, renovations, etc., or even for debt reduction for that matter?
So at this stage, this is an enabling resolution. We really haven't engaged with any investors or made a specific plan. We are a capital intensive business. The geopolitical environment is very unstable. We continue to see growth opportunities sometimes. So I think we just want to make sure that we have the enabling resolution to provide the board with the flexibility. But saying anything beyond that will be premature because, as I said, this is an enabling resolution. And as the plan matures and finalizes, we'll obviously communicate that.
So then there would be no certain plans of how much of this will be equity versus debt. Any clarity on that?
So on the debt, I think we are in a very stable state. We have indicated earlier that we are well capitalized to fund our growth and we don't need any significant incremental leverage. These are standard resolutions which allow boards the flexibility, and I wouldn't really delve more into that than that.
Okay, and you've talked about the upscale hotels, because I want to understand the strategy as to what is going to be the strategy going forward to increase the upscale hotel mix from 41% to almost 60% that you plan to do by 2030, and what is going to be the roadmap looking like to achieve this? What should investors expect in terms of acquisitions to maybe that will play a larger role in that?
So in terms of our segment reclassification, in the sense going from 45% to 60% is not dependent on any new acquisition. That path is set in stone because we've already made those acquisitions. And as the new hotels open and get added to the portfolio, SAMHI overall will move from being 45% upscale to about 60% upscale. So that's the good news, that is not dependent on any incremental acquisition. It's basically a sum of parts when you do the maths around what we will open next year and a year after that. Company will move towards being 60% upscale.
Got it. And one last question in terms of the way we've seen healthy occupancy levels across the portfolio. Do you expect future RevPAR growth to be, that is of course revenue per available room, to be driven primarily by room rate increase, or do you think that there could be further occupancy gains coming in?
So it's interesting that we've seen the Indian cities, including business districts, deliver pretty healthy occupancy levels, going up to an 80%. So I wouldn't really deny the fact that there is still more headroom in occupancy levels. But let's not forget that we've had some bit of disruptions in international inbound because of the Gulf crisis, and that business comes at a rate premium. So in the medium to long term, as that business resumes, there's a natural upside to the average room rates, which will also tend to drive the total growth of revenue and RevPAR.
Got it. Ashish, thank you so much, for giving us that perspective, and we look forward to kind of speaking to you further in detail also, and all the best for FY27. Shansi, so basically, I think the key takeaway is that from, going forward, things are going to improve for the rest of the year, and, largely the RevPAR growth is going to come from the average room rate increase because of the kind of geopolitical situation that we are facing.
Absolutely. And Mahima, given that the stock is down, that's like music to the ear of some of the investors as well, in terms of the outlook also coming in quite bullish when you talk about SAMHI Hotel. Let's also move on and talk about something like a Doodh Transmission that is set to hit the primary market as well, with a 3,000 rupee crore IPO as well. And let's talk about the fresh issue and offer for sale that's also combined. You're looking at the auto components maker counting Bajaj Auto and TVS Motor and Honda among its key customers, and that's Doodh Transmission that I'm talking about. The proceeds are going to be supporting debt reduction, future expansion as well that you're going to be looking at. Let's also welcome the management of Doodh Transmission to discuss the business and even some of the growth opportunities that they're mapping out, the road going forward. We have with us Rahul Doodh, Managing Director, and Nitin Kalani, CFO at Doodh Transmission as well. Thank you so much for taking time out and joining us, gentlemen. Rahul, first things first, reasons for the IPO right now in terms of, having 19 plants across India as well. Just wanted to get some more color on that as well. Investing in another plant as an objective as well is quite interesting, to say the least.
We normally work at 75% of our capacity, because during the peak season, 4-5 months a year, the customer works on 100% capacity, and at that point of time we would not be able to raise 125% capacity, so we generally work year around on a 75% capacity. The two plants which we are building up, for which the IPO proceeds are also going, will increase our capacity by about 20% more, and which is required for the rate at which the market is growing at the moment.
No, absolutely, and point taken there. Just also wanted to get a little bit more of a sense in terms of your revenue as well. So 65% of this is coming in from two-wheelers, current view in terms of demand as well, and the share of EV, if you could give us some more detail in terms of that as well.
So if we look at it, there is a pretty good demand which is going on right now. Also, if you look at the concentration of two-wheelers in India, it's about 147 vehicles per 1,000 people, which is much lower than a 359 per 1,000 in Indonesia. EV, which was supposed to cannibalize on the ICE, has not happened. EV has become a +1 at home. So EV is growing as well as ICE is growing. and our overall share in this business is at about 25% of our revenue comes from EV now.
No, absolutely, and somewhere close to 13% of it actually comes in from the three-wheeler market. Just wanted to get a better sense of that as well. When you talk about electric three-wheelers, is it led by Bajaj, or are there any other players that you're looking at? And in terms of the margins as well, are they higher when you talk about three-wheelers?
No, the margins are the same. It's not about higher and lower, but we are there across all the organized players which are there. We do give the EV three-wheeler wiring systems to Bajaj Auto, to TVS Motors, to Piaggio, to Atul. We are there, and so yeah, this is the status as of now.
No, absolutely, and thank you so much for helping us out with that entire status as well. Just wanted to try and understand what you're looking at in terms of your content per vehicle. Is it higher for electric as well, and what's that looking like for you then?
So technically the content of vehicle has to go up, because a normal ICE works on a 12-volt platform and a EV works on two platforms, that is a two-wheeler works on 48-volt and 12-volt. So for that you require a HV wiring harness and a LV wiring harness. So the content doubles, because the amount of wiring harnesses also double when it comes to the EV side of it. And more than that, we as a part of the EV powertrain, we are across the powertrain. We do charging cords, we are there into off-board chargers, we are there into battery assemblies, we do the wiring harnesses for the motors, we do HV and LV wiring harness. So since the number of products which we supply to the EV industries are more, our content per vehicle goes up.
Absolutely. Just wanted to get a little bit of more detail. Now, when I'm looking at your investment in subsidiaries, that makes up about 310 crores in terms of your objectives as well. And when you talk about the investments, just wanted to get some more color in terms of what you're mapping out. What kind of numbers are you looking at there?
Yeah, so about 300 crore which we are infusing in the companies is to repay the debt there at which is standing at the subsidiary level.
Absolutely, and thank you so much for that clarification there. Just Rahul, just one last thing, before we let you go, just wanted to try and understand within New Tech any objectives that you have for looking at four-wheelers right now. Is that something that you're adding to your list of things to do?
Yeah, so overall 766 crore of debt will be knocked off the books basically, which will make us a debt-free company. And also in addition to that, we'll be using about 150 crore to fund these capexes, two capexes what we spoke about, one in Hosur near Krishnagiri and the other one in Jhajjar. And whatever is remaining, about 35% will be a general corporate purpose and unidentified M&A kind of objective. That will leave us with and we have cash surplus also at the beginning of the year. So both put together will give us about 900 crore war chest basically to handle any growth opportunities in the near term.
Perfect. Thank you so much for taking time out and joining us this afternoon, gentlemen. So that's the transmission for you in terms of the growth roadmap also going forward. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल।
बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? 6 तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks on the show today. Now, if you look at the market, it's down. Nifty is down nearly 300 points. Now, yesterday, due to some price differentiation, we saw a big gap up close. In fact, Nifty closed about the 24,700 level, while the futures was still trading around the 24,600, 650 level. Hence, this sharp fall is what we are seeing. But even if we remove that gap up close that we saw yesterday, then also markets are down by around 100, 150 odd points. But importantly, we are below the 24,500 level. Currently trading around 24,470, and technical analysts continue to believe that if the 24,400, 450 level continues to hold on the benchmark, then we are still in the bullish trend, and this is just a profit booking that we are seeing in trade today. Nifty Bank, that's also down around 850 odd points, 1.5% down in trade. Apart from that, if you look at the sectoral indices, largely all indices are trading in red apart from Nifty Media and Nifty Metal. These are the only two indices that are trading in green, anywhere between 0.4 to 0.9 odd %. And interestingly, we continue to see value buying when it comes to the small cap names, because the Nifty small cap index that continues to trade higher despite the fact that we are seeing a sharp decline when it comes to the benchmark. The Nifty small cap index that continues to trade higher by around 0.5% in trade. Now, which are the key stocks that are gaining when it comes to the small cap index? Now it's Best Agro, which is up nearly 13%. Ujas Energy again up around 13 odd %. PNGS, Reva Diamond, Poshak, Mangalam Worldwide. These stocks are gaining anywhere between 10 to 13% in trade. Then there is Elitcon International, which is also up around 10 odd % in trade. On the losing side, if you look at, there's Butterfly Gandhimathi, which is down around 9 odd %. Solar World Energy, Captain Technocraft, Expro India, Safe Enterprises and Sami Hotel. These stocks are down anywhere close to 5% in trade. But overall, a good day when it comes to the small cap index, given the fact that despite the fall in market, the index continues to see value buying coming in. But an interesting conversation now coming in on Gulf Oil. A solid set of numbers coming in by the company, largely led by strong volume growth. The stock is up nearly 2 odd % in trade. We are joined by Manish Gangwal, the CFO of Gulf Oil Lubricants. So, firstly, to start off with you, despite the higher crude prices, you were able to maintain your margins at around 12.5 odd %. What were the factors that aided the margin in the first quarter of FY27?
Yeah, so first of all, thank you for having me. Overall, yes, it was a fantastic quarter because there was a good demand pickup in the sense because of the Middle East crisis, there was a lot of demand in the system. People wanted to have supply security. So we had excellent volume growth of 17%. We all know that the lubricant industry grows at usually 3 to 4%, in good times 4 to 5%. And we have been growing 3x the market. But this time around 17% volume growth led, I would say volume-led profitability was the reason where we could deliver such an excellent result in terms of our overall revenue and EBITDA growth.
So talking about margins, the 12.5%, will margins remain around these going forward as well, or will the impact of higher crude prices be seen in the coming quarters?
No, so margins usually we have been guiding about maintaining a 12 to 14% EBITDA band. And we are happy to share that in the toughest of times like last quarter, we have been able to still manage our margins within that guided band of 12 to 14%. At around nearly 13% we delivered, which is I think nice because crude is a volatile commodity, but we are in a position to pass on the cost increases in a timely manner to our customers. And I think in these times of crisis, customers are also willing to pay because we are giving them the supply security. All our B2B customers, our OEM partners have been, asking for a supply security, and they helped us with the prices. So that was a good combination, I would say, to come out of the crisis. But yes, the crude still is volatile. The Middle East crisis still is going on, and we have to keep a very watchful condition, monitoring of the situation in the Middle East and take our calls on pricing accordingly.
Right, and the volume growth that you are talking about, the 17% YOY volume growth, largely aided by more demand coming in from for supply security. Do you see that as a one-off, or can we expect similar trends for the rest of the financial year 2027 as well?
See, we have been anyway growing 2 to 3x the market. So if the market grows, let's say at 3 to 4%, we have been guiding for a near double-digit volume growth. Yeah, in quarters like this, there is some percentage, I would say, is sort of pre-buying. But overall, our guidance of 2 to 3x the market growth remains. And we have got good overall demand from some of our marine supplies also, marine business also. But all B2C, B2B, OEM segments have grown double digit, and we expect that the trend will continue.
And sir, how has been the performance of Tyrex, which is your EV subsidiary, during the quarter. If you could share some details on that front as well.
See, Tyrex, the quarter one was, slightly subdued because some of the buses, e-buses, which are their main customer segment, they postponed their order. So quarter one was slightly subdued from the e-bus DC charger perspective. But overall, I think they will bounce back in quarter two, and we will close the H1 on a positive note on Tyrex.
And sir, what is the kind of capital expenditure, capital do you plan to invest in Tyrex in FY27, if anything, on that front?
We are not expecting any more capex to be put in from Gulf Oil side in the subsidiary. But overall, the new plant is under construction and it is in full swing. And we want to operationalize that plant by the third quarter of this year. So that capex is already lined up through bank finance and all.
And lastly, sir, with a strong net cash balance sheet and a healthy free cash flow, are you actively evaluating acquisitions in adjacent businesses such as electric vehicle infrastructure, specialty fuels, or industrial chemicals, or do you prefer to go ahead with just organic expansion?
No. So M&A opportunities in the lubricant space, mainly the industrial lubricants and the high performance lubricants, as well as in the EV value chain, are on active considerations, and we keep looking at opportunities. It has to make sense with our business synergy, but we are actively looking at M&A opportunities, and we will announce as soon as we finalize something.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Gulf Oil. Well, that was the management quite confident on sustaining 2 to 3 times volume growth compared to what the industry will post. Let's also welcome in our fundamental guest, Girish Sodani, Vice President of Choice India. Girish, you heard the management. At the current valuations, do you think Gulf Oil is a better option compared to Castrol?
So completely come to the fundamentals now. The market share is gaining strategically a very premium lubricant market. What we are looking at, steadily we are already saw that the numbers were very strong in the terms of overall growth in the revenues as well as the PAT numbers. So expansion is also increasable in the completely 4 sides for the next 2 years, 3 years down the line. And if we talk about the management, already heard about that. The management is highly confident. They are entering in the financial year 27 with the record momentum and successfully negotiations in the West Indian crisis. And we have already saw that these particular sectors is already passed by the geographical tensions also, what we have already seen in the other sectors itself. So the over 2 years down the lines, the view was very excellent one for the proposition of at least 20 to 25 upsides from this particular range.
Right. With that, let's move on to the next conversation of the day. Rishabh Gupta, Managing Director of Rosal Texas. A solid set of numbers is what the company has reported. 77% revenue growth on a YoY basis. EBITDA and net profit has doubled. So Rishabh, starting with you, just wanted to understand what are the factors that led to such a stellar growth on the financial front? And is that sustainable for the remaining part of the financial year as well?
Hi, thanks for having me. Yeah, absolutely. If you saw it last year, we showed an 80% growth in our top line. This year, the momentum is continuing. History shows that our third and fourth quarter is always going to be the best, and it's going to continue this year as well. So looking at a very similar growth for the next 3 quarters as well.
Our revenue growth will be much more than 80% that we saw last year?
Will be very similar, on very similar lines this year as well.
And the
not only our revenue, but even our EBITDA and PBT is showing a significant improvement this year as well. So we see a change.
Actually, that was what my follow-up question was. Your margins have improved 14.3%. I believe it is at a 5 or 6 quarter high. Will that be sustainable now for the rest of the financial year, or is there further room for expansion?
It's actually going to get better. We will see improvement this year, and then next year as well, we should see some improvement. The target is to be anywhere in the range of 18 to 22% in the short term.
So 18 to 22% margin, 80% revenue growth, net profit growth, where are you eyeing? It must be definitely higher, right?
Definitely. If you see, we've already doubled our PBT compared to the first quarter last year. And the margins on PBT will also get better. We're also targeting a QIP soon, which will, of course, improve our margins moving forward as well.
So I believe the QIP amount is around 300 crore. Could you just take us through where will this be deployed And after deployment, what is the kind of incremental revenue growth that you're expecting?
Yeah, sure. It's going to be used in three prime areas. One is for operational excellence. One is for infrastructure upgrade. We need more space to meet all our revenue targets. And the third is to improve our balance sheet as well. So we will be paying back some of our working capital that we have, which will improve our margin significantly moving forward.
Okay. Now on the financial front, what is the order inflow that you saw in the first quarter? What is the current order book that stands at? And what kind of order inflow are you expecting for the rest of the financial year?
Yeah, so currently we have over 3,000 crores worth of agreements. We have over 800 crores worth of POs. We received 250 crores worth of POs in the first quarter of this year. And we've also submitted bids close to 4,000 crores, which are awaiting decisions. And that normally takes anywhere from 6 to 9 months.
So sorry, I did not understand. The 3,000 crore amount that you mentioned, what is that?
Those are the strategic agreements that we have on hand. So in aerospace and defense, most contracts are long-term in nature, and they're placed through strategic agreements. And 6 to 9 months before delivery, a PO is placed against those strategic agreements.
800 crore is the short-term order book, 3,000 crore is the long-term order book, right? If that is the easiest way to understand.
You can look at it in that sense, yes, absolutely. Yeah.
And right. And the margins are for these orders as well would be around the 18% mark, right?
Yes, so they'll get better and better. Scaling obviously helps. We're scaling significantly, so that obviously helps. A lot of the qualifications, a lot of the products we're building go through something called an FAI, which is the first article inspection. A lot of those have been qualified and are heading into production. And once they reach production, the margins obviously get much better moving forward. So we should see that happening already.
Okay. And when it comes to commercial aerospace, you're looking to enter that market as well, I believe. By when can we expect any development on that front?
We're getting close. So a lot of the companies we're talking to are planning to create a supply base in India for the commercial work. We're getting audited in the second quarter of this year. So we're very close. I think we should hopefully have a breakthrough on the commercial side in the next 6 to 9 months. Fingers crossed.
And given the issues that we had seen in the first quarter, which is also on and off the geopolitical issues I'm talking about, any impact on deliveries, any impact on sourcing raw material, any impact of higher raw material costs that you're witnessing?
Fortunately, we haven't seen much of an impact when it comes to deliveries or anything. Yeah, there are slight delays on getting our material, but it's well under control. We've been able to manage it really well. We have a very robust team when it comes to planning for the raw material that needs to walk in so we can deliver our product. And we don't see any significant issues coming up on that front as of now.
And lastly, the 300 crore fundraise that you mentioned, any timelines at least you could share on that front?
Hopefully it should happen in the next 60 days. That's the target, to be completed in the next 60 days.
And sorry, I missed on the earlier part. Nothing of that will be used for capacity expansion?
It will be. So, like I said, 3 different areas: operational excellence, capacity expansion, and strengthening of order book. Those are the 3 prime areas where the capital is going to be deployed.
Great. Well, thank you, sir. Thank you for joining us and giving us the way forward for Russell, Texas. Well, that was the management. Let's get in Girish's view on this counter. Girish, you heard the management. They are expecting 80% revenue growth, a higher bottom line growth. Margins are expected to expand. What's your view on this counter?
So 4,000 crore market cap aerospace and defense basically plays strongly numbers we have already saw in the last 2 quarters itself. So they are just expanding in a heavily in the terms of all the 300 crores of QIPs, as well as we talk about almost good numbers of 3,000 crore pipelines order books. So overall the structures was very strong. If we talk about for their peers also, they are looking out very attractive in the terms of data patterns at the MTRs. So obviously the candidate who is just turned around and strongly re-ratings we are looking out for the next 2 to 3 years, because whatever the expansion and the pipeline should be there is a long-term propositions. We have already seen this type of revenues for at least 2 to 3 quarters up ahead. So obviously the looking out for the at least 2 years or 3 years down the line. So strong candidates for the long-term propositions.
The next stock that remains in focus is Yasho Industries. The stock has been buzzing. It's up around 8% odd. Let's get in Mahima to understand what could be the potential reason behind this move.
Right. So overall, Somit, if you take a look at the stock performance, right, it's seen a 30% up move in the last 5 sessions. It's hit an all-time high and is up to 40% since April 2026. Now, overall, how was Q1 FY27 for this particular counter? Strong volume growth across business is what we've seen. Better product mix has boosted the profitability as well, and higher capacity utilization supported margins. Growth was largely driven by sales, not inventory gains, and customer approvals has increased offtake as well. In terms of margins, they are looking, at these levels sustainable. Management is confident of maintaining the current margin levels, and FY27 margin outlook also remains very stable. Current profitability is not seen as a one-quarter event, is what the management has said. In terms of the utilization, that's also driving operating leverage. Utilization has improved from 50% earlier, and Q1 it has reached anywhere in between 60 to 65%. The target now is to reach to 70 to 75% of utilization. High utilization is expected to lower the cost further as well, and possibly improve margins as well. New product lifting profitability as well, because products launched in the last 12 months carry higher margins. New products earn 10 to 12% better margins as compared to the old portfolio. In terms of growth outlook, revenue targets revised to around 1600 crore. Growth is increasingly backed by customer commitments, and management expects volume growth to continue as well. So this is the overall view as to what's caused that rally in the Yasho Industries that we've seen since April.
Girish, any view on Yasho Industries? Yeah. Should one buy into this 8% up move that we're looking at this trade today?
So the fresh allocation is actually not advisable at this particular levels, because if we talk about the company fundamentals looks very strong in the terms of obviously the expansions are going on. The capex is 250 crores as well as the targeting the 1600 crores top lines financial year by 28-29. So overall the structures was strong, but fresh allocation is not advisable.
Okay. Moving on to EPAC Prefab. I believe that stock has been gaining in trade on the back of strong set of numbers, or let's get in part to understand what could be the potential reason behind the 7.5% move when it comes to EPAC Prefab.
Yes, so it's a very interesting kind of move, and before we talk about that, let's first understand a little bit about the company. So EPAC makes prefab steel buildings and also insulated panels for factories. They have 4 manufacturing facilities with a capacity of almost 1.5 lakh metric tons per annum, and they are also currently expanding into newer geographies like Rajasthan and Gujarat as well. Now, if we go towards the Q1 numbers, then EBITDA margins saw a fall of 100 basis points to 9.4%, hitting a new 3-year low. Also, raw material costs have gone up by 27.7%, which is much faster than the top line growth of 23.9% that the company saw during the quarter. And this is because of the rising steel input costs that they were facing in the past quarter. That is also the reason behind that margin drop we have seen. Also, sandwich panel utilization that remains at just 44.25%, and that is also giving them that negative operating leverage, and it is because of these numbers why the stock had seen a drop in its share price yesterday, an intraday drop of almost 10%. But today it has gained back that drop, almost gaining around 8% in trade today, and that is because of the guidance the management has given in the call yesterday. Management has guided for a 30% growth in FY27, and they have said that margins will start recovering from the second quarter of FY27, and this is why we have seen this kind of a V-shaped recovery in the stock of EPAC Prefab. So going forward, the key things to watch number one obviously will be the guidance, if they are actually able to recover margins from the second quarter onwards, but also the new sandwich panel commissioning that will begin from September 2026. That is something that is going to be some to watch out for, and also the Gujarat greenfield facility that is also targeted by the end of FY27. So these three will be the key factors that investors will be watching out for when it comes to EPAC Prefab.
Girish, any view on EPAC Prefab?
So the strong candidates, the management already gives us strong guidelines in the terms. As we talk about the EPACs, completely depend on the basis of the PLI scheme rollouts, solar manufacturing, what the expansions is going on, data centers build outs. So completely based on this particular earnings, but obviously for the longer period of time, because these type of product propositions should be required at least 3 to 4 quarters time the lines, there the revenues are going to be show it out. So obviously the 2 year to 3 year down the line, the very strong candidates and strong accumulated, but in the range of around 240, 245, that will be the very favorable range for the longer period.
Shifting a focus bit from the small cap stocks to Nestle, because that stock has fallen sharply down around 5% in trade. And this is after the company came out with this presentation. Basically, they have put up this presentation because they have an analyst meet today. In fact, an analyst day which starts at 2 p.m. And they have put out this presentation and some negative commentary coming in from the management. And hence, we are seeing this kind of a sharp reaction coming in for Nestle. What the management is saying in the PPT is that they're excited about the opportunities while navigating challenges. First one, potential slowdown in consumption. And the second one is geopolitics. They are clearly saying that consumption could moderate in the short term, and this will be because of inflation impacted by the West Asia conflict and El Nino. And they're also saying that the overall consumption and the food and beverage growth is something that they have to watch out for in the near term. Geopolitical disruptions are driving dual headwinds for the company. Firstly, it's supply that's impacting supply continuity, and the second one is cost inflation. Energy prices are volatile, which are also leading to volatility in packaging and edible oil prices as well. There is global pressure on raw material availability and supply chain, shipping disruptions and elevated freight cost, and currency and commodity market volatility is also something that they continue to see. Because of this weak commentary that has come in from the management side, for short term though, we are seeing this kind of a downtick when it comes to Nestle. Girish, sorry asking you about a large cap stock here, Nestle, but this commentary, obviously this will be impacting the stock in the short term, but this 4% fall that we are seeing in Nestle, could it be a value buy now for investors?
Yes, obviously. If we talk about the whole FMCG industry, is completely shuffles because of these particular geographical tensions, the commodity prices volatility, the margin pressures, and the health concerns as well as the competitions are increasing. But come to the next level fundamentals, the fundamentals are very strong in the terms of expansion. Also, the companies are expanding. For example, 5,000 crore strategic investments ongoing on currently capex. We are talking about 10 factories in the Odisha, capex intensity, rural expansions are there. Because they're just expanding by the 2 lakhs plus, which is villages and distribution centers. So overall, the structures was very, very strong. It's a very good opportunities for the investors who are looking out for the next 2 year, 3 year down the lines and looking out for the strong fundamental company should be put in their portfolios.
And lastly, again, shifting focus to small cap stock, Mangalam Worldwide, that stock is trading at its all-time high. The stock has gained over 18% in the last couple of trading sessions. Let's get in Shivam to understand more on this.
Yes, this stock is seeing a significant upside. In fact, the volumes has also been up around 15 times the average. However, there is no specific trigger for the movement in today's session. But a few days back, the company has released their Q1 results and they were pretty good. In terms of top line growth, we have seen a growth of around 14% and that was due to sustained demand in the steel business. In fact, the operating profit has also been at a higher level. That was mainly aided by the lower stock in trade purchases and one-time inventory gains. In terms of margins too, we have seen an expansion which was mainly driven by these inventory gains, and profitability has also outpaced the revenue growth and on improved operating profit. In terms of the other capex, the company has commissioned around 10.4 megawatt ground mounted solar project, which the company believes is going to improvise their operational efficiency going forward and also will help in bringing down the cost of borrowing financing cost. In terms of this addition, the company will add around 1.2 megawatt solar capacity, which will take the total capacity to around 11.6 megawatts. In terms of stock performance, the company has given a positive performance on multiple time period basis. So overall, these all the reasons form a positive sentiment for the stock, and that's why we are seeing a uptake in today's session.
Right, Girish, any view on this counter, Mangalam Worldwide?
So the stock's P ratios is going to be a little bit high. The overall the results was decent ones, but fresh allocation is not advisable.
Right. Well, thank you, Girish. Thank you for joining us and giving us your perspectives on the stock that we discussed in trade today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance.
Hello and welcome back to NDTV Profit. My name is Puneet Zaveri and you're watching Ask Profit, the afternoon edition. Before we do that, let's quickly take a check of how the markets are doing as well, because it's been an interesting session, and let's pull up the heat map also for the Nifty 50. You've seen these individual stock movers there, which are buzzing in trade today, but for the index, you've seen consistent pressure from the start of the trading session. So that has been the other key factor. You've seen pressure across the board, and when you look at the heat map as well, within those you've seen pressure coming through on Grasim. HDFC Life has hit a new 52-week low. That's the other key counter that's down. So is Nestle, HUL, as well as SBI Life. Nestle, we just spoke about how you are looking at the pressure, and Somit did address some of those key aspects. But when you look at the other factor in terms of what's bothering the markets, the last hour gash yesterday was definitely one of the key factors, and hence that dictated how we opened today. Pull up the sectoral heat map too, that is the other factor. Within this, you have seen that the Nifty Media is up, Metal is up, but Realty, FMCG, private banks, Nifty Bank, as well as the other index like oil and gas, all of those continue to be under pressure today. Pull up the advanced decline ratio also, because that has also been something that's slightly been concerning the markets. Now, yesterday we had almost a 4:1 in terms of favoring the advances. today though been a very neck and neck. So it's a 1:1 that we are seeing currently on this index, and the mid cap and the small cap index also show you that that retrenchment, essentially, if it's a word that I can use at this point of time, down almost 0.5%. Small cap 250 though is continuing to be in the green right now. But when you look at these individual movers, there are some major ones that are having some impact on the index today. One of them is LIC, and we'll come back to LIC during the middle of the show as well to get you some more perspective of how to look at essentially this offer for sale by the government. You're seeing UPL, Quest Corp, as well as Zydus Wellness that is also down. But Restaurant Brands Asia is definitely one that is soaring in trade today. We on the back of quarterly results. Vedant Fashion up 15%, and after a really long time, you're seeing such a sharp move come through on Vedant Fashion, as well as KA Industries that is up 7.5%. Management continues to be positive right now. And we spoke to them in the morning about the stock. Let's also look at Ather Energy. That is the other key counter. Continues to be, on a one-way trajectory, led by strong earnings and up almost 14.5% as we speak. But let's start taking your stock-related queries now, and let me welcome in our guest, Kunal Shah. He's the AVP at Alternate Research at Nirmal Bang. Also, Astha Jain, Senior Research Analyst at Hem Securities, joining in. Both of you, thank you so much for joining in today. And let me go across and start taking the first stock-related query. This one is coming through on Wokhart. Our viewer wants to know if it's still a good time to buy into this counter right now. Astha, good afternoon. How are you looking at Wokhart right now? Of course, we know the headlines, we know Zenik, that will start reflecting in H2 as well. But do you think the valuations have run up, or is it still a good buy?
Hi, good afternoon to everyone out there. So talking about Wokhart, first of all, Wokhart is a very good turnaround story, because what we have seen in the FY26 number, that they have shown a good turnaround from the loss making to a profit making entity. Secondly, what I believe that their most important value driver is the Janish. Now, what this Janish is, I hope I'm spelling it right or pronouncing it right. So Janish is something which is, antibiotic, and this is regarding some bacterial infection. So if I talk majorly, then it is an antibiotic for a bacterial reaction, and this is really an important asset for the company at this point of a time. Thirdly, what I believe that this company has got very strong pipeline regarding the antibiotic, and hence I believe Wokhart has still more steam going forward. So my idea here is stay invested in this counter. 2023, it is quoting right now. It may move till the level of 2100 to 2150 in the coming few days, maybe months. But I believe that 2150 can be set a price target for this and remain invested in this counter. In fact, if any fall comes, then I think that can be taken as a buying opportunity for this counter as well. So fall till the level of 2000 or 1980 can be regarded as a good entry point for making a fresh entry into this counter.
Got that view, Astha. But the next question coming through, and this is on Go Digit. Our viewer Satya Kumar, who's from Hyderabad, wants to know about this particular counter. He's holding shares at 272 odd. Kunal, his question being if he should still continue to hold, and should he buy into this dip right now? Very good afternoon to you. How are you looking at it?
Good afternoon, Puneet. See, I think overall the stock has already given us a structural breakdown. 275, 276 now becomes the resistance. So even if he gets any pullback, since the stock is in the oversold zone, any pullback towards this mark of 274, 275 should be an exit opportunity.
Got it. Well, the next question coming through, and this one's on Paras Defense. Raja, who's from Chennai, also a regular viewer, is holding these shares at 832. So he's in, very good gains at this point of time. Wants to know if he should still hold on. What could be a potential next target at this point of time? Astha, up and about on his 51 shares, how should he look at this counter now?
So the counter is still looking very attractive to me, because first of all, we are all aware that it is not normally a company which is into the defense, product. It is a company which is into the technology intensive defense space. So that makes it different from the other players. So that is one of the point. And secondly, we all know now the Make in India is such a strong theme where every company who is participating in that become a beneficiary. So this company is also one of the strong beneficiary of Make in India theme. And I believe that whatever customer base they have got, it is a very diversified customer base because apart from Indian Armed Forces, DRDO, etc., I mean, even space agencies, so they are all its customer profile. So, on the basis of these factors, I still believe that this is one of the very strong counter in the defense space to remain invested in as well as to make fresh investments also. Right now, my idea here hold or make a fresh entry at the current level with a price target of 1550 to 1600 in the short to
Right.
medium term.
Right. But, let's cut into Nirmala Sitharaman, who's also speaking at this point of time, and listen in.
कुछ निम्नलिखित सदस्यों का नोटिस प्राप्त हुई है। माननीय सदस्यगण श्री एम के प्रेमचंद्रन जी, डीएम कथिर आनंद जी, मनीष तिवारी जी, सौगत राय जी, अगर आप अपने आसान से बोलना चाहते हैं तो आप बोल सकते हैं। कृपया आप अगर बोलना चाहते, मैं आप सभी से निवेदन करता हूँ, कृपया अपने आसन पर जाकर बैठिए। ये महत्वपूर्ण देश के आर्थिक
We'll of course keep cutting in because that important speech coming in the parliament will be something to watch. The taxation laws amendment bill will be in focus today, and as soon as you saw Nirmala Sitharaman stand up in the parliament, there was of course the opposition uproar. So will be important to get in that perspective. We'll also get in a colleague Shrimi to join in and give us some more perspective of why this bill is important, what are some of the key aspects to watch out for as well. But overall, yet again seen that uproar happen in the parliament, and hence important to get in that perspective. And as soon as we do get Nirmala Sitharaman speaking about this particular bill as well as what else is on the agenda, we'll of course cut back in as well. But that continues to be an important matter which we are tracking on a daily basis as well, because we'll and get you more perspective on that. But let's continue with your stock related queries, and we'll keep an eye on the proceedings of things. Let me also now welcome and actually someone who has more perspective about LIC, and that's something that we spoke about at the start of the show, because while you have seen the stock being down today, important to get in more perspective of what to expect. Parag Thakkar, Head Fund Manager at Fort Capital, now joining in. Parag bhai, very good afternoon. Thank you so much for joining in today. This was a big overhang, right, sir? Because almost 96% stake that the government held, they will have to reduce it as per the minimum shareholding norms. While we have seen a stock reaction today, would you expect this and would you expect this? And Parag bhai, I'll come back to you because Nirmala Sitharaman speaking in the parliament right now. Let's listen in.
अनुरोध है, कृपया अपने आसन पर जाकर बैठिए। 377 ये सदन का बहुत महत्वपूर्ण एक विषय है। हम सभी माननीय सदस्यगण को मौका मिलता है सदन में अपना विषय को रखने के लिए।
Let's get in, and Parag bhai, I'll just come back to you. Let's get in my colleague Shrimi right now to get some more perspective. Shrimi, over to you.
Yeah, that's right. Very, very important as Nirmala Sitharaman introduces the Tax Amendment Bill 2026. And the most crucial part of this bill is that they amending the zero MDR regime. Now, what is that? Just to have a perspective on that it's enabling a legal provision which will now allow banks and payment companies to actually levy MDR, the merchant charges on your digital transaction, and that could pave the way after this legal provision, and that is why it's very, very crucial. But there is a catch also. Center is going to notify a select list of some of those digital payment modes which will continue to enjoy zero MDR on the digital transaction, and that will have to await for those details. But the third aspect is, which is again very crucial, that the bill is not suggesting any threshold or timeline as far as MDR levy is concerned on any of the digital transaction, including your UPI transaction. In fact, this is just a legal provision to scrap the earlier section, which is 10A, which is there in the Payment and Settlement Act, and scrapping those provisions and giving central government power to decide periodically how to go about the MDR and on which digital payment mode it could be levied. So it's giving the power to government essentially to decide on the MDR on the digital transaction. The final print of this, after the bill get introduced and passed in both the parliament, both Lok Sabha and Rajya Sabha, in fact, the government, in consultation with Reserve Bank of India, will give out a final sort of norms on this particular MDR, especially on the fact that at what threshold it could be levied. The chatter around on this fact is essentially that it could be on the larger transaction, because of course government wants to expand the UPI ecosystem, but at the same time they are not going to target the small transaction, and it will confine to large transactions. So the point being that whether it could be mostly above 2000 or beyond that is something we need to see and wait and watch, that what could be the threshold amount. But this is paving the way for payment companies as well as bank to levy MDR, is one very, very crucial amendment which Finance Minister Nirmala Sitharaman is moving right now. The second important aspect is also in the form of that this particular bill is going to, shift the ordinance which they introduced in June about the foreign investor getting tax exemption on the, the government securities, and that they are going to shift from the ordinance to now the final bill. And the second one on the contract manufacturing, they are expanding and the tax exemption window up to 15 years. So earlier in the budget, they said that any foreign company supplying capital goods in the contract manufacturing is going to get the tax exemption for 5 years, and they are now extending it up to 15 years, which is FY41. In fact, they are also sort of expanding the electronic goods to, of course, encourage electronic manufacturing, right from your mobile, mobile to tablets to laptop. All these specified goods will enjoy that tax exemption for up to 15 years. It's very, very crucial in terms of contract manufacturing. And we have seen how much government sort of pushing the electronic manufacturing in India, focusing on, of course, to boost the manufacturing space. So that's very crucial. In fact, a lot of tweaking also you will see in the investment fund side, a lot of tweaking you will see as far as, the special purpose vehicle is concerned. The new regime will offer 25% off, surcharge compared to 10% for the domestic companies. So these are the additional measures along with the major one, that is MDR.
Well, thanks so much for that, Shrimi, getting us the detailed view of what could we expect today as well. But Parag, if you can still hear me, thank you for joining in. Just, a quick question, because as I mentioned, the government holds 96% stake. There was that expectation that this will come through. And while the stock is reacting on a downside, you feel largely this will be a positive move for the stock, that finally you have seen the government take that bite and go ahead with the OFS?
Yes. This was a major overhang. And I think if the government manages to dilute 6.5% stake, which means free float becomes 10%, then that major overhang is gone. And then for next 2 to 3 years, there'll be no OFS. And there's I would say, a great franchise, irreplicable franchise, available at 0.5 times FY28 price to embedded value. And in fact, in last 6 months, it has gained market share in retail APE also. Plus, the sensitivity to Nifty is also very good. So I would say that if you are buying LIC, you are buying Nifty at a big discount at this price.
Good. Also, Parag bhai, the deep discount, as you mentioned, is clearly visible, right? But do you feel that post this, you should, for investors, take a more favorable view of LIC as a longer term bet? And if someone who's already holding it, do you also look at it as a good time to buy post this 8.5% downtick today?
Yes, it's a great buy in my view. It's the best buy today at this price. Very clear view, and I see 50% upside.
50% upside. Got it. And let me
Over
also
next 12
ask.
to 18 months, one has to be a little bit long-term investor in this because there's a huge supply, right? There's a 31,500 crore supply. And if it gets absorbed and there is no OFS for another 2-3 years, you will see I would say the intrinsic value. Just see it this way. It trades at 0.5 times price to embedded value on FY28 versus that SBI Life trades at 1.8 times. So I would say that there's a huge value over here. I think retail investors should grab it. One should not pay attention to the fact that last, whatever, 2-3 years, it has not given any returns. I think from this price, you have nothing to lose.
Got it. Well, Parag bhai, we'll actually leave it at that. Thanks so much for joining in. Paucity of time. But thank you so much for getting us your opinion on this particular counter. Of course, we'll wait for more details and the confirmation of the absorption of such a large sum. But thank you so much for joining in today. But viewers, let's now start the rapid fire round. Of course, we had to address quite a few bit of things. Kunal as well as Astha, thank you so much for patiently waiting by. Let me go across and start the first question, and this one coming through on JSW Cement. Pramod wants to know, as a good long-term bet, if this continues and if he can enter this stock now. Astha, what's your opinion?
So for a long term, it's a good bet to enter into this counter at this point of a time because of the type of capacity expansion this company is doing. So my idea here is, and that they have got a leadership in the green space, green cement space. So yes, one can enter into this counter, but maybe at a level of 125 to 128.
Got it. Well, the next question coming through, it's on HDFC Bank. A viewer, Mukunda, is holding shares at 778. Kunal asking if it's a good time to add more.
No, wait for a move above 760, then one can add low.
Also, Kunal, on Axis Kids, our viewer Shlok is holding shares at 1922. Wants to know at the current price of almost 1600 odd, should he buy more or continue to hold?
Continue to hold with a stop loss of 1490.
Also, Kunal, on Castrol, Ram is holding shares at 188. Wants to know about what should he do with his 450 odd shares.
Continue to hold with a stop loss of 184.
Next one coming through, and it's on a high flyer, Aether Energy today. Anush from Delhi NCR wants to know if he can buy into this counter despite the up move. Asta, stocks up almost 4x since his IPO in the last year. Is it still a good buy?
Results are good, but I think at this point of the time, one should wait for some fall to come in and then make entry, maybe at around the level of 1440 to 1450.
Himadri Specialty Chemicals is the other one. Raj wants to know if there's still any upside potential left, Kunal, on the charts. Would you recommend that?
Yeah, I think definitely it remains on the buy list. I'm expecting the stock to go close to 850, 900 in the very short term.
Nalco is the other one. Raghu from Bengaluru wants to know if it's a good time to enter. Astha, would you say that?
For Nalco, my idea here is the kind of results it has posted, very strong number. Yes, one can make entry, but at a level of 370 to 368.
Balakrishna Tire is the other one. Dilip has bought these shares at 2375 and he's holding 60 shares. Astha, actually, after a really long time, very strong set of numbers coming for the company, especially in this quarter. Should he hold, and is it also a time to buy more?
Yes, because this is one of the leading off-highway tire manufacturing companies, so definitely a hold is recommended. In fact, adding on at the lower level of 2470 to 2480 is also recommended.
Welspun Corp is the other one. Rajesh, who's from Hyderabad, wants to know if it's a good time to purchase this one. What would you suggest, Kunal?
Yeah, I think definitely continues to build up strong momentum and go towards 1800 on the upside.
A short-term view also, Kunal, on Tega Industries. Now, we had a big acquisition come through for the company at the start of the year. Since then, hasn't moved too much. Is that also visible on the charts? Fundamentals, of course, we spoke about, but what's your view on the charts?
So I think on the chart also, even if I look at the long-term charts, it's sideways. Needs to at least break above 1670 on the upside to have a bullish momentum.
Redington is the other one where our viewers bought these shares at 208 and he's bought 1,000 of them. So sitting on very good gains, Astha. Should he continue to ride the wave?
Yes, one should remain invested in this counter because this counter has posted very, very strong set of a number along with the positive management commentary. Hold this counter with a price target of 380 to 400.
Next question coming through, and this one is on Sterlite Technologies. Sriram is holding shares at 471. Wants to know if he can still continue to hold this one, Astha, for the long term, or should he book out right now?
I think partially profit booking is recommended, but partially hold this counter because this counter is still looking positive with a price target of 650 to 680.
Anil Nair from Abu Dhabi is holding on to Jubilant Foods, but at 595. Kunal wants to know if he should still continue to hold his 200 shares.
I think continue to hold. I think for fresh breakout has come in, can at least go towards the mark of 492 on the upside.
Graphite India is the other one. Our viewer has bought shares at 696. Asking a short-term view, Kunal, for his 300 shares.
I think bullish on both Heg and Graphite. Continue to hold with a stop loss of 638 on the downside, expecting to go towards 750.
GE Shipping, the other question coming through, Ram is holding shares at 1560 rupees per share. So currently sitting on a loss. Astha, should he average down?
Yes, averaging, but at the lower level of around 1420 to 1410.
Next one coming through on Idea Forge, Kapoor is holding these shares at 955. Kunal, what would be your view on the stock now?
Idea Forge had already recently seen a very sharp run up on the upside, and here the support for the stock is now at 785. So hold with that stop loss, can go up to 950 on the upside.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Astha as well as Kunal, thank you once again for joining in, giving us your views, and with that we've solved 95 queries including the morning as well as the afternoon edition. So thank you so much for our experts. Thank you to you viewers for writing into us as well. But out of time, stay tuned though. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Mahima Vachhrajani. We're coming to you live from the NDTV Profit Suzlon studio, and expiry is at play right now. And you're seeing that increased volatility heading into the end of trade. Of course, don't go by this number because you're going to have to shave off the 200 points that you gained in the settlement yesterday, and so therefore when you closed out at 315 or thereabouts for the cash market for the F&O stocks, you were about 100 points above this point, right? You were 24,573 or thereabouts. Subsequent to that, you climbed 200 points. So if you look at the Sensex, pull up the Sensex, you will notice that the drop is about 200 or thereabouts, 278 points, just about 0.4%. You've had a little bit of a drop from the middle point of the day, and we're not trading too far away from the low point of the day, but still cuts of just about 1/3% as well. Take a look at the contribution chart for the Nifty 50, and you will notice that a bunch of the stocks that actually contributed to that 200-point gain at the end yesterday are the ones that are losing ground. So effectively, it's just an adjustment that is taking place on the percentage side, not even at the price point.
Yes, it's just that correction, and that's exactly what Alex said, right? Because the Sensex is giving you the actual, move just by about 0.3% of a downtick, and that is exactly how Nifty is also trading at, just by keeping aside what happened yesterday in the last closing minutes. But I think the Nifty 50 heat map is also an interesting one to watch out for. Just like what Alex said, that largely in cash markets, wherever buying was seen is where we're seeing correction in terms of where the Nifty 50 nails go, and that's where the real pressure is, and that's why you're seeing
pull up the heat map.
The heat map, and that's where we're taking a knock, right? So there you go. Of course, the screen right now is looking all red, and there's Hindalco and Jio Finance which are doing very well, just two counters which are doing well. But on the flip side, Nestle, of course, because of the commentary which is coming on a cautious end, saying that because of geopolitical situation and El Nino, there could be some pressure coming in on the consumption side going forward, and that's why I think Nestle is seeing a downtick. But otherwise, names like HUL, HDFC, etc. are also seeing that correction.
Absolutely. All right. So let's take a look at the broader markets as well, and pull up the mid cap index and the small cap index, and we'll talk about those. They're at the low point of the day. For the mid cap index, down about 0.4%. Corrections not very significant. We're still in the green for the small cap index, up about 0.25% or so. Pull up the heat map for the sectoral indices, and you will likely see a large amount of red on the screen. This is pretty much how we started off the session, but you have the media index that is in the green, not a very deep index, and so therefore not something that we track very closely. The metal index is up about 0.5% or so, and the small cap index is the other index that is in the green. On the bottom end, you have realty, where it's continued to underperform from the start of trade today. It's more or less stayed at the bottom of the pack. You have FMCG, likely on account of the move in Nestle, that is losing ground at this moment. Private banks and Nifty Bank is actually underperforming as well. But the same story that you saw play out for the benchmark Nifty 50 also effectively played out for the Bank Nifty as well, and that is why you're seeing that kind of a drop. Mahima, a lot of individual names in focus today as well, and those that are reacting to news. There is, of course, this MDR announcement that was expected, the merchant discount rate. Let me not use abbreviations, and that has implications for the payments providers. And those are reflecting in trade as well.
Yes, let's try to pull up something like a Mobiquick and then a Paytm. Paytm, of course,
climbing from the low point of the day.
Apart from that, MDR announcement has done very well for traders, at least for the last couple of sessions, and is up about 0.71%. But here is where the pressure is really. Mobiquick down by about 3.5% at the day's low point, slightly now recovering, but the real pressure is here, and that's where we are seeing. But just we'll have to see as to how how this pans out, as to how much of a percentage will go to these payment aggregators versus how much of that will go to payment banks as well, is something that will be in the fine print of that bill. That gets passed.
Beyond that, there was also and Paytm was in the news because there was a large block that took place,
yes.
right? And Meesho also had a large block. But LIC is really the story with regard to the paper that's coming through, and offer for sale coming through. The floor price significantly lower than even what you're seeing on the screen right now. It is at the low point of the day, down about 8%. But incidentally, even in the first few hours of the offer for sale, the non-retail portion has gotten fully subscribed.
And that's putting aside the green shoe option, right?
Yeah.
That's something interesting to watch out for. But still, the stock is taking a knock, and we'll take a look at the details further in the show as well. But some earnings specific action. You have something like a KEA Industries, which is doing very well. Something like a Restaurant Brands Asia is also gaining significantly, and this is after a really long time that a stock like Restaurant Brands has picked up very well, almost 18% in trade, or now locked in upper circle, in fact 20%, and on the back of same-store sales growth highest in 15 quarters, right? You also have something like an Ether, which is also doing very well, which is going to be our stock of the day, and we'll talk about it in detail, gaining almost 15%.
So there's quite a bit to talk about. Let's get our experts in. We got
growth highest in 15 quarters, right? You also have something like an Ether, which is also doing very well, which is going to be our stock of the day, and we'll talk about it in detail, gaining almost 15%.
So there's quite a bit to talk about. Let's get our experts in. We got Rajesh Bhosle as well as Sunny Agarwal joining us right now. I'll come to you first, Rajesh, just to give us a sense of what you take to the end of trade today. And of course, it's going to be increased volatility. We were expecting that to take place, but are you bracing for that that second day of experience of the cash today?
Yeah, hi Alex, afternoon. And yes, yesterday it was a bit surprising. And they say, I mean, uncertainty is not good for the markets. And that is what we are seeing in today's session. In fact, if we see technically, Nifty is taking resistance around 2 and somewhere around 24, 350, 370. If we can see, there is a July swing high. So possibly 24,350 to 24,600 would be the immediate resistance, and market may see some volatility within this range.
Okay, volatility is expected, but if you were to look forward a little bit and give us your view on both the benchmark Nifty 50 as well as the Bank Nifty, what would the view be, Rajesh?
So both of them are on the key resistance. As I highlighted, Nifty is on the 200 DMA resistance, and if we see Bank Nifty, it's on a previous swing high resistance. Most importantly, it would be how Bank Nifty reacts tomorrow, because it would be RBI policy. It's placed on a key resistance, and recently, if we see banking space have not done well, so Bank Nifty would be crucial how it crosses 58,000, 58,400. Once that is crossed, then we can expect some broader move. Until then, we expect the outperformance to continue in the Nifty.
And Rajesh, what about your picks for the day? Just trying to understand from the perspective as to the volatility that we saw in trade yesterday in the last minutes could also continue this week as a whole, while traders are actually trying to adjust to the cash, right? So from that perspective also, and overall, what could be the calls that you would want to give our viewers that they could go ahead and buy today?
So we'll focus on the sectors or stocks that are showing relative strength and have already given multi-week breakouts. So stocks that are showing relative strength from IT space or maybe from the auto space, we'll focus on them. Counters that we are positive are Swiggy and InfoEdge. If you see the overall chart structure, they are showing a strong weekly turnaround, and we expect this outperformance can extend even if Nifty goes into a consolidation phase.
Okay. Sunny, hi. Good afternoon to you, and quick view on a couple of stocks that are in focus on account of earnings. You have Bharti Airtel in particular that is being looked forward to, right? The numbers will come post-market hours today. In the telecom space, would you look at a Reliance Industries and play that, and of course buy that to play Jio, or would you look at Bharti Airtel? or the third option, of course, which we don't speak about very often, Vodafone Idea?
Yeah. Good afternoon, Alex. Good afternoon, everyone. I think again, no doubt. I mean, pure play, telecom service provider, Bharti Airtel. If somebody want to encash on the growth opportunities in telecom, Bharti Airtel is a direct play which is available. So one of the concern for the entire telecom service industry has been increase in telecom tariff, which it has been expecting since last 6 to 8 months. But again, analysts are hopeful that maybe ahead of the festive season in the month of October or November, we may see one round of tariff hike coming through, and that should help all the telecom player, including Bharti, to give boost to its ARPU, and that is something which will be one of an key earning levers going forward. As we have already seen that since Vodafone has revived its operation, the migration from Vodafone to Bharti and Reliance going forward is likely to reduce, and the only growth levers which is available with the telecom player is increasing ARPU and ensuring the migration from feature phone to smartphone so as to data consumption is something which can go up going forward. And on the other hand, home broadband is another segment which can be one of a growth lever. So pure play telecom story, definitely Bharti should be part of your portfolio. Again, a very stable kind of company. And if somebody is willing to take slightly higher risk, then Bharti Hexacom, which is predominantly only a two-player market, two-region market, predominantly Assam and Rajasthan. So there we can see a slightly better ARPU growth ahead of the Bharti as a business. So Bharti Hexacom. And Reliance, again, there we believe the SOTP value is closer to 1,600-1,700 rupees, wherein predominantly 500 rupees comes from an oil and gas business, and close to 1,100 rupees is foreign consumer facing businesses, which includes both retail as well as telecom. So any value unlocking potential on the telecom side can definitely lead to a re-rating. Today we all know that because of the increase in taxes on sale of petrol and diesel, on export of crude related things, that has led to an slight negative impact on Reliance. But having said that, we continue to maintain a positive view on Reliance also.
So that's the view coming in on both Bharti Airtel as well as Reliance. But time to take a look at the stock of the day, and we've chosen Aether Energy because, I mean, why not, right? It's gained almost 15% in trade as we speak, and has maintained that kind of gain throughout the day. And Puneet, who tracks this very closely, is joining us to give us a perspective as to what's worked. Puneet, I think a lot of things at play, right? There's retail volumes which have gone up. There's also delays, inventory days which has come down. What lot of things at play, right? There's retail volumes which have gone up. There's also delays, inventory days which has come down. What is it that's working for this counter?
Well, most certainly, essentially the stock's flying, but so is for the company, its models off the shelf. Just 3 days of inventory is what they have at this point of time versus the general 14. Volumes are up 81% on a YY basis, and now you have to understand that some form of base effect has started to come through. Despite that, a very, very strong growth for the company. The important factor that they are almost getting 50,000 bookings a month, and the capacity is maxed out right now, so not able to completely, even goes. So the waiting period is now up to almost 2 months for the EV maker, and hence something to watch out for. They also have the pre-orders as well. Those have also reached 150,000 units for the company, almost 4 months of sales already now in pre-orders, so gives a lot of revenue visibility. When you look at the stock, it's up 384% since listing last year in May of 2025, and up almost 100% in this year itself, and that's led by the company gaining market share. It's now the number 3 player behind TVS as well as Bajaj respectively. But what the dealers have now done, because there is a next leg of capacity addition come through, some dealers have actually stopped accepting pre-orders right now so that the inventory gets filled up a little bit. The other factor that the new capacity coming in Auric will be almost 5 lakh units that will come through by the end of this year. That will take the capacity to 9.2 lakhs. But most brokerages also anticipating, given the current road rate, they will need another expansion soon. They have announced another 5 lakh capacity to take to 14 lakhs, but this hasn't been funded yet. Hence, there is something to watch as well. Finally, brokerages, they are not behind it. They have come out in high target prices despite the sharp 384% run-up. So Nomura now has the steepest price hike, and the target price is essentially of 1714. You've seen CLSA, HSBC also increase target prices, but you have to watch out for the next key big events. 29th August, they have the community day. They will be launching the new EL platform, and that will form the next leg of growth for the company. They're also expecting some cannibalization to come through for Rista, but not so much for the high margin 450X, and hence that margin growth should continue for the company. And finally, Nomura expecting a 50% growth in volumes for this year, but margins will be an important conversation once the capacity constraint issues get solved. So there's a lot to watch out for the company, a big outperformer today.
Okay. Thanks so much, Puneet, for that. A lot has been said about the electrification of mobility, and especially for a market like India, the easiest way to transition is in the two-wheeler space, and so therefore you have Ather Energy that has benefited from that significant move. Sunny, a quick view on Ather Energy at 1452 though, the price right now. Yes, capacity expansion taking place. Yes, there is likely to be inroads made in market share over ICE players. But is it something that you would suggest a buy on right now?
No, for a fresh capital deployment, Alex, buy on dip is the right strategy because we have already seen a significant run up in our stock price. And as we speak, I believe the market cap of the company is closer to 55,000 crore market cap number. And one has to keep in mind that most likely in FY28, the company is likely to turn EBITDA positive. And maybe at the fag end of FY28 or at the start of FY29, we may see PAT positive on as far as Ather Energy is concerned. So I think valuations are pricing in most of the positive development. So if somebody want to deploy fresh capital, buy on dip is an advice which I would like to give. If somebody want to participate in two-wheeler story, maybe I think auto ancillary is the right way to participate. So companies like Sandhar Technologies, or for that matter, Precol, Lumax, SGS, Gabriel, there are many players which are supplying components to all these EV as well as ICE players. So I think all these guys still trade at a reasonable valuation and can be accumulated at a current juncture.
Right. We're joined now by Somit Sarkar, who's here to tell you what he's hearing from his checks of the dealing rooms in our regular feature, Heard on the Street. Somit, a quick view on what you're hearing?
Well, firstly, the stock is Sedemac Mechatronics. Now, dealers expect a block deal to come out in this counter very soon. It's a recently listed stock, and there could be a block deal very soon is what dealing rooms are indicating. Trent is another stock. Despite the weakness that we are seeing overall in the market, specifically in the consumption side, this stock continues to hold on to the green side. Dealers are expecting a positive news flow here. Could be a potential node that could come in from a broking firm as well. Then there is Anantraj and Gujarat Fluoro. There are buy flows on the institutional desk in both these counters. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes could well be on the higher side. And lastly, a couple of stocks on the earnings side, Godrej Consumer and Nykaa. Both the stocks are down in trade, but dealers still indicate that the Q1 numbers could be strong for both the counters, that is Godrej Consumer and Nykaa. So keep an eye out for Nykaa will be reporting its numbers today. So keep an eye out for Nykaa as well.
All right, so quite a few stocks on that list. Somit, thanks so much for getting us those details. Now, tomorrow, of course, is an important day for monetary policy, and it is, of course, the outcome of the meeting of the Monetary Policy Committee of the Reserve Bank of India. And so you're probably wondering what this is all about and what is likely to come through. Well, my colleague actually did a poll of 16 economists, and all of them voted unanimously for a status quo. They're expecting that rates will be kept unchanged where they are. This is broadly expected, and that repo rate stays at 5.25%, right? There's also expected to be a continuation of the neutral stance, which is important to consider, particularly in the context of the uncertain external front. And quite a bit of commentary is expected to come through on what the implications are on account of crude oil prices being elevated on account of the West Asia conflict. The real GDP growth estimates are expected to be stable, and as of now, there is no expectation that there will be a dramatic deviation from the CPI projection as well, that is the retail inflation projection. Just a quick check of where the macro picture stands right now. The CPI Retail inflation rose to 4.38% in June compared with 4.93% in May. It is expected to pick up in the second half. The projection for the full year is at 5.1%. And remember that the comfort zone is in that band of 4% plus or minus 2%, but the target for the RBI is at 4% mark. GDP growth is projected as things stand at 6.6%, and the projection currently for crude by the RBI is $95 to the barrel in FY27. We're below that mark right now. We're joined now by Samiran Chakraborty, who's Chief Economist India at Citi. Samir, always a pleasure speaking with you, and thank you so much for taking the time. I'm assuming you're also expecting there to be a status quo. But if there's one thing out of the ordinary that you expect to be discussed tomorrow by the RBI governor, what could that be?
Yeah, we are also expecting that the RBI would probably be on a hold tomorrow, and very unlikely that in this current state of uncertainties, it will be possible for RBI to give a definitive forward guidance on whether the rate hikes are going to be around the corner or not. But I guess the main question for the markets would be to understand that as this large amount of dollar inflows come in because of these FCNRB announcements, how RBI is planning to manage the liquidity impact of these inflows, as well as how it affects the currency moves. Any guidance on these two matters, even if it's some sort of a soft guidance, I think that's something that markets will watch very, very closely.
Samiran, hi. Mahima also joining in. We've, as Alex was mentioning earlier as well, with regards to where inflation goes, because your number has risen to that 4.4% mark in June versus that of 3.9 in May, right? Do you think that this could be a temporary blip, or do you think that RBI remaining cautious with regards to inflation is valid from here on? What are you expecting?
So, in fact, if you look at RBI's own forecast for first quarter FY27, that was at 4.2%. Vis-a-vis that, the actual numbers have printed at 3.9%. So there has been a 30 basis point downside surprise to actual inflation compared to where the RBI's forecasts have been. So mechanically, it is possible that RBI adjusts its full year average CPI forecast from 5.1% down by about 20 odd basis points. But what will be interesting to see is that two of the factors, one, as you mentioned, that RBI's forecast in June factored in $95 per barrel oil price. Oil is about $10 below that right now. So to what extent that filters into RBI's forecast, and also the fact that despite all the fears of El Nino becoming extremely strong, we have seen the sowing activity to be reasonably okay, and food prices have not increased as much. So is that El Nino risk now lower for RBI, and to that extent, whether their inflation forecasts are adjusted lower or not? So these two things will also be looked out for, apart from the mechanical adjustment because of the lower than expected first quarter CPI.
So, Samiran, is that also your base case assumption for inflation projection for FY27? One, two, what is your assumption for the rate cycle? It's widely expected to be a pretty shallow rate hiking cycle. Do you also anticipate that at the end of 2026 you could see the first hike, and what is the extent of the hikes you're expecting?
Yes, we also have a average CPI forecast, which is somewhat lower than RBI's forecast right now. We are looking at a 4.7 average for the full year. On your question on how many rate hikes and when the rate hikes would start, I would think that at the current juncture, because the headline number is still going to be within that tolerance band of RBI, the extent of rate hike or the requirement of rate hike would come more from the core inflation trajectory. And we think that core inflation has to be printing above 4.5% on a sustained basis for RBI to start considering rate hikes. We haven't seen the pass-through of raw material cost increases as much onto CPI as was feared. And we haven't seen the demand side pressures also too much into the data. In fact, core inflation X of precious metals is running at just 2.5% still. So there is plenty of room for RBI to wait and watch. And in an environment of heightened uncertainty like we are today, it is very difficult to make rate hike calls based on forecasted inflation. RBI would rather wait for the actual inflation numbers before considering rate hikes. Keeping all this in mind, we think that most likely 2026 calendar year, we are not going to see any rate hikes. If at all, that's more a 2027 story.
Samiran, the other aspect is that, the steps that have been taken so far to protect the rupee against the dollar, do you think they're sufficient to kind of keep the currency in check, or do you think there's more to be done? And what could, if yes, what is that one more thing that, RBI could do?
So RBI has actually been very proactive on this front and taken a decisive step in the June policy itself in announcing all the three schemes together. And we have started seeing these schemes encouraging a significant amount of inflows already. The open question is that to what extent RBI utilizes these flows over the next 2 months to make a one-time adjustment to the currency levels. The governor has been on record saying that INR is undervalued. So this is probably a good time for that part of that undervaluation to get corrected, so that once the scheme gets over in October, then we go back to a more standard path of depreciation, which is following generally the inflation differential between India and rest of the world. That has been the trend in the past. But before we move to that depreciation path, maybe it makes sense for a one-time adjustment in the currency levels, not just keeping it stable at the current level of USD INR, but get at least a few percentage points lower than where we are today. There are two uncertainties, obviously, that's difficult to predict. One is oil price, and second is how the global interest rates would move based on Fed's future actions. Those two things have to be also considered in setting these currency levels.
Very interesting. Samiran, so speaking of this swap window, and the latest update from the Reserve Bank of India points to an inflow of over $40 billion. And based on conversations that we've had with the likes of State Bank of India, they expect that September could actually have a significant mop-up. And so, therefore, have you had to adjust upwards your own expectations for how much could come through in the way of these flows? That's one. Two, the other major measure was the tax change for foreign institutional investors with regard to the government bonds, and we've seen quite a considerable amount of inflows on that front. And the third aspect is the fact that it's unlikely that the inclusion to the Bloomberg bond index will come through this year based on what they've just said. So are you having to adjust your expectations for inflows on account of that?
So on your first point, yes, we started off thinking that the net inflows out of all these three schemes could be more like $40-45 billion. We have now raised it more towards the bull case scenario of about $70-odd billion of inflows could come in net out of these schemes. The gross numbers could be substantially higher than that also. So that adjustment we have already made. The bond inflows that came in on the back of the tax rate cuts, the pace of that has started tapering off. And as you rightly mentioned, that part of these inflows could also be to front run this expected Bloomberg bond index inclusion, which has not yet happened. So to that extent, there's a risk that part of these inflows could go back as well. We never had the Bloomberg bond index inclusion related inflows into our baseline BOP forecast. So we didn't have to adjust our BOP forecast on the back of that news. But yes, if this comes in the latter part of the fiscal year, early next year calendar, then that could also on the margin be positive for the BOP.
Quick last question, Samiran, with regard to liquidity and where you anticipate that will stay. Do you expect there to be a surplus or sufficient liquidity based on what the RBI has already done, or do you expect intervention on that front?
So clearly, if these numbers, the FCNRB related inflows are as large as $70 billion or so, the durable liquidity situation in the economy, which is already close to 5.5 trillion rupees, that can go all the way up to 9-10 trillion rupees of durable liquidity surplus also. So the question for RBI is that what is the optimal instrument to use to sterilize this liquidity and make it lower, the durable liquidity surplus? Our sense is that the preferred instrument for RBI would be the variable reverse repo rate auctions, and RBI will probably not be forced to utilize more direct measures like cash management, bill issuance, etc. But if this sustains in the system for longer, then issuance of CMBs or open market operations from the sell side, both those options could also be on the table.
I've said that quite a bit today. It's not just reflex. I actually have enjoyed our conversation. Thank you so much, Samiran, for taking the time.
Thank you. Thank you.
Okay, so let's talk about Nestle as well, by the way, and shifting gears very quickly, because ultimately a lot of what we've discussed has a bearing on consumption. Absolutely. And it has a bearing on the likes of Nestle as well. It's rebounded from the low point of the day, but there's something that the street found that was not to its liking.
And exactly that, right? The commentary, the cautious commentary that they've given on consumption. And I'll quote, they said that consumption could moderate in short term and inflation impacted by West Asia conflict and monsoon expectation. El Nino is the reason as to why they're taking a cautious approach. Overall consumption in food and beverage growth has been called out to watch out for going forward in the next 1 or 2 quarters. And geopolitical, overall scenario is kind of driving supply continuity and cost inflation risk. Volatility in energy, packaging, edible oil, shipping disruption and elevated freight as well as raw material availability pressure combined with currency commodity volatility is what is impacting the entire consumption space. But there were also positives that Manish Tiwari did kind of call out in the analyst meet call. He's mentioned that they are witnessing acceleration in growth since the last few quarters, and it's growth, not just resilience being accounted for in the quarters. Volumes have seen a steady recovery. Actual penetration in numbers are right now at mid-50s. So, and this is for all the brands that he's talking about. So there's more headroom to growth going forward for Nestle. Plus, they're very focused on direct distribution. They've added 5 lakh plus retail outlets just in the last 5 years. E-commerce and quick commerce is where they're using platforms as a launch pad for their innovation. And overall premium category is growing 500 basis points faster than the normal category is something that Manish Tiwari did indicate to. So it's both negatives and positives. Probably the positive commentary that came in later has probably led to that recovery encounter. But cautious approach to consumption is what he's indicated.
Yeah, I don't fault them for the cautious approach at this juncture. We're joined now by Nilesh Shah, Managing Director, Kotak Mahindra AMC. You all know him and we love to speak to him. Nilesh bhai, good afternoon. Alex here, and let me start by wishing you a very, very happy birthday. Thank you so much for spending a little time with us.
Thank you, Alex, for your wishes. It really makes my day special.
No, from all of us here at NDTV Profit, we always enjoy speaking with you. It's an opportune time to be speaking to you, Nilesh bhai, because tomorrow is the outcome of the RBI monetary policy, and I do know that you track monetary policy very closely, in the bond markets also very closely. So first, what is your expectation on the kind of commentary that will come through? Because more than anything else, I think everyone is on the same page when they expect there to be a status quo on the rates. But there's so much that has happened beyond that between last policy and this one.
So we expect RBI to maintain status quo and at the same time lay down ground for future course of action if data warrants. Their commentary will be balancing between black and white. On one side, inflation, which could rise if oil prices go higher, or if monsoon does not deliver a very bountiful of rains. On the other hand, there will be also concern on growth as higher oil prices aka trade deficit, could have impact on GDP growth. So RBI will be walking a very, very tight rope, highlighting both the pulls and pushes of the pressure on the monetary policy, and reiterate that RBI will be vigilant, will be taking appropriate action, and will be data dependent.
Nilesh, hi. Mahima also joining this side, and a very happy birthday to you.
Thank you.
We were just talking about consumption, from the Nestle's commentary coming in, and Alex was also just mentioning the fact that, all these consumption companies are not wrong in taking a cautious approach because of the way inflation is faring, right? We've talked about this, just previously with Samiran as well, that, overall versus May, June, inflation was slightly at a higher end as well. What do you make of this? What is the one thing that you'll be watching out for in terms of inflation numbers with regards to where MPC comes into picture?
So my feeling is that RBI has already revised inflation target upwards. Their target is 5.1%. The street expectation is little lower than that. So I will say RBI is unlikely to revise inflation target upwards for FY27. They are already ahead of the street and have built-in buffer. More importantly, if we look at Indian consumption, on one hand, consumer staple companies are showing lesser volume growth, low single digit, value growth driven by price rise in mid single digit to low double digit. Undoubtedly, there is a subtle shift happening on Indian consumption. For example, in 2022, Hindustan Unilever sales was double that of Apple's local iPhone sales in India. In 2026, the situation has reversed. Apple iPhone sales are twice that of Hindustan Unilever sales. When Hindustan Unilever sales in India, 90% value add probably remains here. Something goes out by way of imported material and brand royalty. When Apple sells iPhone in India, probably 90% goes out and 10% remains in India. Indians are consuming more, but the benefit of that consumption is probably falling more into global market than in local market, with examples like this.
Nilesh bhai, yesterday we saw for the first time a new way of trying to find closing prices in the equity market here in India. And I must say that as people that are looking at it minute to minute, there was quite a bit of confusion at the end to try and understand what was happening. As a key functionary in the market, based on what you saw yesterday and the intention behind it, which is to reduce that chances of manipulation and make it a more transparent way of identifying what the final price would be, what is the kind of path that you expected to follow? Do you expect more teething issues? Because ultimately it is agreed on, Nilesh bhai, that more participation from the institutional side in that closing auction process will result in a better price mechanism.
So undoubtedly, when you roll out something new, there will be teething trouble. In a very simple way, and it's a far more simplification of a very complex subject. All the sellers yesterday in closing auction would have put their sell order at closing market price plus 3% because that's the band allowed. All the buyers would have put their buying price bidding at closing market price. Now passive funds who have to rebalance because of buying or selling will have to come and hit the market. If they are buyers, sellers are 3% higher. In three stocks, we witnessed Titan, Bajaj Auto and Grasim prices in closing auction shooting higher by about 2% plus compared to closing prices. On the other end, where passive funds were sellers, they would have gone and hit at near closing prices, no premium. These three stocks probably impacted Nifty calculation and pulled the index up 200 points unexpectedly. Today morning, we saw Sensex opening higher, Nifty opening lower and getting evened out. My feeling is that closing auction did witness some amount of initial teething trouble. Investors, passive funds, operators, speculators, jobbers, they were all sharpening and learning their learnings. I'm sure over a period of time, things will settle out. Closing auction is a mechanism used all over the world. Our volume weighted average price was working well, but we should always be open for innovation and improvement. Closing auction will get settled out over a week or next 10 days.
Just a couple of follow-ups, and you've explained this process very well, and I kind of knew that you would. But let me ask you a couple of things. One, from the perspective of the mutual fund industry, right? Would it be, and I'm looking at the net asset value of the arbitrage funds, and clearly that's where the problem lies. There is increased volatility in that space because of what we saw yesterday. So the question is there likely to be a change in the way that these funds will have to operate, or do you think that even this will go to normal in 10 days time? That's the first thing. And two, Nilesh bhai, the other thing is, you mentioned that this is done in other markets, in the US, in Europe, etc., right? So you have a significant depth in those markets, you have a significant passive assets under management in those markets, and that allows for that price discovery. Is that a challenge here?
So let me take the second question first. Undoubtedly, those markets have far larger and meaningful passive players compared to Indian market, but passive is becoming an important part of our market, and it's better to dig a well before fire starts rather than dig a well when fire starts. I have no doubt in my mind that one day passive will become as important in Indian market as it is today in American market, and SEBI's step of launching closing auction is a step in the right direction. Now, coming to arbitrage fund, undoubtedly we will keep our investors informed. As I mentioned yesterday, there were 3 stocks, Titan, Bajaj Auto, Grasim, which were kind of outlier to their closing prices at 315. It did impact NAV across not only arbitrage fund but also active and passive fund. We will see how this thing shape up. If there is a need to modify certain things, we'll reach out to SEBI. And I'm sure SEBI will always take a view what is appropriate in investors' interest. At this point of time, my gut suggests that teething troubles of closing auction will be behind in next 7 to 10 days. The depth of the market in India is reasonably good. Undoubtedly, there will be a tug of war between passive versus active. When I'm running an active fund, will be telling my dealer that whatever we want to sell, please put it at 3% higher than closing prices. If they get it, you realize 3% more. Whatever you want to buy, please put it at the lowest possible. If you get your luck, so there will be tug of war, but eventually markets will settle down.
Yeah, that's a good point. That's a good point, Nilesh. I think that exactly has panned out yesterday as you described it. Once again, wish you a very, very happy birthday. And
thank you so much.
It's incredible to talk to you because you've seen so many of these technological changes or process changes, and you know that it does settle eventually. So thanks so much for explaining that to us and spending a little time with us on your birthday.
Thank you.
Okay, well, there you have it. The entire cash scenario has been explained to you far better than any one of us could have. But we'll talk about it on the other side of this break. It promises to be an interesting end to the expiry session today. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Welcome back. You're watching India Market Close here at NDTV Profit. Now, before I go on to our next set of guests, let's take a quick look as to how LIC has done. Because, overall, with the green shoe option, now the subscription stands at 0.89 times. And if this gets subscribed fully, the OFS that I'm talking about, fully subscribed today, along with the green shoe option, the expectation is that this could bring in an inflow of 32,000 crore by the institutional desk. That's a huge number to take a look at, when LIC comes into picture. But the stock is not seeing any respite because it's still down by about 8%. We'll try to discuss this with Sudeep as well, but let me welcome in both of them. Sachin Janardhan, Sarvade and Sudeep Bandopadhyay joins us now. Welcome to both of you gentlemen and a very good afternoon to you. Sudeep, I'll come to you on the LIC part, but Sachin, first to you. We've been talking about this throughout the day with our technical guest. What happened yesterday in the last minutes with regards to the cash settlement? What are you expecting today? Do you think things should ease out from today? At least traders have now gotten the hang of what happened yesterday. What is it that you'll be watching out for? And of course, your Nifty and bank levels that you'll be watching out for.
So thank you for calling me here. First of all, yesterday's jhatka basically was very huge because of the spot and future prices.
Yeah.
It was very unexpected basically, and because of that, we say in Hindi, "Doodh ka jala chaj bhi phuk phuk ke peeta hai." So yes, of course, we will be very cautious in today's and more to go. I think it will take 1 or 2 weeks to settle down because this is a very complex process and not that easy to be settled in a 1 or 2 day session basically. Coming to the point of the basically on the Nifty side, Nifty yesterday what we saw is it was hovering around the 200-day SMA and EMA levels. It was in a supply zone, so normally we don't buy in supply zone. That was the point we have already communicated this to our clients basically to book the profits. But yesterday's that last closing prices actually went to the 200-day SMA. So technically it has taken the resistance near the 200-day SMA. Today's gap down was very much likely. And yesterday one more thing was happened is PCR ratio. The PCR ratio went up till 1.8, 1.85 levels, which was way overbought normally. And today, right now, what we are seeing, the PCR ratio has cooled down and it is currently below 1 levels, around 0.8 levels right now. So overall, what we see, the cool down has happened, but still because of the yesterday's price action. So we have seen there was a gap, and today we have seen that gap filling sessions as well in Nifty. So it will continue basically, and because today's open hand high levels are also same. So in today's session, the closing will be around 450 and 500 levels only, according to the option data as well. And the downside level which I am watching is 24,373, which is 200-day EMA. If we are closing below that levels, mind that we can again slip towards 24,000 and 23,000 levels on the downside, which will be very like a bad thing for the bulls basically.
Sure.
And one more thing, it can have like right now what we are seeing the pattern of known as a bearish engulfing as well on a daily chart.
Yeah.
a resistance of around 200-day SMA.
Sure.
So this is we have to keep a very cautious approach.
Got it, Sachin. All right. By the way, it's 3:15, and this is when cash trades for the F&O stocks, that is the CAS stocks, halts, and so therefore the final tick for the benchmark Nifty 50 is currently at 24,463. It's about 110 odd points lower than what it was at the same time yesterday, and subsequent to that you saw that 200-point up move after the final rates were in. We were talking about LIC, and in fact the fact is that it's a bit of it's a positive update actually. The fact that the non-retail portion has gotten fully subscribed, and there's a significant possibility, of course, that the green shoe option is also utilized. But let's talk about the bull versus bear analysis for LIC. Sharad joining in to talk about that. Sharad?
Well, yes, this is the stock, of the day, you could largely say, especially with the amount of momentum which is there on the lower side coming in for LIC. A big overhang is, of course, on the OFS, but look at this amount, and of course, this has changed. Now it's 1.7 times, largely 0.9 times if you talk about the exercising the green shoe option as well. Bear case, of course, there's a 6.5% stake, and remember, this has been at a discounted rate and more sell-off is happening. But let's look at the other case, especially the bonus issue. The company did try to get in some more retail spirit in, but seems like it hasn't worked out. Why? I'll tell you that the IPO adjusted from the bonus price is still below those levels. Valuations are near the lowest levels if you're tracking price to book or even EV EBITDA ratio, the embedded ratio to be honest, and the value of new business margins is lower compared to the private peers. That's around 20-21 for them, and the private peers are having between 26 to 27. If you look at the margin, they are planning a long-term trigger of further increase in this segment in the NOR of our product mix. This is a high margin business segment if you are uninitiated on the insurance space. And the bear case is the competition coming in from private insurers and also fintechs. Also, let's point out the other bull and bear case, and this is of course the analyst stake. 96% of totally 25 analysts have a buy rating or at least a hold rating, and only one analyst is there from Ambit Capital who has given a sell rating, but of course the target price is on the higher side. So the fundamental analyst community is expecting 40 to 50% return potential in the next 12 months. But will there be an overhang from the private insurers? That's what's there to look at.
All right, Sudeep, sorry to keep you waiting. Sharad, thanks so much for getting us those details and very well explained. But Sudeep, coming to you on LIC, the stock has obviously taken a bit of a tumble on account of the pricing of the issue. And it seems to be getting a significant amount of non-retail interest, understandably so because of the pricing. Would you say that it's a good opportunity for retail investors to get in tomorrow purely on the back of that valuation?
We have been positive on LIC, so I'm in that camp of the most of the analysts, and I'm also bullish there. I think the opportunity for LIC to go up is significant. There is very little scope for LIC to move down from current level. So if I'm an investor and looking at insurance from long-term perspective, I think LIC is a fantastic buy at current levels. This opportunity, because of the OFS, the correction which has happened, is an excellent window for acquiring the stock.
What about the charts? I'm curious, Sachin, because it's seen a dip of 8% and it's not recovered since, right? Do you think it's found its bottom and now is the time to kind of go ahead and buy? Because fundamentally, it's a buy for sure.
Yes, I was seeing that data, and actually on a chart it is showing totally opposite, because on a daily, weekly, and monthly charts it is showing like a downtrend basically. So it is actually a classic case wherein all the fundamental analysts are bullish and technically it is showing sell basically or a downtrend. So I think one should book profits if they are getting and should exit the stock.
Right, so that's the view coming on LIC. One more, on that list, KEI Industries is the other one which has done very well for itself today on the back of strong numbers, execution, underway, almost up at the high 10% at the high point of the day. What do you make of the charts, Sachin, considering that a 9% up move has already come in? Because cables and wires as a segment has seen good relative strength in the last couple of days, right? If you take a look at, the overall versus the other sectors. Do you think an entry right now in KEI makes sense, or any other cable and wire play where you think we can go ahead and enter?
RR Cable, KEI, I think these are all good counters, have a good uptrend in all the time frame, daily, weekly, and monthly, basically. So there is no problem in entering right now as well. But yes, one should enter not fully. Like if someone wants to buy 100 shares, he should buy 50 shares only.
Sudeep, we had the management on earlier today, and they were talking about the capacity expansion that is currently underway, and it will get done in phases and will culminate in March of 2027, where that facility will be completely ready. And so therefore this new facility will be completely operational heading into the new financial year, and they're expecting that the margins that they've peaked at right now at 12%, and they never hit this mark again, they could well replicate it. So is this something that you find attractive on the fundamentals as well?
I do, in fact, Alex. What I interesting as part of the management commentary was the fact that they're very confident about the margin, because they were always earlier guiding between 10 and a half, 10 to 11 rather, and now they're guiding between 11 and 12. So very clearly they're positive on the margin trajectory, and that's interesting from a company point of view. Otherwise, the business is doing very well, and the expansion should help them going forward as well. The entire wire and cable industry has performed well and does look good at this stage. But if I have to, pick up one of the companies here, probably I will go and buy Havells. I think it has got other levers of growth as well.
Okay, all right. So that's the view coming in on cables and wire segment, but competition is getting intense in this segment. So that's something that we'll be watching out for as to which of these players actually emerges as the winner. But let's go across to Parth now, who has a list of buzzing stocks on the back of volumes or news flow. Parth, what is it that you're picking up in your list? And I'm guessing that this is not the F&O list that we're looking at.
Yeah, absolutely. These are some of the names that are on the small and mid-cap side. So I've got three very interesting names. The first one is Vedant Fashions, which has seen its biggest ever intraday gain since listing back in February 2022. The stock has also touched the highest level since February 2026. Volumes today were 15 times the 20-day average and the highest ever the stock has ever seen in its history. The second one is Keystone Realtors. The stock has snapped its 5-day losing streak, has touched the highest level in the last 20 sessions, and volumes today, those were 17 times the 20-day average as well. And lastly, BASF, which has also touched its highest level since November 2025, also saw its biggest ever intraday gain since May 2025, and volumes today were 12 times the 20-day average as well. So these are the three names that have done really well on the volume side and are also not on the F&O list, so they are still trading till 3:30 p.m.
Got it. All right. Yeah, absolutely. Well put. Thanks so much, Parth, for that. By the way, so we're currently witnessing in the market the ongoing closing session, which is the closing auction session, CAS as it is being called. Remember that at 3:15, trading in F&O stocks halts in the cash market. The volume weighted average price is used as a reference price, and the auction process starts at 3:20. Goes on for 5 minutes. In fact, let's talk about this with Kamlesh Shroff, who is the National President, Association of National Exchanges Members of India, and me. Kamlesh, thanks so much for taking the time. And it's important to be talking about this, particularly in light of what took place yesterday. And hopefully we have a more sensible end to trade today. Can you describe for our viewers, those that missed it yesterday and are probably wondering what is taking place, what are we seeing right now in the market?
So currently what we are seeing is the collection of order collections, and the modification period will start in a minute from now. And by about 3:28, give or take a little here and there, the matching happens, and we will get a final closing price for the sale. At that point, there will be no fresh order modification or cancellation permitted in that phase. And once the official closing, which is 3:30, after that, you can either put in or close your trades at market. That's how it is.
Kamlesh, hi. Mahima also joining in. You know, I'm a part of a lot of groups where there are a lot of traders that have been discussing different strategies that they could adopt to kind of figure out as to what, the right strategy should be. What is your, one advice that you would like to give them, and that, to tell them that this is the right strategy to kind of look at how CAS works?
So basically, I think what you can look at is if you have stocks with you, then, if you're doing a prop or if you have stocks with you, then probably you can try and put those on the sell side, maybe 2% higher. And probably if you are, okay to buy something which you missed in the running market, you could probably put it to buy a couple of percentage lower. And that could be a strategy. Because you have a +3, -3 that you can actually fill in the trades at. And of course, keep your eyes open for any kind of abnormal movement, and you can probably try and see there. But this could be something which is, you got 150 stocks in which you can put these things, and then yes, the futures are going to be on until another 10 minutes more post the post closing. So then you have the time to even hedge it if you need to. If you bought the cash market.
Kamlesh, in essence, that is also where the problem lies, because and we were speaking to Nilesh Shah of Kotak KMC just a short while back, and what he was saying is that if he was a fund manager, he would be telling his dealers to do what you've just suggested, which is to say, try to sell at 3% higher, try to buy at 3% lower, and if it goes through, it's good for you. But how does this prevent that volatility at the end of trade? Try to buy at 3% lower, and if it goes through, it's good for you. But how does this prevent that volatility at the end of trade, or aid the price mechanism that we're trying to create?
So I think time is something which we will have to give. That's one part. The other part is educating. That is the awareness, how this session works. And there is no better teacher than an experience. So actually, while we've been used to this VWAP since almost a decade now. So all of us understand the VWAP system, how it works. But this is something, as it's a new thing, will definitely take a little more time in terms of adopting to this new mechanism. So having said that, what happened yesterday is there was participation. So I think the participation, if you talk about it, will build slowly and steadily over time. Now, we started when there was no expiry. That's good. We are today on a smaller expiry. We'll probably see, going forward, a large expiry, the monthly expiry. We'll probably see, going forward, a large expiry, the monthly expiry, as we say it. And that will be the time when I think the first phase of maturity from the primary school to the secondary school moves on, So that's the basic rationale.
Well described. Just a process question or technical question, Kamlesh. You've described what happens between 20 and 25. You've described what happens after that, after 25, right? Till 28 or thereabouts.
Yeah.
30 is when you get the index reading that essentially should tell you where the market is closed, right?
Correct. Anytime now you will get it. It's 28. So on or before 30, it comes in. So it's 159 down, as you see, 24,614 or 5. I think it will just adjust. So any moment now you will get your...
And so, Kamlesh, just for the sake of clarification, so then at that particular price is when now derivative investors or traders can go ahead and trade in that band of 3 and ±%, correct?
Yes, so +3, -3 in the cash market.
Cash market, correct. Okay.
Cash market.
Cash market.
Because
not
your closing prices is of the underlying derivative markets stocks.
Okay. Okay,
so
understood.
you will get all your Reliance and all of those Infosys and all of those. So yes, yesterday there were a few like CG Power and Grasim. We'll see how it happens today. But if there is any kind of irrational exuberance on any side, but if not, then I think I think it's a matter of time.
Yeah, I think it's already adjusted.
It's already adjusted.
It's adjusted, Kamlesh, what you were pointing out. And in fact, we should pull up the Nifty 50 just to make that point. 24,615, down 0.6%. It has adjusted and is settled at that price. The Sensex close, by the way, is 0.4% lower, 314, 315 odd points. This is more or less what you would see on any given day. But that Nifty 50 close, Kamlesh, what you were describing right now is essentially where it is settled. It was below this price, if I remember correctly, at 315, at around 24,500 and something. I can't remember exactly. So that settlement has taken place.
Correct. And this will gradually close, even, the difference will close lower and lower as more and more participants walk in. So whatever data that came until yesterday there was about a 1,200 crores volume on the NSE, and maybe about 10 crores, and some few scripts are not even traded at the BSE. So all said and done, that's the start. So from here, I think better volume, better participation will give you a price discovery that we are actually looking for from this system.
Okay. All right.
Globally accepted.
It is. And ultimately, the deepening of the market will also take place. The increased participation by institutions should help that as well. Shroff, thanks so much. Kamlesh, thanks so much for taking the time. Thanks so much for taking the time.
Thank you so much.
My pleasure. All right, let's take a look at the Nifty Bank as well, because that has settled as well, and it's ending more or less with cuts of about 0.6%, 57,907. We've still got Sachin with us. Sachin, you're still able to have a strategy in the F&O or the derivative space. Are you suggesting something right now?
So today what we would like to see is will we adjust according to the spot prices, as yesterday the option prices didn't went or settled at the spot market basically. So it is very challenging right now to say anything, but yeah, according to the option data, we are right now we should close between 450 and 500, but we actually closed around 614 on a spot levels. Seeing the future data, basically currently we are trading around 24,556, which is around a discount of 57 points right now from the spot. So yeah, this is the second day what we are looking out, wherein the difference between spot and future, actually the future is trading in a discount basically.
It'll be an interesting watch out, because Sharad is joining by to give us more perspective. Sharad, I think, while we're seeing an uptick in Nifty, we're also seeing we also saw a lot of volumes in the F&O space as well, picking up in the last minute of trade. What is it that you're picking up?
Exactly, you're right. Let's just pull and show you what the movement is there. Of course, for Sensex, not much of it, because yesterday also the turnovers were on the lower side, and Mahima, you rightly pointed out that the volumes are actually picking up, and from yesterday it seems like more participation is there, especially remember today is expiry also. So yes, that spike is something which you can see, but let's see how the spot and the future markets are playing out for both. Nifty over here, we see that's almost, you could say, down almost 0.64%, and it's at a discount. That's the number you should be watching out for. This is the spot market. The rates are getting in, but this is what we are getting. But let's look at how the futures are planning out, how they are looking, and that's the discount. That's much more bigger on that side. That's around 177 points. Let's have a look also for the Nifty Bank, also the spot and the future, what's happening here. And this is largely, it's down almost 0.6% as well. So yes, there is a variance which is happening, and that variance with time will of course hopefully come down as well, as we see the demand supply meeting. Also, let's look at the open interest, how things have moved here, and the action has been there for both call and put. That's 24,600 levels. This is where the actions are happening, and we'll try to understand how the settlement has happened, and of course ask a lot of folks in the industry also about this impact. And today is actually a major impact coming in, but of course participation is more. Open interest gainers and open interest losers, let's have a look in the F&O space where the action is there, and remember that spike is also there coming across, especially in stocks such as IRIDA. That is where we are seeing a short build-up happening on the lower side. UPL also, we are seeing most of these categories are seeing a sell-off also. You must have seen some sell-off in the downward tick in the closing session. Open interest losers, let's have a look. And largely we see GAIL, that's where the short covering has happened, and we will try to get that intraday chart as well. And KEI Industries also, that's where short covering is happening. So these are the stocks also which are moving around, and as the rates are settling right now, we are seeing some kind of a spikes actually happening. But yes, for the second straight day, the volumes are on the higher side, and maybe it's not that much variation as compared to yesterday.
Sachin, I'll quickly come to you on what Sharad was mentioning, because somebody who had gone ahead and, shorted Nifty is probably seeing the pain right now. But somebody who's had a call option is probably happy. But it shouldn't be the case, right? Because this was ideally meant to normalize price, which is not happening. We're seeing volatility. What do you make of this? And especially what Sharad was talking about in terms of volumes that have picked up in the F&O space.
Yes. Yesterday also we saw the call prices weren't adjusted basically. Today also same thing we are seeing, only the spot prices have been adjusted, but call or put prices have not been adjusted. I think we have to see the future closings basically, and it will normally now we'll go to the future closing as well. In future we are not seeing any kind of uptake both in Nifty or Bank Nifty futures. So at the last moment as well, or in the last 10 minutes. I think there is no difference between that in a futures, but in a spot because of the confusion and because of that mechanism 3% plus and minus. So I think that the short-term traders are making use of these opportunities. Like Nilesh Shah also said, +3 on a sell side and -3 on the buying side. So because of this price mismatch or volume mismatch, this is happening.
I mean, definitely, it's something that you can consider, but it couldn't be, I mean, it cannot be a daily strategy, right? So, Sachin, seeing yesterday's trade, there is, of course, some relief as compared to what happened yesterday. Is that correct? One. And secondly, if you've learned, from yesterday, what is it differently that you're doing today, probably, that you can tell our viewers?
So yes, what we have seen today, it's more clarity, but still the discount is already happening basically. So still we haven't come at the outcome, what exactly will be the strategy, because still the market participants are learning right now. So even we are learning, we are into a learning phase, and we will be somewhat cautious basically.
Sharad, just the point that you were making, right, on the fact that the discount in the futures versus the spot, that has, or the gap between futures and spot is actually narrowed.
So there's a better price discovery has started to happen. This is just the second day, Alex. But nevertheless, we'll take it. A little bit of stability is coming in. But over the days, I think this discount or premium levels will be converging as the closing prices comes in.
Yeah, and that's also true for the Bank Nifty. Pull that up as well.
If you show the Nifty Bank also, you'll understand.
Yeah, pull that up as well.
Not much as compared to the size. Actually, it's much better, to be honest. Just 173 points.
173 points. Okay. So, Sharad, thanks so much for that. And I think, and this is something that Nilesh Shah pointed to as well, it will likely take about a week for strategies to be sharpened and for there to be clarity on how this works. In the interim, of course, everybody's trying to figure out how to operate and how to comment on this as well. But Sachin, closing thoughts on how to start trade tomorrow, and also from the retail perspective, the advice this morning was to perhaps square off your positions before 3:15 itself, at least till you have absolute clarity of how to operate during the cash.
So yes, what we have also seen, actually the cutoff price has also shifted from 3:15 to 3:05 or 3 p.m. basically. So yeah, that 15 minutes lag is coming basically. And at the same time, if we are seeing a Nifty future chart, so we are seeing a bearish engulfing at a top. So bearish engulfing at the top is suggesting we might get a gap down the next day. If we are seeing the crude oil price as well, so crude oil has now bounced from the 200-day SMA, and Nifty has got a resistance from 200-day SMA. So this is like inverse trading is happening if we are seeing in crude oil and at the same time Nifty. So I think crude oil will go up from this and Nifty will come down.
All right, Sachin, thanks so much for taking the time. A pleasure speaking with you. So we've closed out with cuts of about 0.6% for the benchmark Nifty 50. 24,615 is the final value that you should pay attention to. For the Sensex, we're ending with cuts of about 0.4%. 78,324 is where we close out, and just about 0.33% lower at this point. The Nifty Bank, of course, losing about 0.6% as well. And tomorrow, of course, an important day from the perspective of monetary policy. The markets are going to be clued in on what the Reserve Bank of India's Monetary Policy Committee does. There's widely expected to be a pause in the rate hike cycle. At this moment, there's expected to be no change in the repo rate. With that, from Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned, lots more coming up over the course of the day. This is NDTV Profit.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by Coin Switch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $64,000 level mark on short squeeze rally. American Bitcoin Corporation grows its reserves to over 8,000 Bitcoins in the second quarter of calendar year 26. Senate Banking Committee passes the Clarity Act, advancing it towards a full Senate vote. And lastly, BlackRock expands tokenized cash via Treasury Fund. Well, today let's understand one of the most important habits that separates disciplined traders from the emotional ones: stop loss and take profit. That's the discipline which we are talking about. Now, whenever you enter a trade, don't just decide what to buy, decide when to exit. A stop loss is the maximum loss you are willing to take on a trade. Now, if the price falls to that level, you exit. This helps protect your capital and even prevent a bad trade from turning into a much bigger loss. Now, for example, if you buy Solana for almost 10,000 rupees, you can set a stop loss at 9,000 rupees. Now, if the market crashes, the system sells your Solana at 9,000 rupees, saving you from a massive drop. Now, on the other hand, a take profit level is the price at which you choose to book your gains. The markets can be unpredictable, and waiting for just a little more often leads to giving back the profits. A predefined exit helps you lock in gains systematically. Now, for example, if you buy Solana at 10,000 rupees and set take profit at 13,000 rupees levels, the trade closes with your profit of 3,000 rupees. The moment that hits, even if the price drops right after. Now, the biggest challenge isn't setting these levels, it is sticking to them. Fear often makes traders hold on to losing positions, hoping they'll recover. Greed makes them hold on to winning positions for too long, expecting prices to keep rising. Now, both can hurt in the long-term performance of the portfolio. Now, looking at the professional traders, remember that success isn't about winning every trade. It's about managing the risk consistently. A small planned loss is always better than an uncontrolled one, and a booked profit is always better than a missed opportunity. Now, whether you're trading stocks, derivatives, or crypto, having a clear stop loss and take profit strategy is important, and following it with discipline can make all the difference over time. Trading isn't about predicting every market move, it's about having a plan and executing it consistently. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook?
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. So after a volatile session, the Lal Street has ended near the day's low. The Nifty has closed around the 24,600 mark while the Sensex has lost over 200 points as late session selling weighed on the sentiment. If we look at the market breadth, so that has remained weak, viewers, as most of the sectoral indices have closed in the red. Metals and media showed relative resilience there, while realty and oil and gas stocks have ended among the biggest laggards. Let's see and also look at the sugar stocks now, which are seeing some strong buying interest as both domestic and global prices continue to climb. Domestic sugar prices have hit fresh record highs after lower monthly release quotas and even declining mill inventories tighten supplies. So global white sugar futures have also moved to a 2-week high, adding to the positive sentiment. Analysts now believe that India could really turn to sugar imports, while a delayed 2026-27 crushing season could keep the supply-demand balance tight. So those factors have put the entire sugar pack firmly in the market spotlight. Next counter to look at is Dabur, which is in focus after the food safety regulator has directed the company to stop selling several products carrying 100% claims, saying that such labeling is misleading and even violates the existing norms. So the products include honey, cow ghee, coconut water, edible oils and even apple cider vinegar. So Dabur has been asked to withdraw the products and even submit a compliance report. While the immediate financial impact may be limited, but the move could trigger relabeling exercises and even signal tighter scrutiny of advertising and packaging claims across the FMCG sector. Next counter to look at is Ather Energy, which is charging ahead after delivering a strong June quarter. Revenue nearly doubled on the back of robust volume growth, while EBITDA and net losses have narrowed significantly. Retail sales have doubled year on year. Pre-orders have surged to around 1.5 lakh units and dealer inventories have fallen to just 3 days, pointing to healthy demand. So the company also said that its Auric facility is nearing commissioning, with trial production expected around the festive season, and also a full ramp-up is planned through early 2027. Next counter that was buzzing away in trade was K Industries, which has delivered a strong June quarter, and this has been led by robust domestic demand. So revenue grew 23%, EBITDA rose more than 50%, and net profit has climbed 40%, while operating margins have improved to 12.4%. And as you can see, the stock was nearly up 10%. So the domestic wires and cables business they remained healthy. And the key business, the growth driver was offsetting a decline in the export revenue. Management, however, remains confident of a sharp recovery in exports, and this has been backed by a strong order book and even healthy execution pipeline. Next counter to look at is Mopin Laboratories, which is buzzing in trade after reporting a standout June quarter. It's up 20%, as you can see on your screens right now. So the company's net profit has jumped more than fivefold, while revenue grew 34% year-on-year. Operating performance was even stronger, with EBITDA more than tripling and margins expanding sharply to 14.5%. The strong earnings have triggered aggressive buying, sending the stock to its upper circuit as investors have cheered the sharp improvement in profitability and even operational execution. Next counter to look at is Sambhav, which has delivered a record June quarter. Then this has been led by strong value-added product sales. Revenue and EBITDA grew 31% year-on-year, while net profit has surged over 67%. Better realizations and improved product mix continue to support the performance, with operating margins really holding steady, and the results highlight the company's focus on the profitable growth. Next counter that was buzzing away in trade was Praj Industries, which is in focus after its subsidiary Praj Jenks it has secured a strategic agreement to supply precision fabrication components and even modules for hyperscale data centers. Now the contract carries a minimum committed value of around 500 crores, with execution scheduled over the next 2.5 years. So the win really strengthens Praj's presence in the fast-growing data center infrastructure space and also improves longer-term revenue visibility. Next counter to look at is Kansai Nerolac Paints, which is in focus after approving a 601 crore capex plan to expand capacity across the multiple plants, and investment will significantly increase the paint, powder, coating and even industrial resin capacities, strengthening the company's manufacturing footprint. The entire expansion will be funded through internal accruals and is also targeted for a completion by FY29, supporting its long-term growth strategy. Next counter to look at is KC International, which is in focus after securing fresh orders worth 1,063 crores across its key businesses, and the company's year-to-date order intake has now crossed 6,300 crores, and it has been led by a large residential project, which is a 400 kV transmission line order in Africa, and also a 50 megawatt plus wind EPC project in Western India. So the diversified order wins further strengthen KC's execution pipeline and even revenue visibility. Here's next counter to look at is MTAR Technologies, which remain locked in its fourth consecutive upper circuit after a strong June quarter performance. Investor sentiment has been driven by robust execution, a record order book and even continued optimism around its key US client. Analysts believe that the strong Q1 numbers and improving business visibility have kept the buying interest elevated in the stock. And next counter to look at is United Food Brands, which has delivered a strong June quarter, returning to profit after reporting a loss year ago. Revenue has climbed more than 43%, while EBITDA margins have improved on the back of robust dine-in demand across business segments. And the company also reiterated its expansion plans, targeting more than 300 restaurants by FY27 and 400 to 425 outlets by FY30, also underpinning its long-term growth strategy. Let's look at some national news now, viewers. The Madras High Court has ordered the immediate release of DMK leader Udayanidhi Stalin hours after his arrest over alleged misogynistic remarks made at a public meeting in Thanjavur, and the dramatic turn of events has triggered a fresh political flashpoint in Tamil Nadu. The DMK has accused the ruling TVK government of using the police to target the opposition, calling the arrest an act of political revenge. And police, however, maintained that Udayanidhi was taken only for questioning and that there was no plan to seek judicial remand. The case has now intensified the war of words between the state's two major political rivals. And an Air India flight from Phuket to Delhi ran into a brief spell of mid-air turbulence, leaving 12 people, including two crew members, with minor injuries. And the airline has said that the aircraft experienced a momentary change in altitude during cruise but landed safely in Delhi. Those requiring medical assessment were taken for precautionary checks, while Air India confirmed that there were no serious injuries reported. And talking about the flood situation in Assam, which is gradually improving, but the crisis is far from over. The death toll has now risen to 87 after 2 more fatalities, while nearly 1.3 lakh people continue to be affected across the state. And although flood waters have receded from most inundated areas, authorities remain on alert as the IMD has forecast extremely heavy rainfall over Arunachal Pradesh and Meghalaya. A yellow alert has also been issued for parts of Nagaland, raising concerns of fresh flooding in several border districts of Assam. Let's look at some global news now. Fresh uncertainty surrounds US-Iran diplomacy as President Trump said that talks are underway and even described them as Tehran's last chance to strike a deal. Iran, however, has denied any direct negotiations with Washington, saying that its discussions are with Oman on a temporary shipping route through the Strait of Hormuz. Meanwhile, tensions remain elevated after tanker incident off Oman and continued violence in Gaza. And Iran has dismissed reports of any imminent talks with the United States, saying that there are no plans to host or send negotiating delegations. Tehran has said that only ongoing discussions are with Oman on the management of the Strait of Hormuz. Meanwhile, shipping through the critical waterway remains disrupted, with traffic continuing at subdued levels, adding to the tensions. And also a cargo vessel reported being hit by an unknown projectile near Oman's coast, keeping the global energy markets on edge. With that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Nifty snapped its 4-day winning streak, ending over 0.5% lower, but sharp closing auction surge lifted the index by 150 points. Bank Nifty jumped over 400 points and Sensex gained 100 points during the final cash session. Oil remains volatile as Tehran denies negotiations. Trump warns Iran talks are the last chance to end this war. Brent is up 3% after sell-off earlier in the day.